Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
You knuckleheads, happy Thursday to you both.
Hello.
Hola.
Hola.
Pink cheetah.
I think it's a jaguar.
Oh, okay, I would go with that. Pink jaguar.
Yes.
I got that.
Is it? I think cheetah had the dots though. I guess they do.
know.
Aren't jaguars like usually like black and white?
I don't know.
I don't know. I just liked it.
No, I like it too. I like it too.
I know they're faster. That's all I know. Faster than I am. That's for sure. How is everybody today? What did you do last night, Banana? Let me start with you.
What do you want?
I want to be nice. I want to be Thursday. I want to cruise into the weekend.
Yeah. Was not up to a whole heck of a lot last night. I'm sorry. Not very particularly.
It's okay. Well, I was out until 10:30 at night.
Whoa, that's way past your
late.
bedtime.
Why? What happened?
Hockey game starts at like 9 o'clock at night. I mean,
See, the only places you are is either the emergency vet or
emergency vet, emergency room,
emergency vet, emergency room,
or
hockey.
or the ice. Yeah.
Wow. Was it just
2-0
practice or they had a game? Oh, they had a game.
Yeah. 2-0. First home game. I mean, so 2-0 victory. Francis came out from the chat room.
Wow.
Came
You didn't
down.
tell me there was a home game.
There's another one on Saturday. You can come Saturday at 6:40. I know you're not doing anything on a Saturday at 6:40. You want to come out, watch your old New Trier team play the Titans.
But it was so late and it was a home game. That's crazy. So the team that had to travel got home even later.
Yeah.
Wow.
The chat says, it's 10 p.m. Do you know where your boomer is? That's Mikos. Thank you.
That's pretty good.
That's good.
That's
pretty good.
funny.
That's
pretty
good. That is good. We
Very
gotta keep we gotta get you like a life alert or something.
I could use one.
You get too tired to drive home, you buzz me.
Now you get the Life 360. Like that's what all my friends use. My friends track their kids 24/7, and that's all the apps. Thank God that did not exist when I was around.
Beth puts air tags in the kids'
in
shoes.
the kids' shoes?
Yeah.
Everywhere.
Right, Beth?
Sure do.
But there's a setting, Beth, that you got to take care of because my daughter did that and put one in her car seat, and then we took the car seat, and I kept getting alerts on my phone that the person who owns the AirTag can follow the AirTag.
Oh yeah.
Sure.
Everywhere I went someplace.
It's an anti-stalking harassment notification that they.
You got to turn that off if you're putting it in there to.
Sure. Yes.
To try to follow it. If you don't,
Copy that.
Yeah.
Yeah.
I thought it was really weird. I was like, who's? I thought I had somebody's iPod, earpods or whatever.
You know what? I love them for my luggage, and United will integrate it into its app or whatever. But it'll alleviate.
So United will alert you and say, you know what, your bag is lost.
Yeah.
And I'm like, the heck it is. The heck it is. Look at this. But it alleviates a lot of angry moments, I think.
Oh, I think so.
There you go.
What about you, son? What's a young, upwardly mobile male in the city do on a Wednesday night?
No, absolutely
Nice.
nothing. Yeah.
Very nice. You get ready for football today? Who plays today?
I haven't even looked yet.
I don't even know.
You're not a degenerate. I'm very proud of you.
I mean,
you're not a sports degenerate if you don't know who's playing on Thursday.
No, I'm a sports degenerate.
I know. You claim to be.
Steelers Bengals. Oh, sorry.
I was like, what is happening?
That was me.
Too many tabs open over there, Nikki.
It was ESPN. That was oops.
You're
that was
allowed.
An oopsie.
You're allowed.
Yeah, Steelers Bengals. Ugh.
Yeah. Who's gonna watch that?
I mean, Aaron Rodgers probably gonna whoop that.
Oh, I forgot about him.
Yeah, he's back. He's good. He looks good.
Yeah?
Sad.
Has anyone seen his wife?
Aaron Rodgers.
Does he have a new one?
Yeah, he has a wife.
He's up now. Yeah.
I keep doing this.
Oh, you don't believe it?
No one's seen her.
Oh.
So, it's not like he's just, but literally no one has ever seen this woman or, knows her name. So I'm being sincere. I just want to know.
Heidner doesn't want anybody to steal him. Right?
No, I mean they probably met on one of the like ayahuasca or some weird retreat that he did. So she's probably out of the limelight.
Sure, maybe, but that doesn't strike you as odd, though?
I guess a little bit, yeah.
A little bit odd.
But he's gotten a little funky.
Sure.
So it's not a shock.
Sure.
Yeah, June of 2025. You're right. All we know is her first name.
What is it?
Brittany. Brittani. Brittani. Wife is Brittany.
She doesn't go here. She's from Canada. You wouldn't know.
For sure.
Just shenanigans all around. Are you watching hockey, like professional hockey at all, or?
Our Blackhawks with a bunch of goals last night.
That's exciting.
Yeah, I think they won by like 7-2 or something like that. Last I saw, yeah.
And the Bulls are back too.
Bulls are back.
This is like the juicy part of the year, playoff baseball, like all the sports.
This is it.
Yeah.
This is it. And you crash and burn.
Bears are a winning team.
Bears, yeah.
I mean, like, this is
going to the Super Bowl.
This is as good as it gets for us.
Who do we play next?
That's a good
Do
question.
you know?
Oh my God, we don't even know. Call ourselves heterosexual. Come on.
I'm behind.
Saints, the Saints.
There
Bears
you go.
versus the Saints.
At home, I think.
At home.
Yeah.
Yes.
So-
Saints are 1-5.
So, Nikki, are you going to any games this season?
You got to go soon, son. The weather's going to change.
Yeah, no, I already went to a game. I went to
Wow, are you getting old? You forgot what.
You gotta take that ginkgo biloba.
Only been 5 here. So was it the Cowboys?
I saw the Cowboys.
Thank you.
Yeah, the CeeDee Lamb hurt game.
Oh, okay.
I forgot to watch a lot of football. It's all blurring a little bit.
The only home game I think we've had.
Yes.
Yeah.
Yes. We won that game, which was great.
Yeah.
Which was a shock after, being 0-2 and looking like we
Sure.
were not going to win
Beat
a
the
game
Raiders,
forever.
Commanders. We beat the Cowboys.
Yes.
Wow.
Yes, those are 3.
Got
So
shellacked
that was
by the-
good.
By the Lions.
Yes.
That's about it. Who lost last week?
So wait, Tony, are you going to a game this season?
No.
Oh.
No, I will not. I will not.
What about Clink's condo and his and his palatial pad and his entertaining and
It's good. Yeah, it's a good point. It's a good point.
he's right there.
Yeah. And Clink and I have been friends for decades. So.
And he always has like parties going too. So
Yes.
you hang out with him and it's
it's
a thing.
You're
It's a
A-lister.
scene.
You're an A-lister.
Oh, it is a scene.
Yeah, you're definitely an A-lister if you hang out with Clinko together.
Yeah.
No, not my jam. Not my jam. I like to be warm. I like to be just in my
But you
home.
could have had that. Like if
Yes,
you
the weather's been great.
Yeah.
Yeah, I could have. You're right. I didn't get the nod. I was third. He had 2 tickets. I was third.
But you could take Vinny. Have you ever taken Vinny to a Bears game?
Oh my God. No, I have not taken Vinny to a Bears game.
Ooh.
I'm just surprised. I'm just asking.
No,
I mean, my dad loves me.
Oh, I
He's
took
taken
him
me
to-
to a
That's
Bears
true.
game. My dad's taken me to a Bears game.
I
So.
took him to a preseason game.
Oh.
Count?
All right.
Yeah.
Kinda.
He's not a football.
Not really.
He's not in
football.
football.
I don't know. Maybe it's just his friends that he hangs
Yeah.
out with. They're not really into like the group sports. Like he plays hockey.
Yeah.
One of his friends does play football, but then it's more about like skiing and golf.
Oh, well, you live on the North Shore.
That's very true. That's very true.
It's the individual sport. I got another friend who's at tennis.
Sure.
Yeah.
Yeah, a lot of golf and tennis. And
club.
skiing. I do Nordic. I do
Yeah.
the Nordic sports, yes.
Yeah. All right. You win. I can't fight. I don't know how to fight it. I don't know how to fight. I don't have the energy. You're right. You're right.
To each his own, man.
You're right. Nick played football, though. I had him. I was still young
Yeah.
then, so I could influence him. I'm tired of influencing this generation. I've been doing it for people for too many years now, so
Yeah.
it's hard. Yeah.
Yeah.
Are Vinny and his friends, are they going to trick or treat this year? Or like, because I don't know what the cutoff is for those kind of shenanigans.
They're too
or,
old for that.
But it's
they
free
got
candy.
I know, but they're middle high school. You got to have the party.
Yeah.
All the, you know.
Yeah, I mean, what is it, the 16th now? Yeah, it's October 16th. In years past, Vinny would have 3 or 4 costumes by now. 'Cause
Sure.
he did one in July.
Right.
Said he was going to be.
I mean, they're fully financed by you. Why not have
Right.
an
And then they would
assortment?
get the costume that they all were going to do together that never came to fruition, and then they got their own kind of costume. So it's usually like 3 costumes. He doesn't have any, so I think I'm with Nick here.
They're probably on the way. It's a little bit of a delay.
No, the tariffs got him. He's not. He's
Oh no!
not doing that. Not doing that. Yeah, no, I don't think he'll be. Trick or treating this year.
Yeah, they get some.
We got the candy bars. I got the candy bars.
Maybe
How
he'll get
much
some
did
baffles, you know.
Just under 100.
No, how much did you spend? Like, because cocoa prices have like doubled. So
Just over 100. They were just about a little over $1 a piece. I mean, I got them at like Jewel. I didn't go to Walmart or something
Okay.
like that. So
Or
they were on
Costco.
sale for like $21 for 18 of them or something
Okay.
like that. So
I was just curious, and they're full size.
yeah, full.
Okay, get it, girl.
Come on. This is American-made product. Well, not really. No, some of them are. Some of them aren't.
Yeah. I was just curious. I don't know. I wish I got trick-or-treaters. I don't get trick-or-treaters where I live. But the businesses in my neighborhood along a corridor of streets will have candy and stuff, and the kids will go up and down
Makes sense.
the business corridor there. But
I like to so I put up some inflatables and stuff. It looks good. But last year I had like a nice little like setup where there was like I put like a little tent up so that they could come into the tent.
oh yeah, that's right. You had like your garage open. You had like adult beverages for the
yeah. I think I'm passing that on to the younger parents in the neighborhood. So I'm just going to be the old man, sitting out there smoking a cigar kind of thing. Nick came one year.
Yeah.
Out there when he was in his depression era. Came out for Halloween. It was
well,
good.
Nikki.
I came out to see. I was hanging with my little brother. He was trick or treating. It was nothing. But there's no depression. This is.
You had to be to come out to see us on
God
Halloween.
forbid they ever come to the city to see me. I mean, that was lightning would strike on us twice if that ever happened.
Nikki, my question for you
Yes.
is: are you doing a couple's costume this year? I've always
I
wanted
want
to do a couple's costume.
Like
Yeah, the outlet,
where like one's the male, the other one's the female outlet. The light goes on.
No.
You're not doing a couple's costume? Why do you
Last
hate?
minute he
Why
will.
do you hate love?
Not doing it.
He loves it. He's a lover. He loves love.
I'm
You're
not
a lover
doing it.
boy?
No.
Yeah.
No plug-in socket costume.
I didn't say that one, but just like as a theme, like a
Sorry.
couple's costume.
Yeah.
All right.
Or they have that skeleton one where the little schmeckle,
Vinny has that.
where like,
You just reminded me. Vinny has that.
Yeah.
It's called Skelebaner.
I know.
there you go. You just said Vinny didn't have any costumes.
But he bought that. He bought that.
He has
on his
probably
own.
4 of those.
No, he has one of those. He bought that on his
He
own.
probably has
It
a
was
lot.
hilarious.
He probably has the flasher one.
No, all he has
There are
is
a lot of kids that do
all he
the
has is
flasher one.
Skelebaner.
I don't want to know what that is. I don't need to know what that is. I don't need to
Pretty
see what that is.
Yeah.
The description is pretty
Yeah.
self-explanatory. He does have that. I forgot that.
You got a
I'm
little
sorry.
thing that can.
It's like an air. You hold it in your hand.
Yeah,
It's like an air
and-
pump. But it,
Yeah.
No one asked for that.
if you're 15,
It's great. Yeah.
yeah, I mean, it's a perfect age.
Yeah.
Perfect age.
Yeah.
I just okay.
Thank you for reminding me.
Yeah.
Congratulations on your Skelebaner.
Skelebaner, you can look
Yeah.
it up. You'll
Yeah.
see it.
I don't want to look it up. I'm already fighting with HR over my supposed attendance to some training. I don't need to be looking up Skelebaner on my work laptop. So
Have you done your training yet?
Yeah. Sure. Is it one where we can do it like when you do like when you get a ticket and they go do it online and I would have one of my kids.
And you could just let it like play?
Yes. The kids,
Yes.
like,
No.
Yes.
no.
Yeah.
For sure. Yeah.
Shenanigans all around. Hey, we got a great show for you today. We're almost there. It is Friday Eve on Tasty Live, and we've got a wonderful, thrilling show for you on this Thursday. At the top of the 8 o'clock hour, fan favorite trades from the research team. The world's greatest financial think tank presents their trade ideas to the bats. That's coming up at 8 o'clock. Then at 8:40, we got Hear Me Out with Mr. Dylan Ratigan. What genre of questions will you be asking Dylan today? today.
Oh, we're hoping to
just
get him
you
on a
wait.
rant.
Okay, you are locked and loaded then.
Yes.
Then 9 o'clock, we have a market measures. Impatient bulls selling 0 DTE puts.
What do you think? Probably pretty good, right?
All-time.
The market has
highs,
done nothing but go up every single day.
just off of all-time.
That's
highs,
not true. We
right?
had some down day. We had like a 1% down move. What are you talking about?
Yeah, but over the last 2 years, it's been
Oh,
a
sure.
rocket ship.
Rocket ship to the moon.
Yes.
So yeah, that's part of our 0 DTE series. Don't want to miss that. That's at 9 o'clock. And then around 9:20, we have live from the trade desk, Quentin and G Money in the house. You know,
I want to incorporate the very famous Frankie Walsh too at some point. I want to try and get him.
Oh, okay.
I'll try to get
Yeah.
Frankie on air.
Yeah, we got Frankie here.
Sure.
So I feel like, we got to try and get him in.
Beth, do we have a box that he can stand on?
You're in trouble now, mister. You did it now.
Yes, Francis, they showed him. Sitting down, you can't tell. Do we have
Yeah.
a box that he can stand on?
I mean, in the old studio, I did have to sit on a pillow, because
You did?
yeah, because the chair was like low and to
Yeah.
make me like more even. But maybe I think it's around here somewhere. So, but that's our run of show for today. Hashtag tomorrow, hashtag Fan Friday. So we need your trade ideas for Fast Market.
Yes, we do.
So if you have a trade idea, we would love to hear from you. You can
Yes.
submit at the top of our page here.
tastylive.com/Fast Market.
Fast Market, yeah.
Yes.
Beautiful. Bueno. Hey, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading
In
story,
today's
breaking
headlines.
news,
Breaking news.
across the wire. Our leading story, top story, just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It's October the 16th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
What's going on with earnings?
Yesterday, TSM had earnings up about
This morning, TSM.
This morning, I'm sorry.
Yeah.
Well, it was early, like 2, 3
Yeah.
o'clock in the morning,
Yeah.
something like that. Anyway, up around $6 or so. That's really the only. But for today,
UAL.
What's that?
UAL had earnings after the close yesterday.
UAL
Basically unchanged. It's like down like 20 cents.
Today we can mention it, American Express.
Okay, AXP.
Yeah,
We can actually trade it.
we can actually trade it. Schlumberger's another one. Not really a real
Yeah.
good array of stocks for today, although it is getting into earnings season.
Oh, we're getting
Sure.
it's
What's that?
back. Earnings season is
Earnings
back.
Yeah, I mean, Amazon's coming out on the 30th in a week or two.
Yeah.
Diamonds dividend.
Oh,
Figured around 50 cents or below. I know we don't trade a lot of diamonds. Markets are a little bit wide in there, but you're starting to get into that too. So you got the ETFs that'll have dividends too. So the diamonds are the first one.
okay, good to know. Hey, Citadel data shows amateur traders bought far more bullish call options than professional money managers. Friday's bruising stock market sell-off unleashed a flurry of options trading activity. You're welcome. According to SIBO and the OCC, cleared trades involved more than 110 million option contracts on Friday. It was a new record high that surpassed the previous daily record of 102.6 million, which was on April 4th, which is the Liberation Day. What does this imply to you? Like, what do you take away from this, or what should we take away from this?
What's an amateur? Like, what's a? I mean, isn't
We're not
all
professional.
retail?
We're not professional.
I'm an amateur. We're all amateurs.
Yeah.
I mean, if we don't have a
Who
title,
cares
but-
what they call us? If you're making money, it doesn't matter.
That's true.
I mean,
that's true.
I think this is great. I mean,
Well, I mean, obviously, I mean the liquidity is going to be great, even in those that are a little bit more fringy
Yeah.
of stocks, which is nice. I mean, I think the 0 day, which we do a piece on every day, has really gotten something going here for the market.
yeah.
It makes it a little bit more speculative, but I think that's what a lot of people like.
Sure.
Yeah. And I mean, there's been all sorts of stats on retail participation basically from April, riding this entire wave higher. That's all.
Outperforming money managers
Yeah.
in most cases, I would think.
And that's, that's the side we've been on for the past 15 years, is
Yeah.
that you can trade markets. And it's worked. I hope that people take profits.
Yes.
Like that's
Ring the
always
register at some point,
like I think everybody gets like a
Maybe
little
say
bit.
it a little bit louder for the people in the back.
Yeah, like, there's things that have gone absolutely banana land to highs.
Sure.
And if you've
Looking at you, Bloom Energy.
a lot of them, and they can go higher, and,
Right.
and maybe they will be higher years from now, but it's not going to go up every day
Right.
forever.
Right.
And I think a lot of people get caught up in the you put 1,000 and it goes to 10,000, and then you say, oh, well, this 10,000 is going to go to 1 million.
Well, you doubled your money in a month in a lot of these stocks. I mean, you mentioned
Or 5x or 10x. I mean,
Yeah.
it's way outperformed what is, a normal returns.
Yeah.
Or even abnormal returns. So I think.
Abby normal.
I was like on a financial chat board the other day, and some guy was very upset that he had sold covered calls and some underlying, I forget what it was, because he was like, I capped my upside. He was like, I'm never doing this again. I was like, my guy, like, be so for real. Like, you got really lucky, and I'm glad that this happened, but like, I think that's kind of just like the vibe that's out there right
Yes.
now.
Yeah.
And I was like, ooh, just be
Yeah.
careful.
Well, the fear runs both ways.
Yeah.
FOMO on the upside and it's fear on the downside. So it's, you have different fears and, just take some chips off the table.
Well, speaking of taking chips off the table, this is the antithesis of that. Volatility Shares, an issuer of ETFs, filed yesterday 27 highly leveraged ETFs, including the first ever 5X ETF for the U.S. market. What are we doing?
Well, TQQQ is usually on our list of the top 20. I mean,
Yeah.
it makes it all the time.
So it's a 5X AMD ETF, 5X Amazon, Coin, Circle, Google, MSTR, 5X Nvidia, 5X Palantir, 5X Tesla, 5X Bitcoin, 5X Ether, 5X Solana, 5X XRP.
Well, I just said it a minute ago. I mean, I think retail has embraced the leverage aspect of it. If they can make a lot of money with a regular ETF or regular stock with five
Why not
times as much,
5X it?
they're going to be able to do even
Yeah.
better. So
These are
again, it's all about the strategy here. So
these are short term, and some of these, like when you get into a 3X, like 2X, you still have the risk of going to zero. It's a lot less probable. But when you get into 3X, 5X, like a 5X ETF, the stock goes down 20%. That
Yeah.
ETF goes to zero.
Sure, that's
Or whatever
100,
the
yeah.
number.
reverse split it.
Well, yeah, but it could just go away. Like
Yeah,
if you have a 25% down move,
Sure.
Nvidia, which, seems like it's insane, but we have seen those sort of
Sure.
moves. Those products go to zero. And if the stock is at highs or near highs, they're going to be much higher. These ETFs might start at 100 or whatever the weighting and NAV is of these products. And they might go to 300 or 500.
Yeah.
And Nvidia, has a 20% down move and it's still up, 100% in the last
Right.
2 years. But these products go from 500 to zero because it's all based on a
In
percentage.
a heartbeat, too.
Yeah, it's just, yeah.
I mean, the one that scares me is like that 5X MSTR, because it's like that's a copy of a copy of a copy of. I was like, we've lost the plot. Like at that point.
I've done that with licenses back in the day when I was trying to change the date of it gets really light.
Yeah,
Really hard
yeah.
to see.
And there's also a lot of cost to these. There's a lot of these products they move, they're swaps. So
Yes, so
they're
a lot of management to them, a lot of management fees. Yes.
and a lot of drag because you're trading intra-bank,
It'll be
intra.
interesting to see how much they are charging. You bring a good point up
Yeah.
there.
No, but I mean, like to get the leverage, you're not doing that in tasty trades.
No,
like
use
platform.
options, futures, yeah.
Yeah, but you have to go to an institution because of the size of it.
Yep,
You
yep.
can't just do that.
Some sort of swap market.
Yeah, you have a swap market, so you're going to have a lot of drag.
Market.
You just trade it intraday.
Sure.
Like you want to speculate on tomorrow's move in Nvidia, go for it. But it's not something you should buy and hold or keep for long periods of time.
Be careful.
Yeah.
Hey, here's something interesting. The U.S. government shutdown has turned off the official flow of data, and that could begin clouding the view for policymakers across the globe, including those in Japan and other nations where insight into the fortune of the world's biggest economy informs the outlook for their own currencies. We will get kind of a modified CPI. It was supposed to come out, I don't know, last week, but we should get that, I think, October 24th. But I just wanted to talk the dollar here, the yen, the euro. What are currencies doing?
Euro is up small. Yen was up small last time I looked. It is up again small. They both caught a little bit of a bid, which means the dollar's gone a little bit lower, but the dollar just came off recent highs that it had. I'm going to want to go back to the shutdown here. Just telling you, what do they do? I'm wondering what we're missing. Like,
What do you mean?
Well, I mean, it seemed. What are we in? This is almost the third week of the.
2 weeks since October 1st. So the 1st to the 15th, it's 2 weeks.
Okay, so yeah, right. So we're done with 2 weeks, going into our third week of this.
Mm-hmm.
Get your act together. Let's get this over with and
Sure.
done, so we can have these silly numbers that actually mean nothing, but take advantage of it when the market moves.
Sure.
I mean,
What are bonds doing? We check in on bonds.
bonds are up the 118.14. So bonds going higher means rates are going a little bit lower, or at least that's the projection. Rates are going lower. That's kind of what we've been playing for the last month. I don't have much of a bond position anymore. I'm pretty neutral, very very small.
Okay. The Bank of England will only remove proposed caps on the quantity of stablecoins individuals and businesses can hold when it is confident that they do not pose a threat to financial stability. You can have your toy back when I think you won't shoot your eye out, says the Bank of England.
What happened to somebody would lose an eye? We don't have toys like that anymore.
Remember lawn darts?
Yes, lawn darts were great.
Yeah. Till you take one to the thigh. It's good times.
I had more fun with like pellet guns and BB guns.
Yeah.
Do that anymore?
Yeah. Can you even get those anymore? Do they like?
Yeah.
I need like a license and
No, I don't think so. Last time I was at
Cabela's.
not Cabela's, but what's the other?
Bass Pro Shops?
Bass Pro Shop.
Oh.
Thank you. You knew what it was.
Yes.
Thank you. Yeah, you can still get them. Yeah.
All right.
Bitcoin 111.6, not really getting out of its own way. It went under 110 on the futures, 109 and change.
Yeah. It has been
Been a dog.
It's been
the
a dog.
Amazon of the cryptocurrency.
for sure.
Yeah, what's the play here? Like, what do you do?
I mean, you lean I guess you lean a little
It's still
longer.
October.
Still October. You lean a little bit longer. I mean, we were leveraging, lowering our leverage over 120-ish, all the way to 125. Now you kind of lean a little bit longish.
Okay.
I would
What's Coinbase doing this morning?
good question.
339. It's up $3.
Okay.
It's been kind of choppy. I mean, Coinbase, MicroStrategy, they all move with some weight to what Bitcoin is doing. I mean, despite having.
So they're all off of
Well,
their recent.
Coinbase has a business, but
Sure.
Coinbase was 400. It's like you just mentioned, just under.
It's a high beta way to trade Bitcoin for the most part.
Two earnings from last night. United Airlines posted higher than expected earnings for the third quarter, but revenue did miss Wall Street's estimates. The carrier boosted capacity more than 7% in the third quarter, while sales fell for both domestic and international travel. United did say they would be relying on more premium travelers to sort of pad out their earnings for the rest of the year. And the airline brought in revenue $15.23 billion versus $15.33 expected UAL.
UAL basically unchanged. 104, I think, being a little.
It's $6, expected move. It's
Yeah.
And it did nothing?
It did nothing.
Absolutely
I only 23.
Wow.
could still move on the open, but
Sure.
it's basically it seems like it's nothing. None of the airlines are really moving. Delta's at 61 and change. I mean, they've been stronger since kind of the move in April, but they're still on the lower end of the middle of where they've been trading, really.
Morgan Stanley says the colossal AI spending spree could pay for itself by as early as 2028. They offered the reassuring outlook for concerned investors, because I was like, y'all are just printing money, looking at you, OpenAI. But the bank said the huge capex could produce positive impacts to revenues by 2028. Cap or no cap?
Unchanged Morgan Stanley around 163. It did jump from 155 to about 165 after selling off just a couple of points. New highs for Morgan Stanley. So maybe they.
I mean, are you worried about the AI bubble popping and that it's falsely propping up the entire economy, and like what happens when this doesn't pan out?
2028 is far away. I've seen other things that are 2030, 2035. I mean, projecting that far out in time, I mean, we will probably have
It's
it.
2 years.
No, I know, but like when you're, this one I'm saying is far. Some of the other reports are 2035, 2040. We're going to have this spend. We're going to have this spend. There could be a new AI by that time. We'll have a new product that disrupts everything that we're doing. So I don't know. It just, these are just headlines to me, is what I'm getting at.
But you're not worried about an AI bubble, though? Like, things are so frothy?
Sure. Yeah. Things seem a little frothy. Yeah.
Yeah.
I can tell by like my Instagram.
But what does the bubble mean
followers
to
that that it's getting a little frothy with AI. I get a lot of AI followers, I think.
Okay.
I think it's a problem.
Yeah.
Those are bots, but yeah.
But so what does that mean to you? That it's 20% downside? 50?
I don't know.
That's the question. I mean, like the market's up. If we were down 20% today,
The volatility of these products are pricing in a 25% move.
Sure.
So it's not like it's unwarranted. Like, the pricing model is showing you a 25% move up or down.
Yeah.
Well, speaking of just printing money, NVIDIA, Microsoft, XAI, and BlackRock are now part of a $40 billion deal for Aligned Data Centers. The consortium of investors has agreed to purchase Aligned Data Centers for $40 billion. Hooray.
Do we have a ticker for
NVIDIA
that? I don't know.
and down the last 4 days, 182, up around $2.50 or so.
I don't know if Aligned is publicly traded, but BlackRock, Microsoft, and NVIDIA are.
They're all a little bit higher, but the market's a little bit higher. I mean, S&P's up 23.
Okay.
Nasdaq up 126, a little weaker yesterday than the rest of the market.
Good to know.
It looks like smooth sailing.
Hey, Apple is unveiling its new M5 chip. I love Apple Silicon. Maybe I'm a weirdo, but I'm super happy that Apple started making their own chips, and they're super fast and can do a bunch of things. So they're now on the M5, and it's going to be the centerpiece of an updated line of products. It will provide a 27.5% increase in memory bandwidth and provides a big boost to GPU performance. It will be in the new MacBook Pro, the M5 iPad Pro, and an updated version of the Vision Pro headset.
That's why they were all on sale.
That's right. That's right. That's right.
They got me.
You can get M3 and M4 MacBooks for cheaper, but they're still really good.
Yeah. They got me.
They got you.
They got
got
me,
me.
Jerry.
They got you.
me.
They got
Amazon
you.
had
Now
the
you have
big
FOMO.
sale.
You don't have the M5.
Well, just make sure that it's at least an M chip, because sometimes Amazon will have a super huge sale, but it's one of the old Intel core chips, and you're just like, I don't want that.
Yeah.
What are you doing in Apple?
250 up about 50 cents. Ivy rank of 27, relatively low, although it's been expanding the last couple of days. October 30th is earnings. You're looking for a trade in Apple. With the Ivy rank being so low and earnings coming in 2 weeks, you really have to be directional.
Yeah.
In my opinion.
Good to know.
Yeah. Don't have a position currently.
Can't sell premium in there is the point.
What about Meta? Meta said yesterday that they would invest $1.5 billion in a data center in Texas, breaking ground at its 29th such facility globally.
What is this, investments for ants? 1.5 billion? Come
He's
on.
like, you cheapskates.
Put a zero on that. 10 is a minimum now.
You're kinda
Seriously, like sometimes.
making a joke, but you're kind of
I mean, some of these numbers, I've never seen a number that's been below 10 billion.
Right. I mean, they're just under a $2 trillion company.
Yeah.
But, I mean,
Sure.
1 billion?
back together.
Give me a break. Come on.
Like a speeding ticket.
Yeah, what
It's
does this
right
mean?
Stocks up
The
$2,
rounding error.
2.5 to 720 or so after trading down to around 700 about a week or so ago.
What's the IV in Meta?
45, pretty good. Now you're looking at something that has earnings the same time as Apple,
Sure.
October 29th. This would be something if you wanted to be directional, you could sell premium in my
We
opinion.
have a wide put spread. So we sold the 650, 625 put spread in
Well, it's a
November.
$700 stock. It takes a lot of buying power to do something
Yeah.
in their nature.
Sure.
Yeah.
Always synthetic type naked strategy you can use too.
Core Scientific's board urged their shareholders yesterday to vote for the crypto miners' proposed sale to CoreWeave, as the company expects a number of benefits from the deal. CoreWeave announced their intention to buy Core Scientific in an all-stock deal valued at around $9 billion back in July, comes to around $20.40 per share. CORZ is Core Scientific, CRWV is CoreWeave.
Core Weave.
The Core Scientific it's right at 20, and it looks like, I mean, there's still a lot of premium in here, so they're certainly pricing in that this could not happen.
Deal risk is what you're talking about.
Yeah, there is deal risk here on both sides. This could be a higher deal, a lower deal, a no deal. It's definitely priced in here because when you look at the options, when something like this gets put out, the options usually price in the probability of it going through or not.
Sure, or
based on
maybe it's not an all cash deal. It could be a stock and deal, which would make it, there's some cost to carry to it. So if they're taking over a stock, for argument's sake, at 100, it might be trading at 98, and you think there's a $2 edge there. No $2 edge.
Yeah, but the call would be priced a little bit higher, and the puts would probably be lower if that was the deal. Here you can see there's premium on both sides of the market. There's a little bit more towards the upside, which kind of indicates that maybe it's, possibly a higher deal. But either way, when you get this sort of news event, it's kind of a done deal. No,
sure.
I don't mess with these.
Core Weave trading 141 up around $2.
Yes.
Ooh, okay.
Everything's up around $2 or so. Seems like today.
Anthropic, the AI startup that's been backed by companies like Amazon, is projecting to more than double and potentially nearly triple their annualized revenue run rate by next year. That is fueled by the rapid adoption of its enterprise products. That's kind of bonkers. You can't trade Anthropic, but you can trade Amazon.
I'm sure they'll go public at some point.
Sure.
All those, I mean.
They're already worth $1 trillion.
Yeah.
Yeah, and Amazon's worth $2 trillion.
Yeah.
A little bit more.
It's all paper.
Dog.
You need the liquidity.
Yes, you definitely need
I
liquidity.
mean, even though I'm sure if Anthropic went to JP Morgan to raise some money, I'm sure they will have no problem.
Amazon's been the dog. If you're looking for something that's an underperformer in the market, Amazon is your dog.
Okay.
IV rank of 49, has earnings October 30th. Amazon might be a trade for option trades today.
Hey,
go.
never know. They say I might have did something. Hey, here's something that is moving pre-market. That's Salesforce. Their stock jumped yesterday after the company offered a rosy forecast for 2030. For 2030, girl, no one asked you.
That's what I'm saying.
The company said they now expect over $60 billion. In 2030, above the $58.37 billion that among analysts were expecting. The guidance excludes impact from the $8 billion pending acquisition of a data management company called Informatica. What's CRM doing pre-market?
It's up $20. It's up 10% off the lows. But again, I mean, we could be at nuclear war with Russia by 2030.
That's the spirit.
We could be the Terminators. The Terminators could be invading. I mean, AI could be taking over our brains.
Yay!
Now, with 2030, come on.
I tend to agree with them, but here was a stock that we were looking at that we would say you're going to trade from the long side, and again, you got paid this time.
Nice.
$20.
Tesla is urging the Delaware Chancery Court to restore Elon Musk's $56 billion payday. The pay package should have been restored by a vote of the company shareholders last year, a Tesla attorney argued. It is one of the biggest corporate legal battles. It is entering its final stage as they're trying to sort this out.
A lot of money at stake. Tesla 435 and change, up small. IV rank of 26, relatively low here with its earnings coming in October. October 22nd, even closer, only 6 days away. Volatility not really expanding in here. Maybe a little bit of pressure on Tesla? I don't know.
Are you doing anything in Tesla, Nikki?
We've been trading upside call ratio spreads, which have been good, but I don't currently... Yeah, sort of like,
slightly bearish.
Short the upside volatility, which has been expanding, but has come in slightly with a little bit of the chop that we've seen here.
Google's a boom, boom, boom. Let me hear you say Waymo.
Waymo.
They plan to launch robo-taxi service in London. I told you another company called Wave, which was partnering with Microsoft, is launching their robo-taxi service. But Waymo says for their first international foray, they want to launch commercial service in London in 2026. I'm sorry, it would be actually their second international expansion. I guess they are in Tokyo. So, not not sure what Google's doing.
Google's making new highs, 252 and change, up around $1.50 or so. If it were to close over like 255, I think that'd be a new all-time high.
Street likes it.
Street likes it. Google the last 3 or 4 days have been gone from around 240 to about 250 and change.
It only took about 100 points for the street to finally like Google.
That's right.
100 points ago in April.
They hated it.
It was dead. It was going away. Now, look at it. It's amazing.
Well, because they beat all of their federal charges, so they didn't have to break up. They didn't have. No, that would have been a huge deal. Like if
it
they
would
had
have been
to
better for them to break up. They would be worth more because then you'd have YouTube. All the pieces are more valuable than the company itself. The big thing.
You tell that to GE.
Yeah, look at GE.
Yeah, that's true.
I mean, they're GE
Aerospace.
Yeah.
They're all multiples of what they were.
Sure.
Google would be the same. Amazon. I mean, all these companies.
Break it up.
Yeah, would be way bigger. But the story with them was nobody's going to Google search. AI is going to take over.
Gen Z only uses like TikTok as their Google. So they just look up stuff on TikTok. Hey, before I put up this slide here showing the number, the average new car price has hit a new record high. Do you want to guess how much the average cost of buying a new car is now in America?
They're doing this to me because Vinny's going to start driving in January.
He doesn't need a new car. He doesn't need a new car.
He might.
Used cars exist. But do you want to guess?
The best comment yesterday in the chat, I didn't have time to put it up, but they said, Nick gets the trickle charge, Vinny gets the Porsche.
Sure.
So I'll have the trickle charge in my trunk in case my battery dies again.
I
know you do. Well, but now I won't need one for 4 more years because now I got a new battery.
I know, but I have 2 trickle charges. You can have one.
Yeah, so I get the trickle charge, Vinny gets the Porsche.
So do you want to guess, though, how much average new car prices are now?
38,000.
What do you say, Nikki?
New cars?
Yes.
Are we talking like base model?
Everything.
Average new.
Average and average.
Yeah.
45.
Ding, ding, ding. Let's put this up here. The average price of a new car was $50,000 in September, marking the first time
you people are bougie.
the going rate of a passenger vehicle has exceeded $50,000. We're doing it, you guys. Today's auto market is being driven by wealthier households, but tariffs have also introduced new cost pressures to the business. What a time to be alive.
What a time to be alive.
Grossinger Autoplex #1 salesman. Summer of 2019-2020. Right here. 2 months.
Sold more.
Wait, you worked here in summer of night. I'm so.
2009, I'm sorry.
Okay.
2009, 1920.
Okay.
I was 19 and 20 years old.
Okay.
College job.
Gotcha.
Sold more undercoating than any other salesman.
You never want the salt protection on the undercarriage of the car. You never want it.
We live in
Big old
Chicago.
scam. That's the point, okay? Big old scam. It's just it's a nothing spray.
Well, this next story doesn't mean really anything to you guys, but for me, this story is flippin' awesome, and it's about damn time. Weight loss drugs shook up the stock market, but menopause treatments could soon be next. Hims and Hers is taking aim at perimenopause. Thank you, Jesus.
Perimenopause is real.
In an attempt to tap into a huge and potentially lucrative market. You shut your mouth when you're talking to me. No. Hims up 16%. They previously gained notoriety for making compound supplements for GLP-1s, like your Wegovy, your Ozempics, and stuff like that. But now, please, Lord, sweet baby Jesus, help women who are out here fighting for their lives, going through cougar puberty. It is rough. Yeah. Hims.
It's real. Just under 63 highs in the 70s. Hims, 52 Ivy rank, doing good.
Yeah, it's funny.
Earnings November 3rd.
We had the 45.80 strangle. I've been staring at it for the past couple days. It's been like a 50, 60, 70, 80 cent winner on a $5 credit, and then you get that 20% move yesterday or whatever it was, 15%. Now I'm feeling some heat.
All right.
Still out of the money. Upside vol, crazy.
Upside vol is crazy.
Yeah.
Dunkin' Donuts announced the launch of a new candy bar signature latte and the return of the Spider Donut and Halloween Munchkins bucket. The candy bar latte is a decadent blend of chocolate, toffee, pretzel, and peanut butter flavors paired with espresso. The drink is topped with whipped cream, mocha drizzle, and crumbled candy bar pieces. It is available hot or iced for a limited time. Diabetes.
Come with a cover, because I don't want Vinny to order this and get it on the Porsche. Is this going to come with a cover? Because it looks like it could be a little messy.
Yeah.
Yeah, it comes with the lid. You can get it with the lid.
All right, good.
Who decided that they get to keep the middle of the donut and not give that? You know? Like,
There you go.
I mean, somebody just came in and just said, you know what? We're gonna make the whole of the donut. We're gonna sell that too, separate.
Those are so good because you feel
I know
like
they're
you're
so
not,
good. That's
you
what I'm.
feel like you're not eating any
They're not
calories.
really good.
You're like, oh, have you ever had Timbits from Tim Hortons? I love Timbits.
I don't think so.
Those are
It's
good.
like the
Those
same
are
thing.
good.
They're good.
I don't think so.
All right. Hey, this is crazy. I pulled this for you. Penn State has a hockey commit that's coming next year, and this kid at 17 years old is 7'1" and 280 pounds. What?
Vinny, quit this morning.
Alexander Karmanov is the name of the kid, and he's an absolute unit coming from Russia to play for Penn State. He's 7'1". That's not even in skates. So, like, in skates, he's got to be, like, 7.5 feet tall. I don't know how tall skates are tall.
Yeah.
Yeah. That's...
He looks like a force to reckon with.
Also, he's still growing.
Of course he is.
Yeah. Just go low. Go low.
Right. Go low.
I don't, good Lord.
Yeah, I mean, why would he choose hockey? You're 7'1", 280? Go play basketball.
You got to compete with other 7-footers. There'll be a few. There won't be too many in hockey.
There's not that many 7-footers.
I agree. Not too many, but I don't think there's any in hockey.
Yeah, I don't think there's. I don't think
because you
there are
don't
any.
have to be 7 feet tall to play hockey. You could be.
If you can skate and you got 300 pounds coming at you, you're a force to reckon with. That's the Mack truck.
Yeah, but
I mean,
when you get up
hockey
to
players, not anymore, but I mean, you look at. I mean, Kane was on an interview, and I met him in Vegas. I mean,
He's small.
Kane would just skate around this guy.
He's little. He's a little
there's
guy.
only so much ice out there, son. And a lot of players there. I mean, I don't know.
I love this. I
would love to see hockey get back into the physical game that it was.
I hope they call him the Eater from St. Peter. But good
Penn
luck,
State's
kid.
going to have a team now too. I mean,
Well, good luck, kid.
they're always one of the top Ivy League schools for hockey. So.
Hey, finally today for my viral video of the day. It's hard. You see a viral video and you're like, is this real? Is this AI? But I think this one is real. This guy using his noggin and his engineering skills to turn a dirt bike into a water bike. What? I love this little Kawasaki. Watch this.
I have Kawasaki.
That's sick as hell, dude.
Pretty cool.
How's he doing?
I don't know. I think it's real. Look at the spray. I think it's real. I don't know.
How much is it?
I think it's real.
He's got like special tires on.
Because I've ridden a dirt bike on the snow because it had like a snowmobile tread in the front of it.
I'm
knows?
calling fake.
I don't know.
Putting jet skis out of business here. You just turn your bike into a jet ski.
Yeah. I don't know what happens, like if you tip over and then the whole thing just sinks. I don't know what
That
happens
too.
there.
That's going to be a problem.
That's going to be a problem. That's
Might
going
be
to
a
be.
small
Fake.
issue.
I'm calling fake.
All right.
Old age and trickery beats youth and skill. This is old age and trickery right
Well,
now.
we will see. What's coming up next?
We're going to take a quick 90-second break. Come back. We've got Confirm and Send next. Let's Tasty Live.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Tony Bat Batista, the John Jay College of Criminal Justice. Number 69, because it's one standard deviation plus one. And you know, I'm the Bat.
John McLaurin, Wisconsin. Number 2, because I'm Beth's right-hand man.
Vanetta Logan, the Indiana University. Number 3, because that's how many shots of bourbon it takes to make it through the first hour.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We are back, son. You know what that means. Time for a little bit more Tasty Live with, confirm and send viewer emails. But before we do, let's take a look at the market. Even the S&Ps. When I went to bed last night, they were only up a handful, a couple, 5, 7 or something. Rallied overnight. We are just about 2 handles. That's 2 points off of our highs on the E-mini S&Ps for today. 67.44, up 29, about a half a percentage point. NASDAQ up 164. NASDAQ was kind of the weaker of the group, although up yesterday. A small leader in the clubhouse today, up 165. Russell up 11, and the Dow up 115. Remember, the Diamonds DIA have a dividend today, so take a look at that. Consider it 40, 50 cents, something like that. Volatility in by 39 cents. Almost a 2% move, but 20-30. Look here, son.
Yeah.
Volatility after making lows in the 19 handle has now, stayed elevated as the market has gone higher. Yesterday's action really warranted the volatility not coming in. 100% move top to bottom. We had a 60, 70 handle move to the upside, came back down 50, 60 handles, rallied back up 20 handles. Plenty of movement back and forth. You were able to make a couple of dollars on your 0-day trade after taking a little bit of heat on the trade. I mean, it really was a trader's market yesterday. Good two-sided action. And that's why volatility is staying bid. We'll see what it does today. Bonds up 18, 118.17. This is the high end of its range. Ivy ranking there relatively low, 7 and change, so you're going to have to be a little bit directional. Bitcoin can't get out of its own way. Just under 112, traded under 110 last night, 111.9 right now, up $340. You can see here at the very low end of its range. Ethereum up $76, doing the same as Bitcoin, trying to get its wings underneath it, trading under 4,000, now just over 4,000, 4,072. Oil up 27 cents, trying to get you a bid too. These are the two commodities, if you call Bitcoin and cryptocurrencies a commodity, that haven't moved higher with the rest of the market. Oil up 28 cents. Gold, what do you say? Up 51.
Unbelievable.
A 1.25% move in gold. 9, I saw Jamal reposted something from somebody. I'm sorry, I don't know the name of it. 9 weeks in a row, gold has been up. It's never been up 10 weeks in a row.
Ooh,
and the last
spooky
few
season.
times that it's been up 9 weeks in a row, it's been followed by about a 6.5% on average move lower.
Wow.
1 week later.
Okay.
2 days later. 1 week later, it's about 8 3/4.
I mean, it had some two-sided action yesterday. Like it looked like it was going to kind of give it up a little bit. Silver too. Silver was down like $1 at one point yesterday from where it opened. So
it's up now. I mean, it's off of its highs by about 70 cents, which is a big move.
They canceled crash on everything.
Yes.
They said, no, we're going higher on everything.
100 in there, still very, very big product, and the options can be wide. Net gas traded under 3 again, now over 3, 3.02. That's all I got for you right now. So we talked a little bit about the earnings earlier. I think TSM was up 6. It's still up around 6.
Yeah, it was at like 311 last. So it's up like 7 now. Yep. UAL is completely unchanged. It looks like it's literally.
That was your big premium.
It's going to open.
If you did anything in there, in hindsight, I'm not saying that's what we suggested.
Yeah. I did a little crab trade there, so it should be good.
Oh,
long the at the money.
Right.
Long the at the money 105 in November, so I'm right at the money. That probably doesn't move all that much. I sold 3 of the weekly 110s for like $1 a piece. So I did the whole package at like a $3 debit. I'm hoping it'll be like a $5, $6 credit close.
Right, $3 debit, but a high.
Well, because
high theta decay.
Because I have the 105 in November was $7. So I'm hoping it opens at like 6 ish here.
Okay.
Or 5.
I don't put anything in
550.
until after the opening. See what's going on. Yeah.
550, and then all the 3 shorts that you sell at $3 hopefully will go to 20 cents. So make $1 or $2.
Very good.
Should be good. Confirm and send. You want to do it?
Let's do it.
And then we got trades from the research team. After that.
Yes, we do.
Yeah.
Yes, we do. Thursday, October 16th. Welcome to the middle of the month. Does frequent daily trade adjustments provide an edge compared to less frequent management at 21 days?
I don't have the exact stats on this, but I would say over trading is probably one of the worst things I see people do. And getting obsessed with changes in your delta, changes in volatility, like you should expect when you put on a strangle or a put or a call or whatever the trade is, you should expect to take some sort of heat on the trade at some point, whether it's the first day, the first week, the first month.
By heat, you mean down money on the trade, right? Doesn't mean
or you're getting tested, or your delta is changing. I mean that is just a part of trading, and so people get caught up like, oh, I started with 0 delta, now I'm short 10 delta. Should I roll up the put? And it's like, sure, you could if you don't want to be a little bit short. You certainly could, but if you're constantly doing that, you're going to be chasing every single move, and you got to be able to take a little bit of directional exposure.
Agree. On a delta neutral position, my delta is typically around 15 plus or minus when I look to do something. Doesn't mean that you have to do something. I typically do.
Yeah.
But that 15 level, like Nick just mentioned, 10, I wouldn't be doing anything, but I'd be on my, I'd be watching it every morning. Like, that'd be the first thing I would look at to see what the stock was doing. Because I want to do something. And again, this is a 45-day strategy, basically delta neutral. That's how I want to adjust. We've done the research, and I don't have the exact numbers either, that using some sort of mechanics like that does put you in a better win ratio than doing nothing. But again, it's all your own risk tolerance and your own beta-weighted deltas to your portfolio.
Yeah.
Like you can have, I'll just make an easy.
One thing's getting long, one thing's getting short.
Yeah, you have four ETFs, the SPY, Q, IWM, and Diamonds. That's all you trade, just to make it easy. And you put them all on delta neutral, and all of a sudden the SPYs, you have 50 deltas one direction, IWM, you have 50 deltas the other direction, and everything. Basically delta neutral, but you've got weighted on one side or the other. I wouldn't probably do anything with that position. It'd be basically delta neutral.
Yep.
Next question, please.
When a covered call is in the money, is it optimal to roll at 21 days or close at or closer to expiration?
It's a hard question to answer, not knowing your own outlet on it, outlook on the stock. Because let's remember something. If it's in the money by a strike or two, you probably still have long 30-ish deltas, 25 to 30-ish deltas. You started with long 70 deltas, and you got exactly what you wanted. You want the stock to go higher. There's still some premium left in that position. At that time, whether it was 21 days or not, I would probably look to do something. I have a profitable trade. I got the direction I wanted. If it hasn't reached my price target, meaning the stock's price target, not the trade's price target, then I would probably buy back that call and sell another call in the same month, further out of the money, strike or 2 or 3 out of the money. If I still had, let's say 40 to 30-ish days. If I was in that 30 to 20-ish days, I would probably take it out to the back month and sell a call out there. So it all depends. I would be looking to probably close this trade or do something with this trade to get my deltas back in line, meaning more long.
Yeah.
Or out of the trade completely.
There's a lot more gray area with covered calls because you might want to keep the stock. Like we have an S-bet covered call. Mm-hmm. I want that stock gone. Like I'm not holding that for duration, and so you might just leave that position on. If you're trying to keep the stock rolling around that 21 days, it's a good point to get exposure to volatility, that high extrinsic value, like that. Those are the things that you're trying to get.
Yep.
Next one, please.
How should you increase your trade size as your account grows significantly?
So, I think you keep the same sort of mechanic, for lack of better words, 1 to 3% for defined risk trades, up to 5% of your net lick for naked positions. That scale, that percentage scales as your account scales. I think it's less about the number of contracts because there's a difference between your buying power on a spread trade and a naked trade. So it's not so much about the contracts, it's about ultimately keeping everything kind of in line. You don't want to have one thing that is 3 or 4x the size of everything else because then your portfolio moves with that.
Yeah, you're 100% correct. The worst thing that can happen, best thing that can happen if it's going your direction, the worst thing that can happen if it's not going your direction is having too much weight in one stock. That's not what you're looking to do here. You're trying to have a balanced portfolio. The only way you can do that is keep your percentages in size the way you explained it, which was perfect. Next one, please.
Does the platform IV shown at the top reflect a specific expiration or average somehow?
Yeah, it's a grouping of daily and monthly options at the money and further out of the money. Every firm has some sort of metric, even their implied volatility that they use for the expected move are all very similar, tweaked a little bit different to make it proprietary to them, but it is a population of many months, not just.
Yeah. So the IV rank uses the IV index value, which is on the right side menu gutter in the platform. So if you look at that number, the IV index
next to the parentheses.
So each expiration has their own implied volatility. On the right side, you'll see on the gutter a number that we call IV index, which is a VIX style implied volatility for that underlying. So it takes into account around 30-day implied volatility in that specific underlying. So it groups it together. So it gives you one number. Otherwise, there's no way to get, you have to measure to something. And so we use that VIX style number, which is then inputted into IV rank, which measures it on a 1-year time frame. So it gives you something to look at. It's
and that is the all of those months that we look at put together pretty much. Like Apple is 32. You're talking about the IV index that you're looking at. It's 32.3 if somebody wants to find it on that right-hand gutter. If you look at November's monthly implied volatility, 31.7.
Yeah, and you see that the 31st has 36% implied volatility. Right. November 7th has 34%. So it takes that aggregate and weights it all together in a VIX style calculation. It's not looking at further out, like when you go further out in time, you'll see much less implied volatility. It's looking at like the front.
Yep. Good explanation. Thank you for clearing it up.
Next one, please. Last one, what factors influence the decision to roll an in-the-money short call at expiration?
All right, so you're at expiration. So let's say you were trading a 45-day strategy, and at 21 days, you made the decision to stay in this trade. As long as you did that, I have no problem with answering this question. So now you have an option that's in the money. Whether it's long or short, doesn't even matter to me. I'm not going to want to use, and what's the decision here? I'm not going to want to use 10 times the amount of buying power to hold stock. So I'm not going to take stock. So I'm going to either do something, close that position, or, which is more likely since you took it all the way into expiration, I'm going to buy that option back or sell that option out and buy that option or sell an option in the back month to duplicate the same trade. So I can't say which strike I would go to, but all things being equal, you're probably going to go to the same strike because you haven't done anything with this trade all along. Like you like the position, it fits your assumption. That's how I would do it. And if I'm doing it for rolling for a debit because I'm long the option, so be it. And if I'm rolling for a credit because I'm short the option, so be it too.
Ultimately, the closer you get to expiration, the more binary the trade becomes. And so the reason we trade somewhere around the 45-day and close somewhere around the 20-day is because you're trading more than just the binary movement in the stock. You're trading volatility, you're trading time value. All those things are things that you can actually trade. If your option is expiring this week and is at the money or in the money or out of the money, it doesn't really matter. You're trading the binary nature of the stock. And so, if you're putting yourself in that situation, you got to.
It's a pure directional.
It's a pure directional trade. Yep.
And your deltas have grown too. So it may have started out as 50, whatever the case may be. You're at 100 now. So not only has your directional bias either come to fruition or hurt you, it's as big as it's going to get.
Yep.
Let's take a quick 90-second break and come back. We got more Tasty Live. Well, really finally this mess. We got trades for the research team next. We'll be back in 90 seconds. Tasty Live.
Trading is hard enough. Here's what liquidity is. You want to be like water. Liquidity is in reference to how easily you can get in and out of a position, from volume to open interest to actual price at which you can buy or sell your position. It's important for all traders, from stock traders to futures traders to options traders or even crypto. Tight bid-ask spreads and high volume are characteristics of good liquidity.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
son. You know what that means? Time for a little bit of trades from the research team. Who is our first researcher? I don't know if the cameras caught it, but I think I was the last one.
Were you? Ooh.
Yeah.
You're getting slower with your old age.
My reflex.
Sad.
My reflex.
Reflexes go down.
Reflexes go
Brain
down.
Brain activity goes down.
Nothing goes up. Everything goes
Oh,
down.
no. They have pills for that. Haven't you seen Hymns? Sorry, Beth.
What's up, Sahil? What do you got for us today?
Not much. Everything's going good.
Good.
How are
good.
you guys this
I'm
morning?
doing well. Thank you for asking.
Yeah. So I got an interesting one. SYM.
SYM.
I don't think I've ever traded this. What is it?
Symbiotic, an automation robotics company.
Ooh, okay.
They're investing heavily into AI right now, which means the stock is obviously going to shoot up.
Yes.
So that it's at its all-time highs right now. I think pre-market it's about $1 more, so it's around $76 pre-market. So naturally, we become bearish on the position and do a short call. There's so much skew over here that you can't even go all the way down to like the 16 or 20 delta in the November option cycle. So this is 25 delta, the short call around the 100. So wanted to put some.
You're going to have to watch out on
please.
some of these markets.
Yeah, they're a little wide.
Wide markets, yeah.
Now, I like I said, I've never traded the stock or watched it. Do they stay wide intraday?
From what I've been watching, yeah, it's like not too wide, which is why I want to put it on.
Yeah.
Like as some of the stuff that we put on before, but yeah. Just trying something a little different from a regular.
Yeah, I get it. No, I'm fine with it. Stock's up
liquid
$1
technology
this morning.
stocks or whatever.
Yeah, so you're going to get a better price than this. I mean, the option used is at 30 delta.
Yeah.
Mid price looks to be closer to, let's say, 350 or something like that. So if it's up $1, it's a 30 delta option. It might be up another 20 to 40 cents.
This is one where you don't want to put in an order pre-market.
No,
because
No. See where it is
Right.
when the market opens and then.
Yeah.
And if it's not looking good, don't put it on.
Yes.
It's not a hard to borrow stock. So that would say fine by me if that's what you want to do here.
Yeah. I wrote it down.
Conviction here.
We'll check it out.
All
I
right.
wrote it down.
Sounds good, boys.
On the list.
And you know what? It leans itself to a defined risk spread.
Yeah.
But they're going to be very cheap. Like
That's the problem.
Yeah.
because the upside skew, that out of the money option, trades for such a higher volatility than even the option you're selling. It's just going to make the spread relatively cheap. So if you're going to do something, you probably have to be naked. I would still probably do both sides. That's just me, but I get your direction bias. It's okay. Nice. Good.
All right.
All right, my friend. Good job out of you.
Very good.
Swim on out of here. Who's next? I want a Cavassier or something like that.
Yeah.
Music playing.
Pinky up, baby.
Yeah, pinky up. What's up, Gad? How are you?
What's up? I'm good.
How are
What's
you,
happening?
Mr. Smiley? You're always got a good. You're always
got
a nice attitude.
I'm so happy.
He's
You're
young.
always
you
happy.
know? He's
Kinda
young, happy.
Yeah.
Fun.
Upwardly mobile.
Yeah.
I'm excited. NBA is coming back next week. So
Ooh, you're gonna go to any Bulls games?
yeah, I went last year.
Okay.
So when I was back home, my dream was to attend one of the NBA games, one at least. So then when I came here, Tom bought me a ticket, a VIP one.
Ooh,
Yeah.
there you go. You hit.
Now you're spoiled.
Yeah,
and
Now
that
you're
way,
supposed to see, I remember. I'm gonna tell you a quick story. This SOB here always claims about me not doing anything for him, all this other stuff. We sat on the floor one time, right? Like one of the first few times.
Yeah.
This was 1998, by the way. Okay, you probably weren't even born.
The heyday of the Bulls. I mean,
I was 8 years old.
didn't get any better than sitting on the floor of the game. The next time we went, we sat about 8 rows up, right behind like the Bulls bench. He's like, "We're not sitting on the floor." And then the next time we went, we sat in a box. He goes, "What are we doing up here in a box? Aren't we on the floor?" So you got spoiled. If I was Tom, I would have bought you seats like standing room only up there. So you got the full experience. This way, when you got into a seat, you would have been happy.
He bought me parking. Everything was full paid.
You don't even have a car. You just sat out there with your lawn chair.
I had a car.
No, I'm just teasing. I'm just teasing. Yeah. What do you got for us, Gad, today?
I got snow.
Snow?
No.
Yeah, snow.
Okay.
Yeah, I'm doing currently snow.
All
All right. $250 stock up near the high end of its range, just like every other stock in the universe. But go ahead.
So I'm doing 210, 220 for put side and 290, 300 for call side. gonna correct about $3.07. It's kind of bullish, and I have some skew.
Yeah.
In it, so
definitely some upside skew here. Yeah. All these stocks have a lot of call skew.
Yeah. So your call spread's going to be further away than your.
But trades is basically the same.
Yeah, trade basically the same. Yeah. I saw these have like the earnings is like in 22 days, I guess.
Yeah, November 19th. So I don't think it affects your November 21st time. You're going to be out of it. Hopefully you're out of this. If it were for that, for sure.
I have the 195, 185, 270, 280 on right now. I think this was from Fast Market, or what's your assumption, a couple of weeks back. It hasn't really moved all that much, so I'm in a very similar position, but maybe we'll look to add something in there too. I have your rank at 31, not super high, but
okay. It is okay.
Yeah, it's good. I like it.
Okay, all right.
That's fine. Okay, good.
Cool.
Good job. Good job out of you. Who is our next researcher? My man Kai, what's up, brother?
Not much. How are you doing?
All right, doing okay.
Good.
Doing okay.
Yeah.
I saw you in the corner there. You laughed at when I said nothing goes up on me. Do you have the same problem?
Yeah, is that?
No, I'm laughing at the shark thing.
Oh, okay.
I'm a little bit slow.
Yeah.
All right. Sure. All right, what do you got for us today?
Another $300 stock, Oracle.
Every stock.
Everything. Yeah, if it's
I
not.
remember when every stock was $30.
I know.
$30 was the price of every stock when I started trading.
Yeah.
Was it?
Even Oracle.
Yeah.
Yes. Now it's
they
300.
split multiple times.
Mm-hmm.
So it's pretty plain. $10 wide. Try to collect 1/3 width of the strikes. Iron Condor, 260, 270, 360, 370. Very easy. $100 wide.
Mm-hmm.
What do you think here, son?
I mean, it's another one where we have. It's funny that we all kind of rotate in the same stocks, right? I mean, Snowflake is another one where high implied volatility, liquid markets, it's moving. You're putting a position on. Same thing in Oracle. You know, I'm in Oracle. I got kind of a similar position, but I put this on a week or two ago. Kind of the same case with Snowflake, where I'm short the 240, 220, and the 330, 350. So I'm 20, a little bit wider, but again, like same thinking.
Yeah, Oracle didn't move that much in the past couple of weeks.
Yeah.
Right?
It's been kind of choppy.
$40, yeah.
Earnings are after November expiration, so that's a good thing too. You don't have you don't have to worry about that. Like December 8th in Oracle, Ivy rank is 68. I mean, this
very rich.
Yeah, this seems like one of the better stocks that we've looked at. Markets can be a little bit wide in here too, but plenty of open interest in here. Thousands on every line.
I still remember before the AI boom, all these things. You and Tom, you don't even want to trade Oracle because it's so boring.
It was. It used to be.
Yeah, so
we were
boring.
wrong.
And the market was wide. It's not enough premium.
We were wrong.
Yeah.
now it's tradable for sure.
And they move all at once. You know, it was
at
boring for 5 years, and then all of a sudden it's up 40, 50%, and it's a one-day move, and it's done.
Yep.
Crazy.
Nice work, Kai. Good for you.
I got it.
Who is our next researcher?
The good doctor.
Big D. Doctor.
Hey, guys.
How are you, brother?
Doing well.
Good. Looking
approve?
doctorish.
Yes. Yeah, thank you very much.
Very good. I don't know if you're a vet or a real doctor yet. It could be either way.
Hey, don't go there.
Vets are real doctors too. I know. I just meant I didn't. I misspoke. They're real doctors. I just not sure.
Haven't you had this argument with Dr. Jim too? Because are you like?
I don't know what Dr. Jim looks like. Like I don't know. I don't know.
Chiropractors. I think.
No, not look. Like is that?
Oh,
a
being a real doctor. Yeah.
Like, well, but the real question is, if somebody has a medical emergency on a plane, do you stand up? That's the question, right?
Dude, I don't know.
Do you stand up if they're like?
No, absolutely.
They're like, is there a doctor here?
I don't like.
Does doctor?
Oh, of medicine?
I didn't know you needed it. Yeah. That's the question.
I thought you meant a statistics.
Yeah.
You know, I do have a PhD in that.
Statistically, he's not going to make it.
No.
Well, what do you got for us, Dr. Data?
Well, Pfizer's down. Pfizer had a nice rally up, and then it's I don't know, past week or so, it's been looking down like it looks like a cliff, you know,
Mhm.
a kind of a high spike up, and then boom, it's gone down quite a bit. And there's some reasons for that politically. You know,
It's in the Trump basket.
yes, it's in the Trump basket about
Been blessed.
cutting some fees. Well, I'm not sure if blessed. He's not.
It's gone from 27 to
exact
25
opposite.
without an
Yeah.
uptick. I mean, the expected move for the month is only $1.40, and it's moved twice that much. Right?
And that's just because some of the payments are going to be cut using the Trump RX plan.
So what are you going to do here? Long call spread?
This is actually a long call spread.
shot.
You know, the IV is relatively low, and it has spiked up here quite a bit more than what it is right now. This is, you notice this is a debit, so we'd be paying $1.08, and that's generally what we do when the implied volatility is lower.
Stocks up a
50-50
nickel. It's a
shot.
classic
Yeah.
risk one to make one kind of scenario. You're going out after earnings, so this would be a situation where you would hope that earnings would help you. I mean, obviously it can hurt you too, but
course it
where
can.
you'd say, hey, the stock moves outside the expected move or at the expected move. I'm going to have a nice win ratio on a spread like this. I don't hate
There's a little bit of
the
risk
amount of
in
money
this,
you're putting out there. It's a cheap shot for $100.
It's a cheap shot.
Definitely gonna check that one out.
Yep.
I like it.
A little greater than 50-50 on this one.
Good job,
Perfect.
buddy. Very, very
Cool.
nice.
Beautiful.
Let's see who our next and last. Next and last researcher.
Full house today.
The Black Cat herself. How are you, Julia? Every day's Christmas. Good for you. Good for you.
Every day's Christmas. It's
Every day's
cold.
Christmas. Every day's Christmas over here. Yes.
I know we get a couple weeks of fall. This is like this is the perfect time right now. And then it's hibernation season.
You're right.
And then it's hibernation
Right. You're talking about weather. Yes,
Yeah.
You're right.
Yeah.
You're right. What do you got for us?
Anyway, okay. So today I'm looking at BABA. This is also one of my go-tos. Speaking of go-tos, IV rank of 45. It's had some pretty interesting price volatility over the past couple of months, especially in October. It's taken a bit of a dump, but it's actually been trading within a channel. So I'm looking at the 36-day contracts, 145, 200 short strikes going $10 wide, collecting 260 in credit for 740 in buying power.
I like trading BABA in this time frame because it has earnings November 21st. If you're trying to remove yourself from the earnings problem, this is on expiration November 21st. So you're not going to get that volatility expansion going into the trade. You're right. IV rank is relatively high. You're kind of doing a delta neutralist trade here. What do you think of this trade, Nick?
I like it. I think we put something on the open. I mean, you got an IV rank of 45. It's been chopping around. It's had definitely some price volatility, as you mentioned, Julia. I mean, this thing has gotten as high as almost 200 2 weeks ago. We've kind of come back down, and it was chopping around the 120 range for most of the year prior to that. So definitely think there's some juice to squeeze here. We should put something on.
Just a little juice.
Yeah.
It's a 36 day. So not a ton of time, but you also might not need as much with BABA, especially with earnings at the end of the cycle, midway, or 21 days is probably not the worst time in the world.
I like it. I'm in. We'll do something on the open.
Yeah, I like it.
Hell yeah.
Hell yeah, Julia. Hell yeah.
Hell yeah.
Well,
Let's take a quick LFG. Let's take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell next.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Clip thy waxen wings, thou economic Icarus. Discard these feathery adornments, thy flight's too vigorous. Rather, garb thyself with the soft fur of the bear, and dwell in low burrows of the valley fair. Forsake thy previous highs and perilous summit, for lo, I am short, so I must needs thee plummet. O market, I implore thee, make no high. Like some comic Fozzie, unclip thy bow tie. If thou dost tumble, I shall offer thee up a succulent hoagie. So, ye markets, remain as bearish as beloved Yogi. Follow thee the lead of Kipling's Baloo, and may the move be sweet as honey to Winnie the Pooh. With joy I watch descending chart lines straighten, run down with quickness and sweetness, like Lord Walter of Peyton. Let curious traders admire thy Berenstein way, and joyfully stealing some porridge, let us now say, sweet bearish market, never would I cage her, but admire her drop like some terrestrial Ursa Major. Come down, ye markets, to this sylvan glade, and let the bears have their day at Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with the opening bell imminent in about 3 minutes here. Even the S&Ps hanging steady, up 21. They caught a little bit of a bid, made a little bit of a new high at 46, which is about 10 handles higher than where they are right now. NASDAQ still your leader, ever so slightly, up 132 in the clubhouse. Russell up 8, the Dow up 78. Dow is your weakest of the group. Up $76. Volatility in by 34 cents. But you can see here on the chart, elevated for where we are in the market. Here's where volatility is 20 and change, and the E-mini S&Ps are just a skosh off of their highs. Let's call it 68 and change off of their highs. Bonds just sold off. It sold off nicely by about 20 ticks, trading just under 118 to 117.
It's a big move.
Big move on nothing there. Bitcoin down 300 to 111.2. You can see it's about mid-range for the day, trading under 110, over 112, 111.2. Ethereum doing the same type of thing, mid-range-ish, but the higher end of its range of about, just under 41, just over 39.50, trading 4,052. Oil up 27 cents. Good size range for the day, up half a percentage point, selling off of its highs, trying to get out of its own way here. Gold, nobody better get in its way, up $61, another 1.5% move on top of 9 weeks of movement to the upside. Gold's never been up 10 weeks in a row.
Until next week.
Until the time it does. That is, you're 100% correct. Silver up 81 cents. Net gas trading just over $3. 3.003. TSM had earnings last night. It was up around $6 or $7 for most of the day. For most of the pre-market, it's still there right now. UAL, you said, had another
down $1, basically unchanged here.
Basically unchanged.
Your gold stat doesn't include this week. Is this week the 10th week, or is this week the 9th week?
I thought you said I was all right, Spider. This is, I believe this is the 9th week. I will.
Okay, so next week
I have it at my ready.
Okay.
I will look. I will look.
Because we should play that. We should play that.
I think I retweeted it. It was something that Jamal actually retweeted.
Okay.
I don't know the person who came up with it.
So you're just spreading fake news. So you are an agent of fake news.
Since the government is shut down and there's no news, there's no other fake news to spread.
Who do you go to besides Tony Batista for your news? I agree. I'm with you.
There you go.
Yes.
I went on the good faith and reputation of Jamal.
Yes. I'll take that.
So I felt like it was solid. Felt like it was solid.
Yes, I like
Did I
it.
do bad?
No, I think you did good. No, I think you did good.
Beats
I
a
think I'm
sharp
with you.
stick in the eye, right?
Yes.
Yeah.
Pfizer Baba, we're definitely gonna look at. We'll look at that symbiotic. There's our bell.
There is your bell. You mean the S&P is a little bit weaker, up 17.
Yeah, you think we get a little green to red again?
I think you're gonna have two-sided action. Volatility is telling you you're gonna have two-sided action all day today. Let's look at the expected move for today. Even the S&Ps are about 35 handles, just above that. You're trading SPX. Make sure you're trading the right SPX. Well, you won't be able to trade the AMs because they expire on the opening. You'll notice that they have still have bids and offers to them because they haven't gotten the full price yet to all 500 of the stocks. You'll want to trade the weekly options. Those are the ones you're going to want to trade. Those will be October 16th with the W next to them if you're looking for the ones that are going to expire at the end of today. Let's look at what's moving this market on the high option volume list. To the downside, AMD, FSLR down around 2 and change or so. Roblox down $1 and change. Apple down $1.50. It can't get out of its own way. Apple's been a lagger. There's Baba. We were just looking at that. Down 81 cents. UAL for earnings. You mentioned down $1 also. Let's look at the upside here. ASML up $29. Can't keep a good ASML down. CRM up $15. Netflix and Chill up $8. AVGO up $7. SMH up almost $4. MSTR up $2. Trading near its highs for the day so far. We've only been open a moment here. OKLO was also up. I just had it here 1 second ago. Let me do it together.
I took off the UAL crab trade. Took like $130 out of that one. So it's good little trade.
So it traded closer to 4.5 or 5.
478 is where I got filled, but the markets were kind of junky. I wish I would have waited, but it had a little bit of an up move, and it's marked at 523 right now.
Yep.
But it's $1 wide
between the natural bid and the natural.
And it rallied 50 or 60, 70 cents.
That's it, because it is a delta trade. I mean, it does have delta.
Yeah. Because all your short delta comes off the table in the front. So you're just long that call,
just
really.
long that call. Right.
And you got volatility, contracting.
Right. You saw the stock down $1.50. It goes down another $1. You lose all your profits.
Yeah. So you just take the money and run.
Yep.
So we caught that one. Baba, what do you think we do in there? You think we just go with like a strangle? Or are you scared?
No, I like trading strangles in Babas. It's at the lower mid range for this big move. You look at the big move, 190 down to about 120 and change. Its most recent move, 160 to 190 and change. I think you can do something in November. IV rank of 42. Volatility upticking. It hasn't really come down. Now, if the stock comes back up, volatility will probably expand a little bit. So you want to lean delta neutral or a little bit long. Unless you think think it's done for Baba, then you lean a little bit.
I was thinking maybe the 145 200. It's basically a 1 standard deviation. I mean, it's a 19 delta put, 17 delta call.
I like to play.
Yeah,
I like to play. The problem here is look at the markets on the 145 puts. So you got to be careful when you're putting in these trades, especially.
All the puts look like they're 50, 60 cents.
I know, but this is just the opening. You're 3 minutes into the opening. So these markets are going to tighten up. So if I was looking to put on this trade, I'd probably put on like around 575.
Yeah, that's what I was thinking. And then just let it sit.
And let it sit. And then you reassess in a couple of minutes, maybe on the break, when you look at where the markets have kind of tightened up. And you go from there.
What do you think in Pfizer?
I put 1 second. I will look at it. I put the open interest here. You'll see thousands and tens of thousands on the 200 line. Plenty of markets will tighten up in Baba. I would suspect. I haven't watched it in some time.
Yeah,
but I would suspect. What was your question?
Pfizer. Do you think we do anything in there? It's a kind of a tough one, but
yeah. I think it was looking at the
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Nicky, we are back and we are joined by Mr. Dylan Ratigan. Hear me out. How are you, Dylan?
Never better, never better. It's always nice to see the Batista boys in full effect.
Thank you. Well, that's how Batistas come. We come in sets of two. We appreciate it. Dylan, tell everybody where you are, because I'm impressed with your work ethic.
It's one of those things where I feel like if I actually didn't use the Zoom backgrounds, it might be better content because it would be whatever it is. But at this particular moment, I'm in the back of a taxi cab on the Asian side of Istanbul, trying to get across the bridge. It's rush hour, so we got a bit of traffic here. It's not much. It's very similar to Chicago, actually. Traffic's terrible in Istanbul, but it's good for the segment because I'm quite sure I'm going to be stuck in traffic the entire time, which would make we wouldn't have some bizarre inconvenience where I have to get out of the taxi in the middle of the segment because there's more than enough traffic to keep me in this car for the next hour.
Well, perfect. If you do have to get out of the car, you have to take your background off so that we can see the scenery and stuff like that too.
I can do it right now if you really want, but I think I don't want to distract from the provocative and compelling questions that I know away.
Awesome. Let's get to those right now. All right, first question. Would you like me to read them to you?
Yeah, go for it.
Dylan, the Trump administration recently announced taking a 10% equity stake in Trilogy Metals, a mining firm, to support critical mineral development and the U.S. steel acquisition, including a so-called golden share for voting rights. How do you view that blending?
Veto right.
The veto right.
Veto rights. How do you view that blending of the market and state? Is it a risk? What unintended distortions does it create? And how would a market that prizes transparency push back?
There's a lot of questions.
We're trying to stump you, Dylan. That's why we're going with a bunch of them.
A fact by all appearances here, and then I guess we got I guess it's blending of market and state. Well, I view it as communism. I mean, this is state control of industry. This is the definition of communism or fascism or whatever. I shouldn't use those words. I don't think the government. I forget what I think. When the government owns the means of production, you no longer have a capitalist society. You have a government that owns the means of production. When the government owns the means of production, that's not a free market. That's not a opinion. That's a fact. What was the second question?
The veto right really to it, I think the whole thing comes down.
Is it a risk? Is it a risk too?
I mean, it's always a risk. I mean, it's not just here. I mean, you saw it in Russia. It's a risk. You see it in China. It's a risk. Even in Japan, which did not to be so sort of extreme, but Japan has something called the keiretsu, where they would have, government owns a piece of this, and they make every company own 10% of every other company.
Yeah.
Toyota owns 10% of Sony, and Sony owns 10% of I don't know, Panasonic or whatever it is.
Yeah.
And it works until it doesn't, as Tom Sosnoff would say. And then when it doesn't, everything goes down together. And so it's sort of like when you lock all of the capital and all of the fortunes and all the decision making to any central environment, you make things much more efficient because you get much quicker decision making. But you also make them much more vulnerable, much more fragile.
Yeah,
and it's fundamentally un-American. I mean, that's the antithesis of the American concept, really.
But you got to think that this continues too. So what do you think? What do you think his next acquisition is, for lack of better words?
I mean, I would, if I was him, I'd want to get 10 to 20% of Amazon, 10 to 20% of Google.
You just go straight Mag 7.
Yeah, I mean, if you can do it. What are you doing? Take it all.
Yeah, I don't like this. I don't like this either. I think it's messing with Mother Nature and the free markets. I don't know. I don't agree with this. I don't. I mean, can it be good for the country? I guess. I mean, yeah. I mean,
it's better than a bailout, right?
Yeah,
I mean, would you rather he just give the money?
These are not bailout stocks. These are not like.
No, of course not. But I mean, that's
It's
Intel
using the money to a bailout. What you're saying?
Yeah, Intel I would call somewhat of a bailout. I mean they're still a big company, but they need some help.
Yeah. But these aren't bailouts. These are control. These are interests. I mean, these are not bailouts.
Yeah.
But I think he's saying it's better than a bailout for these stocks.
Is it better than just handing them money and saying, "Oh, you need $10 billion, and we're not going to take anything back from it"?
We're not going to take a stake.
Imagine Bernie Sanders. Imagine Bernie Sanders was a president.
This is what it would be.
No. This is what it would be. What would the exact same policy from Bernie Sanders, the President Sanders? What would the Republican Party reaction be to Bernie Sanders saying, "I want 10% of Intel, 10% of this mining company"? What would the speaker? What would the Republican leadership be saying?
Socialism.
Good point.
Socialism, communism, is a socialist takeover. I mean, come on. I'm not saying the left offends me as much as they offend anybody in this country, but the Republican Party has no standing, in my opinion. Zero standing.
I agree with you on that point. It's a really good point.
On this issue.
You should think about going into politics someday.
Never.
Next question, please.
I got this. So. Sure. Gold recently broke 4,000 an ounce, signal many interpret as fear of inflation becoming persistent rather than transitory. In your view, what point does gold cease being a speculative safe haven and begin reflecting a breakdown in confidence in fiat currencies, or is the move based on something else?
I mean, the interesting thing, because we've talked about this a lot, I've been talking about this a lot with Ilya. And we've been talking about this a lot on obviously with him on Overtime. The gold move is extraordinary and historic and all the sort of superlatives you want to lay into it. But the dollar also stopped weakening in July. I mean, the dollar's got stable now. I mean, granted, it's at its low, at its biggest move in 50 years, but the dollar is stable. And so the thing that's sort of perplexing for me is if it was, because the I don't know if it was Morgan Stanley, but one of the big banks circulating their commentary they're calling it the debasement trade.
Yeah.
And the long crypto, long gold, and short all fiat, basically, right? And that there's no greater indication of the sort of momentum of the debasement trade than when 9 consecutive weeks of gold higher. This all the things we all know. What's interesting for me is if this is really the debasement trade, why is the dollar so okay?
I mean, hasn't there been enough downside there? Like, how low can the dollar go?
I mean, what are we down? 20?
How high can gold go?
Well, I think isn't the move in like equities and gold and even like crypto and all those things, isn't that really the debasement of the dollar? Like the dollar itself actually going down 20% is one part of the story. It can't go.
But it didn't happen at the same time.
Yeah, it's like kind of like a continuation though. You had, like the dollar can only go so low, assuming it's the currency of the world. At some point it hits a bottom like a commodity, and something else has to move more to
don't
be.
You think, gold is never. Would you rather be long? Would you rather be long the dollar or short gold?
I would. That's a great question. I think I would rather be long assets in general, gold, silver, stocks, crypto. I think you can be long assets rather than being long dollars. I think that's what's happening here. I think gold was an asset that just hasn't moved and hasn't done anything and hasn't had that kind of explosion that the supernova. I mean, the supernova now includes gold. I mean, we've been waiting for that.
To answer your question, I would am short gold, but gold volatility, it's just so high. I just think this is a binary event on volatility that you could take advantage of. Now, if you don't get stupid and lean with direction like I did, you could probably eke out some money there as opposed to, being long or short the market or long or short gold. But it was an excellent question.
Yeah.
It's a toss-up. It's a toss-up. Next question, please.
This is a good one because we got some people in the YouTube chat saying that this is a hologram Dylan, an AI Dylan, that we're actually using Sora here for this. But with Sora and the deepfake kind of videos that are now prevalent in pretty much every social media, how do you assess a risk to public trust and media integrity? What responsibility should AI creators bear if Sora-generated video is used for disinformation? How will or can this be regulated?
I think we lost the deep.
Oh, we lost our deep fake.
Dylan. Yeah, we might have lost them.
What do you think? I mean, we even talked about it this morning with the
the video that we saw with the bike with Vanetta.
It's like, is that real?
I don't think it was real.
I don't think it was. I think after watching it, I was like, this doesn't make any sense.
No, the weight of the bike and him on it, on that small little, there's no way. There's no way. And there was no movement in the...
But that's scary because we were sitting there for 5 minutes like,
it is
this
scary.
is real,
if you
this
see
is
something
cool.
quickly like that, I mean, it is. What's the response?
Who takes responsibility
how long
for that?
before, you get something, like...
I don't even know if you're really here.
Right. I don't know if you're real right now. I mean, what do you have to do? Give a pint of blood to make... So what's the responsibility of the AI creator? I really like it when they put like a little logo up there or something like that, or in the description they say, this is an AI video and stuff like that. I really like it. I think that's kind of truth in advertisement or whatever, lack of a better word is. So for me, I would rather see that. I think they could be more powerful than drones, and I hate drones. So I mean, I'm scared of them. So this is news travels so quickly, and this is so good. I mean, I don't know. I don't like it. What do you think?
I don't know how.
Should all of them have some sort of disclaimer on it that says it's AI? I think they should.
I think so. I just don't know how you do that. Like, how do you police that? When you have a free and open internet.
AI without having a watermark on there or something like that, you take their, you give them a chance, 2-3 chances, whatever the case may be, and then...
Yeah, but then you start a new YouTube channel. You start a new Twitter.
So then you have a zero tolerance then. We do it one time and you're gone. There's ways to stop it.
It's going to be scary.
It is scary. Sorry that we lost Dylan. We'll take a quick 90-second break. We'll come back. We got more Tasty Live with a market measure next. Even the S&P's up 14.
Choppy.
Yeah, choppy. Sold up a little bit. Russell's actually red by $8. Dow's only up by 50. Gold is still up by 67. We'll take a quick 90-second break and come back with a market measure.
Tasty Trade's Money Match event, unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the Tasty Live core strategies.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Start the show. Watch me go, 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 go. Watch me go. Start the show. Watch me go, 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 go. Watch me go. Start the show.
Nikki, we are back, son. You know what that means? Time for a little bit more Tasty Live with, well, a market measure sponsored by the CBO. But before we do, let's take a quick look at the market. Even the S&P is holding steady, up 17. NASDAQ up 144. Russell, the weakest of the group, obviously is the only one down by 6 or 7. The Dow up 58. Volatility in by 13 cents. Really want to look at a 0-day trade, it might be time now.
Yeah,
top of the hour, 9 o'clock. It looks like the expected move is somewhere around $35, $36. It's been holding steady. If you're looking at around the same price as you did, or we're looking at yesterday, the 20-ish delta call and put, maybe you use the 18 delta call. Oh, you did it all by yourself. What did you do? 66, 45, 35. No, you went 30. So you went $15. I was looking at $10. Okay. Because I was a little less confident in the trade, just going smaller there. You went 67.30. That was my strike. I was looking at 2. You went 45. So you went $5 out, and you got filled at 4.10.
Yeah, I did a $15 wide at $4 and change, and we'll put a GTC in at what? What do you want to take? 75 cents?
Sure.
I mean, it's about 20%-ish.
Yep.
A little less.
Yep.
Yeah, I also wanted to point out a lot of these stocks. Sorry, to go on with the market update.
No, I'm done. Gold continues to rally.
You're giving me...
No googly eyes. You go.
A lot of these stocks, like your MPs, your INQs, they're down small. Volatility has been coming out of these stocks on the upside calls. If you look at like
you feel like the move is over in these.
I don't think it's over.
Say something compelling. Volatility is contracting, which means there are more options looking to be, not more options to be sold. They're willing to sell them at cheaper prices than they were before. They're not paying as much. You can look at the other side of the coin. They're not paying as much as they were before. Still elevated.
Yes. It might be some pressure on the downside, though, because you have all this call volatility that's coming out of it, and you get squeezed out of that. You sell out of your calls at lower prices. It's the whole thing. So maybe it's happening a little bit. Like I'm looking at the ACLO November options. If you look at the change column, you got
Rigetti's down $3 or $4.
Yeah, you got $3 or $4 or $5 coming out of the calls with the stock basically unchanged for this stock. It's down $2 in ACLO, and you know you're losing $4 on the calls, $3 on the calls, depending on where you're at. You look at the change, yeah.
Oh yeah.
So you're getting, that's a little bit of downside pressure here, but the
70 straddles in by over $3. I mean, it's a delta neutral position.
Yeah, with nothing happening.
Maybe a little bit long. So let's go to the 65 straddle. Oh, that would have been a little bit. Here, we'll go to the 80 straddle, which would have been a little bit short. It's in by $4.
Yeah.
And you were a little bit short.
Yeah.
Ooh, that's a little bit of.
That's what I'm saying. Is the upside vol is getting squeezed out of there. So I was just trying to.
It's a good observation by you.
Thank you. I try sometimes.
Good observation.
Yep.
Very nice. Beautiful.
Yeah. We got filled on a couple of our trades. We did. Sorry.
That's okay. Go ahead.
I've interrupted you again.
No, I'm used to it.
Yeah, that's true.
You've watched the show before.
We got filled on the Baba Strangle. We did the 145, 200, 525. I put on a new Micron trade, call ratio spread on the upside. The only way I'm getting short these is with some sort of ratio spread. I just refuse to take the massive upside risk. They're usually further out of the money, take a little bit quicker profits there. And then we did the SPX trade, and I have
the actually up 6 cents now.
Yeah, that SPX trade is moving about 20, 30 cents already. So
it had a little bit of short delta to it.
Yes.
Very
Good
nice.
stuff.
Very nice. All right, good. I'm looking at accounts that we have across the board here, and I'm looking at the delta in the accounts, like let's say an SPY, which is up a little over $1. You know, let's say an account has $500 in delta risk to it. It's only moved by half of that, for or against. And that's just because volatility. So if you have short premium, you're like, let's say just naked short puts, you're only making 500 long deltas. You should be making $500. You're only making $250. That's the volatility expansion there. It's another way of looking at what volatility is doing.
Yeah. And TSM gave up the entire move. It was up $7, $8. It's now down $2. So it's had about a 10-point swing.
Earnings. All right.
Big move there.
All right. Beautiful.
Cool.
Beautiful. All right. Let's see
Vol just went green.
Market measure sponsored
Scary.
by the SIBO. Scary. And yet here we are, up 13 handles on the E-mini S&Ps. I mean, say what you want, read into what you want.
But it tells you kind of maybe there's some two-sided. You're going to have points to buy and sell here.
Yep.
No doubt.
Yep.
Not going to be one-way trend market.
Traded market so far.
This is good.
All right.
Market measure.
Sponsored by the SIBO. Our friends at the SIBO.
Yes, our friends.
What are we looking at today, son?
Impatient bulls. Selling 0-day till expiration puts. How do you think this performed in the last 2 years? I think this is pretty easy money, right?
I mean, I'll take the chalk. I mean, you would think. I mean, all the volatility's been elevated here today. We're at highs.
Yes. You got to keep in mind with the 0-day stuff that all of this data is of the last 2.5 years, I think it is now, or maybe 2 years. So it is very skewed towards the very recent price action. And so when you see these numbers, you got to take it with a grain of salt that we're looking at a very small data set relative to everything else we do in our research pieces here. So just keep that in mind. But let's check it out. Let's see what the boys came up with. So the 0-day option markets give traders access to rapid results and liquid prices. So far, our research has avoided making directional assumptions and focused on delta neutral approaches to selling 0-day options. Mostly, we've been looking at like iron condors and iron flies, managing them at specific percentages. I'm also talking with Jacob to get into some specific dollar amounts, like the 20 delta that we did today, managing it at $1 or managing it at 50 cents, those sort of things. I think that'll help some people as well. So, but as the market has climbed higher and higher, it is natural to wonder what happens if we decide to get directional, and what happens if we just do the direction in hindsight, which happened to work out the entire time here. So today, we're going to look at some data on how different approaches to selling 0-day SPX puts have performed. Again, got to keep in mind the time frame that we're looking at here. Gold up 75.
Ooh. Yeah, it doesn't stop. If you're trying to roll up puts like I am, I was trying to get cute, maybe catch a $15, $20 move lower, you are going to be...
You're dead. You're dead.
Yes.
The study, using over 2.5 years of data in SPX, again, this is all there is. So it's collected every 10 minutes, considered the results from selling one put spread every day with an at-the-money short strike. This is going to be a juicy one, obviously. You're going to be selling that for a pretty high amount of premium. Considering the range of widths for the long strike, as well as placing the trades at 9 a.m. Central Time, or right at the market open. So we're looking, in that first 30 minutes or so. Trades were closed if they reached 10% of the max profit, though they frequently close far more than that due to only checking every 10 minutes. It tells you how much this market has moved, that even if you're putting a close at 10%, some of them are much higher than that, just because in that 10-minute time frame, the market has been moving pretty significantly.
Right.
So we're examining the total number of winning trades, the total profits or losses, and the maximum drawdowns, the largest amount someone would have lost following these mechanics every day by starting at an unlucky time in the study. Repeated the analysis looking for 25% of the max profit instead of 10%. So we give you a couple different metrics, and all trades were assumed to exercise at the mid price. It's about as good as you can get with a research study. I think how this is going to look.
Yeah, I think I know where it's going. And you got to remember, we're at mid-price. A lot of times you can't get filled at mid-price.
It might be a nickel below.
Nickel above sometimes. I mean, the mid-price is pretty subjective there, but it's the best way to look at these.
Yes. So let's take a look at the first set of slides here. So this is opening the trade at the open. We're looking at a very small, I should say conservative, 10% profit on these trades. You can see we break it down by 10, 15, 20, 25, and 30 point wide spreads. They've obviously been a home run, mega home run, very high win percentage. I mean, these are trades where your at entry win percentage is probably somewhere around 55-ish percent. So you're well exceeding that. And that is a reflection of what the market has done in the past 2.5 years. So you have to keep that in mind, of course. Average P&L per trade, significant across the board here. It doesn't really increase in the same magnitude because you're looking at the same short option that's at the money. So it depends on the tail off of premium. It goes further out in time. But you could see these are great trades from a profit perspective. As you get wider, your drawdowns become bigger. That's not a shock here.
You're wider on the spread. It's going to make sense for sure.
Yes.
Again, 10% is a very tight, stop here on that mid price being filled. You might get a print there that you could not get filled on. So I would cut these numbers by a little bit. Now, as you get, wider on the profit, more than 10, 20, 30%, that kind of thing, then I think the numbers are a lot more accurate than the tight ones.
Yeah.
Give it with a grain of salt.
Next one, please. So this one is looking at the
Open at 9 a.m. and close at 10.
So this one's 9 a.m. So this is waiting 30 minutes. Again, same sort of story here. I mean, you have these mega wins. And the drawdown, the max drawdown, we're looking at a cumulative. So for these positions. So the win percentage, obviously very, very high. You see the average P&L per trade. Looks like a home run. Market has gone up pretty much this entire time. So you got to keep that.
Yeah.
Keep that.
As you would expect. No surprise here.
Yes. So this one the next slide gets into 25%. So 25% of the max profit. Again, your win rate goes down a little bit because you're holding these longer. You have to hold them longer because you're trying to target a higher P&L amount. You can see that your average P&L per trade does, increase significantly because you're taking more profits. It has been a upside move overall in the market. So these are all fantastic numbers.
Yeah, now I'm excited by the returns that are
yes,
because this I think is more realistic of what you can pull out of the market.
Yes. And then looking at them at 9 a.m., which is 30 minutes after the open, it's kind of the same story here. I mean, you get a little bit extra profit potential, but it's good. There's not much of a downside here, despite the downside is that we're only looking at a bullish move in the market.
Yes.
There were not a lot of days or weeks or months where there was all that much pain besides April that we saw this year, which was quickly revert. You probably made it all back and then some if you started again after April, which probably speaks to being mechanical with these things. You got to have a lot of capital and be able to withstand those moves.
There you go. Being mechanical, the key.
Yes. So getting to some takeaways here. Over the duration, SPX has climbed from 38.35 to 66.44. So you got about 100% rally in the market.
So if you pick a strategy, what would you want to do, right?
If you could go back in time and ride
and cherry pick something.
And cherry pick the market to go up 100%, you could probably do something even better than this. You sell the put and buy the call. Why even define the risk? Who pays?
The finance buying the call.
Exactly.
Right.
Do a risk reversal to the upside. Why not? Free money. That's the problem, with any sort of back test is you can cherry pick into situations where it looks like it's free money. So sticking to defined risk helps the traders know how bad things can go quickly. Taking profits helps avoid some of these bigger losses and increases your win rate, of course. Higher profit targets were able to take home more overall, but resulted in more expensive exposure to drawdowns, especially for wider spreads. It's very intuitive here. If you're holding the trade for longer, which you will inherently do with a higher profit target, you're going to expose yourself to more time, which gives you more time to also be exposed to the tail risk here. So, managing quick not only locks you into smaller profits, and a higher win rate, but it also helps you avoid some of the tail events and the worst loss, the bigger losses. There was not a clear difference in results for traders who sold their puts between the open and 9 a.m. They were all good here. It didn't matter if you started at the open, if you waited 9, this is a reflection of the strategy and not the timing in the market. We've done others have said that, that have looked at neutral strategies, take the profits quick. If you do get those quick, you can redeploy those. That was the one we did last week. And that was good. If it took a while to get those profits, it wasn't good to redeploy those. So, you're just looking at a different angle here. And then even narrowing or trading all the way down to SPX 0-day credit put spreads leaves a wide range to explore. In coming weeks, we will experiment with short strike placement, trade management, and rolling.
Good. I like how they're setting the foundation for future market measures that will get a little bit more in depth and not just, hey, we were directionally right in here. How much money can you make on this trade? I think really what it was showing you here is if you're right, son, on direction, you make money.
That's
pretty profound, right?
That's pretty good.
Thank you.
If you got the crystal ball.
Can't get that anywhere.
Yeah, that is, that's as good as it gets right there.
Volatility, let's take a quick look at the market. Volatility here up by about 6 cents. Even the S&P is trying to work their way lower, although they still are up 12. NASDAQ is saving the day up a 140, and the Russell is down 10. Bonds unchanged at 118. Gold continues to rally. I got to say, it's flirting with 4,300 at 42.79, just a couple of dollars off of its highs, but really taking a back seat on a percentage basis to silver, which is up $1.54, 3% move versus almost 2% move in gold. Some of the other movers that we have here, the Buckers on the downside, some of the stocks that you mentioned a moment ago, the Rigettis of the world, as they go lower, volatility is also going to go lower. You can see over the last 5 days, it's still up 15%, but certainly coming in today, Roblox, Netflix, MP, another stock, IV volatility over the last 5 days, up 26%, definitely coming in today. On the upside, CRM up 17, ASML, MU up 9, Oracle up 6 or 7, Google up 3 or 4. As much worry as volatility is giving us right now, the market's not ready to roll over as of yet. It seems like
they were down they were down to only up 4 or 5 points.
That's correct.
A minute ago. But you're having some big moves in both there. You're having some trading.
Yeah,
range.
volatility's telling you you're going to have some two-sided action here. Be patient with your trades. Yes.
Yeah, let's see what our SPX is. That position's come in like 30 cents.
Yeah, pretty.
I mean, it's chopping around.
It's chopping around. It's been up any 50 to 10 cents.
That's why you leave the GTC in and you just you pick your spot and if it comes to you, you might get a.
Yeah, you're still watching the market too.
Yeah,
that's what you want to do.
Yeah.
Bitcoin, I don't know if I mentioned it, 110 hasn't made a new low yet, but it's pretty close to it. Down 1,200. Bitcoin a little sicky.
Ow.
Let's take a quick 90-second break and come back. We got more Tasty Live. We'll bring in our friends, Quentin and
Glenn. Ryan,
G-Money?
Glenn. Yeah, we had Ryan yesterday. Remember you gave him grief because October
still hasn't come to fruition.
I know. But we explained it's just cheaper prices.
2 weeks, he told me.
We still have 2 weeks.
I hate that answer. We'll be back in 90 seconds with Tasty Live.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with these guys. The trade desk, Quentin. Quentin, how are you?
Hey, fellas, how's it going? Doing well.
Doing well myself. Thank you so much for asking. We had one of the busiest days last week, Friday. As somebody on the trade desk, do you like? Is it the amount of volume that trades that increases the phone calls, the questions, the chats, or is it just the market movement that kind of?
You know, that is.
So did you know it was like the busiest day on Friday? So go ahead.
So I did not know that. I mean, because I'm just so in it, right? Right. I'm just like, Tasty Trade, this is Quentin. You know, I don't think about anything else really. But I have like theories about it, right? So it'll be like, if the market is, you know, just like going up, we'll get a lot of calls, a lot of people want to trade and stuff like that. If the market goes down like a little bit, it'll be like, all right, maybe people are laying off a little bit, not trading as much. But then if it goes down a lot, I mean, we'll be swamped, right? So that's sort of how it is. I did not know that Friday was one of the busiest days, though. That's interesting.
Yeah, it wasn't specific to Tasty.
It was an
but
all-time
just in
record,
the
I believe. Yeah, just industry-wide, I got you, yeah.
industry-wide, like of options traded. Friday was a
110 million, I believe, or something.
Oh, wow.
Yeah, the last one was like 103 million. I mean, like, yeah.
Which also is a reflection of markets getting to higher values.
Sure.
More-
It's a reflection of a lot of things. But I was just wondering from your, from your desk.
Yeah, and so on Friday, I would say it was a pretty regular Friday. I mean, Fridays are typically our busiest days, not like most other industries, right? Because it's expiration and stuff like that. Especially this Friday, we'll be really busy. And so, yeah, I mean, we see a lot of the same stuff every Friday, busier days.
Awesome. Yeah. Before you get to your list, Quentin, we're going to have time today to go to your phone call. So 855-238-2789 or 855-BE-TASTY. The number will be below in just a moment. Give us a buzz. We would love to hear from you. We have 4 or 5 lines open, and like I have been doing as of late, and I know Quentin doesn't mind. I know G Money doesn't mind.
Yes.
I know Ryan doesn't mind. I'll interrupt them and go straight to your phone call. So we'll try not to keep you on hold. We got a lot of feedback from people. I'm on hold for a little bit too long and stuff like that. So we get right to you if we can. So give us a buzz, 855-238-2789 or 855-BE-TASTY. The number is below me.
And if you're on YouTube, on our YouTube chat, you can post some stuff there. Frankie, send me some questions too.
Awesome.
If you got something there.
Good job.
Yeah.
Alrighty,
You've
let's
got
get
your
to
list?
the list,
Yeah,
fellas.
let's do it.
Oh,
top 20 symbols going through the system and their IVRs. GLD, 95%. Tesla, 27%. AMD, 64%. Goog L, 55%. NVIDIA, 20%. AVGO, 31%. Palantir, 43%. Micron, 52%. CRM, 38%. TSM, 31%. Amazon, 48%. Goog without an L, 55%. UAL, 16%. Oracle, 68%. SLV, 101%. Meta, 44%. HIMS, 50%. IBIT, 62%. Apple, 25%. And TQQQ, 33%.
Good job out of you, Quentin. Last question for you before we let you get back to your real work. This is just, this is like a
side hustle.
Yeah, it's a side hustle. This is your side.
We're the Gumadas.
Yeah, right. We're his Gumadas.
Right. You come 30 minutes every single day, and then you
leave us.
Yeah.
I know sometimes whether it be a newsletter that us or somebody else sends out, or some guru comes up with a strategy or a stock.
There's a new Tasty Trade newsletter too.
What's that?
Once a month feature.
Yes, for sure.
Oh yeah, and I'll be writing some of that as well. Actually, some of the trade desk section. Yeah.
Oh, awesome. That's awesome.
Where do you sign up for that?
Ooh, sign up at. Oh man, I'm so bad about that stuff.
You stumped him.
Tasty Trade. Scott, where's
Yeah, I'll
Link
figure
to it
that.
in the chat.
Yeah,
Link to it in
I'll
the
figure it out. I'll get it.
I was gonna ask you, today specifically, is there a stock that's popping up that gave you the most questions, or was it a strategy that popped up that gave you the most questions?
As of today, not so much. As of recent, though, we've been seeing a lot of customers do covered calls and covered puts in futures. Actually, whether that's the micros or the mini contracts, and so we've been seeing a lot of that, buying a long contract, selling a short call against it.
I love it.
Going short a contract and selling a put against it. Yeah, we've
love
been
it.
seeing a lot of that, and then not necessarily single leg options, but with the contracts as well.
I love it because you know what that means. You got high implied volatility, getting a lot more strategic with it. I love it. I really do.
Yeah, what happens? Directional shot, but you also get some of that premium collection as well.
Yeah, you still want. I mean, the best thing that can happen is it immediately goes in your direction.
Yeah,
you
right.
know. And you'll probably hold on to it a lot more than you would if you just had the future itself. You won't get shaken out on a small move, lower or higher, against you, whatever direction you might have been, because you've got that, other side to it that reduces your delta. You might actually stay in it and capture a little bit more money. I think it's. I think strategically, I don't think you can argue with the strategy.
Yeah, and what we'll see a lot of customers do as well. So, let's say, for example, you buy the futures contract, sell the call against it. People will put a stop loss on that futures contract. So, if it goes too far against me, they just get out. And then once that hits, they'll close the call and be like, all right, wipe my hands, I'm done. Yeah, it's some of the ways that they mitigate their risk.
Awesome. Good job out of you. While I let Quentin go away, 855-238-2789 or 855 Be Tasty. Phone lines are all open. We'd love to hear from you. Give me a little dee 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 dee. Oh.
He's back.
Yeah, I get that reaction.
It's you again.
Walk in almost every door. Yeah.
No.
What's up, Glenn?
How we doing, guys?
I'm doing good. How you doing?
Fantastic. Red Shirt Thursday. Can't complain.
Oh yeah, you are a suck up with the girls. I noticed that.
He's smart though. He's smart. You know that?
I give you credit. I don't hate the player.
Yeah.
I don't hate the game.
I'll be honest with you,
I love it all.
The game.
I love it all. I really do. So if I was you, I'd have all the red shirts that they make. I would. So good job. Good job.
You can't be a sugar baby when you turn 35. When you got gray hair, that's you're out of the. You're
like an unk.
Yeah, you're out of that. So
then
take
you move out
advantage.
of that, but then you move into the. You could model for the touch of gray.
Oh, I thought he was going in a different direction. I think he was actually going to compliment you, so it could be 2 against 1 here. But no, you messed that up, didn't you? I mean,
I think that is a compliment.
I don't think it is. I don't think it is, Glenn. Try to backtrack. Go ahead.
I've been told young George Clooney, like middle-aged George Clooney.
That's good
is kind
too.
of the realm of where
I've also been told he's delusional.
I can see it.
Yeah. You squint a little bit? Squint and one eye? Oh.
I don't know.
That's okay.
I don't know.
That's okay.
Well, what do you got for us today, my friend Glenn?
Today, Thursday, October 16th. Not too much going on in the FX space.
Why?
It's interesting. When
you think FX space is, news related more, like maybe because of the government?
Yeah, you don't have the CPI, PPI, all the employment numbers.
Exactly.
Like it's kind of.
So it'd be similar to earnings. It's without an earnings season. That's just something you can expected event risk. And right now we have kind of some ad hoc event risk. and that's harder to take.
What does that mean?
Direct, just because
Like a tweet,
what we're
cooking
waiting
oil.
for is on policy.
What moved on cooking oil? Was that like did that nuke like the Japanese yen or something? Or it's
Norwegian krona, 1-to-1 correlation.
Really? That would be amazing.
That would be cool. And so, you don't have as many people perhaps taking directional risk into a space where anything could change at any given moment. But we're seeing, yesterday I ran through with Jamal and Mike some correlations, and we typically see historic correlation between equities and the US dollar be negative, moving inversely with each other. Right now on a 3-month basis, we're right around 0, coming off of a positive correlation actually from recent months where we did get kind of this overall US asset risk with US assets moving in tandem. So we're kind of trying to figure it out from a US dollar space. So we're not seeing a big move in euro at all, pretty tight range there. A little more of dollar strength against the pound. Again, we've had some BOE speakers as of late that aren't really helping the British pound, so a little more momentum there. I'd be curious around. We're just above the 134 level. If we break that, I'd be a little more curious if we can run there. But other than that, if you're looking to get kind of back into that rhythm of trading scheduled events like we had with the US dollar very consistently before the shutdown. You can look to other currencies. For instance, the biggest mover of the day right now is Australian dollar, not necessarily against the US dollar, but if you look at all the crosses, you can see the the Australian dollar is a lot weaker because of some unemployment data overnight. So the time difference is a little perhaps constraining, but I think that was around 8 or 9 for our time last night. Markets are open. And so I'm looking at something like a Australian dollar Swiss franc.
Ooh, I was looking at the euro, but sure, yeah.
Yeah, so I was looking at euro, pound. It's still kind of in the middle of the range. If you look at Australian dollar Swiss franc, that's the one where it's getting not only beat up the most, but also kind of pressed against a historic range. So we haven't seen too many prices on a daily time interval below these price levels. So if you are playing a reversion, perhaps that's the best chart that gives you some historic context. If we trade through it, if you're not a contrarian trader, maybe we get some momentum breaking through those levels. But I'm having to look past US dollar right now because I'm trying to get some major movement. And
I like that. I can show that here on the platform. So if you go to the TastyFX tab, it'll be in the watch list here in the, where did I find it? Somewhere in here.
Yep.
There we go.
There you go.
So it's the non-US pairs because you obviously don't have the US dollar denominator. When you go to the trade tab, you can pull up the chart and they have really, these go back to what?
In some pairs, 1990. So
it's a beautiful year. That was the year I was born.
There you go.
And you can buy it from here. You can do this in any size you choose.
No input from Pops on if that was a beautiful year.
Of course, firstborn son, beautiful year. But I was
Happiest day of my life.
Yeah, I was kind of an ugly baby though, unfortunately.
You what?
Ugly baby, because I had the infant acne.
Oh yeah.
Like this Seinfeld episode.
No comment again.
You're telling the truth.
Yeah,
I thought you were beautiful, but I would show your picture, and I had the picture in my. I don't have a wallet. I just stick my money in around my credit cards, kind of thing. And we didn't do the
gender reveal or that.
No, we didn't do the gender reveal. We didn't do the the beautiful baby pictures.
Okay, sure.
weren't
staged.
Weren't staged yet. Yeah.
Yeah.
Like you could go outside the hospital and do that, but they didn't do it in the hospital. Like now in the hospital, they bring special blankets for the baby and they take different pictures. The baby looks absolutely beautiful. He looked like he came out of a war. Okay, so but I thought
out of a war.
Well, a war zone.
Yeah.
I mean, I thought he was beautiful.
Right.
But he had, so it was just a blue and white like bad swatched around kind of blanket. His hands were a little bit out, so they were a little bit like a little bit messed up, and his face had all like these like pimples and stuff on it. I thought he was absolutely beautiful. But I would show the picture to people, and the reaction on their faces were like horrified.
It's
like, you know, like it was
Kramer does that in Seinfeld where he's like,
no, I didn't. Oh no,
it does one of those.
Yeah,
It's just
it was.
maybe, yeah.
It was like it took me years to actually see the picture. But you grew, you ugly duckling. You became a beautiful swan.
There you go.
That you are today. So all's well that ends well. It's not how you start the race.
Yeah,
it's how you finish it.
That's right.
Trading, birth, all of it comes to be
Whole
the
9
same.
yards.
Yes, yes. 855-238-2789 or 855-BE-TASTY. That's the phone number. Call. Give us a buzz.
Gold up 80.
What's that?
Silver up $1.80.
It's a huge move in these metals. I mean, that's a 3.5 without a downtick. That's a 3.5 over 3.5%.
You guys need an FX pair with gold.
You know what's actually really funny? We get a ton of calls about that. But yeah, it's just a spot gold. There's no leverage spot gold product per regulations.
Ooh.
If there were.
That sounds like an excuse.
It is, absolutely. Yep.
That sounded like that was like, oh, don't please.
That sounds like a you
I
problem.
write to my senator
Yeah.
every week.
That sounds like a you problem. I'm not gonna lie. Sounds like a you problem.
Yeah.
I'll figure it out.
I actually-
I don't want to put that in the priority queue above your description column, so it'll
That
have
one,
to,
it'll
have to
maybe one day.
for
Maybe
now.
one day, Yeah. But
Does sound like a you problem.
It's okay.
Still going with that.
Yeah.
All right.
All right, my friend.
Thanks, guys.
We're gonna let you go. Yes. We'll go to some chat here from the YouTube chat. We'll also try to get some phone calls. If you call in 855-238-2799, 855-BE-TASTY, numbers right below. Best number to call. You got a chat question for us, son?
Not yet. If you have some, post them in the chat. I got some.
Slow day in the talking world. Let's take a look at the market then, and let's see what I'm going to do for option trades today. Even the S&Ps are up 24. They're trading just a couple of handles off of their highs. I actually thought we were going to go a little bit lower with volatility staying bid here. Your 0-day trade that you put on is trading about 360-ish. I know you're.
Yeah, we're there. We're close.
335. You're like on the bid or away. From the market. ASML up 17, CRM up 14. AVGO continues to climb. I don't know if you look at AVGO, it's been a market leader for some time now. Had a little bit of a downtick here. It has not had one.
Micron, AMD, all these things. It's just
It's the usual suspects.
It's the usual suspects, and it's just a rotation. Like 2 or 3 or 4 of them every single day are up. 4 or 5%, and then there's a handful that are down, and it just kind of chops between baskets of the semiconductor stocks.
What are we gonna buy now, right?
Yes.
Apple's a little bit weak today. It still is down by about $1, 93, 91 cents now. Actually trying to catch a little bit of bid. I thought maybe there'd be something to do in Apple. It does have earnings coming October 30th, and Ivy rank is only 26. So for that reason. I abstained from making a trade in Apple. Amazon was another lagger in the market. It's up $2 and change. Ivy rank of 47, better than what you just saw in Apple. Earnings too, October 30th. So I'll probably look to abstain from there too. Leads you to put on trades possibly in one of the indexes. I did a SPX broken wing butterfly on the down day not too long ago, just a few days ago. Thought it would come in a lot more than it has. Usually when you catch a 100, 150 handle move to the upside and you put on a trade that has long delta to it, it usually comes in a lot more than it has. The spread I put on it was around $1.65. I'll put it up there for you. Here it is at $1.20 mid-price, $1.20, $1.25. Put this on when the 100 strike was around a 15-ish delta. It has a $25 embedded short put spread, and it's only come in by about 50, 60 cents. I would have expected to come in by almost $1 by now. Why hasn't it come in as much? Well, volatility hasn't moved in that time frame. You take a look when I put that trade on, we'll go to /VX here. Put that trade on when volatility was closer to around 2030-ish, and volatility is 2075.
We just got, so that was your CRM trade that you did for for your option trades today podcast. I think that was last week.
That was just last week. Yeah, that one moved real good.
That's
got filled. CRM up $13, $249. Just got filled at $675.
But that's a vol play.
That's a vol play. So I put it on as delta neutral. The stock actually ran up.
And this spread was trading at 850-ish.
It was trading about 850 just about 48 hours ago or so. This is to your point about volatility coming in some of these high-flying stocks that we've seen. That's what that product was. That was good.
Good job out of you.
Mm-hmm.
It's a nice one. Yeah. Does that feel weird that you get like a
win?
A good job out of you.
It's the first time.
Because you kind of didn't respond to that. You were like, you had like a little short circuit a little bit.
It's not something I'm used to. I don't usually get it. I actually thought it was your 0-day trade printing, even though the market's going a little bit higher.
I know. I'm waiting for that. It's close. What do you think we do? What do we do? Like in Palantir, I don't have a position there. Do we get it? Do we step in front of that train?
Oh, man, Palantir, IV rank of 43. You could see volatility expanding here. It's going to have earnings coming November 3rd. You got enough time to look at something from here. If you're going to do something in Palantir, I think you have to look at it with defined risk here. You look at the volatility in here, though, man.
There's so much vol on the call side.
So what about
I'm thinking you do like the 150, 220 strangle and $9.
150, 220. I mean, that allows you to go further out of the money, but doesn't really have a premium type play to it. But
you're $70 out of the money versus 25 on the downside. I mean, that's where you're giving up the premium for basically flat delta, but you're 70 points out of the money, or 50 points out of the money.
Right. I'm looking
twice.
I don't hate it. I don't hate it. I was looking at a 1x2, but a skip strike one. Just the undefined risk to the upside on these stocks really seem to bite you in the butt here. So you got to be careful. So then you're just looking at a broken wing butterfly, which is
slow. It's slow.
Too slow. I
mean, you want to do so. You don't want to be naked up there.
I'm
scared.
I'm trying not to be, and you can't go. I wanted to do something $20 wide, and you can't even go $20 wide 1x2. You only collect like $1.
Oh, doing the
undefined risk trade. If you did like a 200, 220, 1x2.
What about you go 30 points wide?
Yeah, you
Iron Condor.
I think that's all you're subject to here. Unfortunately, I think that's all you can do.
It's a big wide one.
Even the S&P's up 34. Your
cancel crash.
Your cancel crash and cancel your 0-day too. It's probably back to unchanged or a small 10 cents loser or something.
All right, I did Palantir 607.
You did. I'll put it up there. You did the 220, 250, $30 wide, 220, 150, almost like a synthetic strangle here, right? Going $30 wide. I like it. I mean, you're paying a lot for these wings, but that's what you do to use a lot less buying power.
Yeah, and you take off the tail risk on the upside.
Oh, you have to.
Take a little bit.
You have to.
Take a little bit off.
Right. Good job. Good job out of you.
Yep.
All right, my son, you know what? Let's take a quick little break then. I got to do a PP anyway, so we'll do a quick little break. We'll come back. I've got option trades today immediately following these messages. If you want to put up real quick cherry picks, Beth, if you have it.
tastylive.com/newsletters. You could sign up for that.
Perfect. While you have this extra long break, I would love to see you do that. If not, we'll go to a quick break. We can do that right now. We'll take a quick 90-second break and come back. We got Liz and Jay next. Peace.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier, though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
Here's what's costing you money. You're trading 0DTE options with investor psychology. It's financial suicide. Every time you apply buy and hold wisdom to 0DTE trades, you're essentially donating money to market makers. I had this same issue, but after years of research and hundreds of 0DTE trades later, I found 4 rules that you can follow, if done right, can flip your mindset. I'm Errol Coleman. I've spent years trading short-term contracts like 0DTE, and I made the mistake so you don't have to. The core process of 0DTE trading isn't that different from investing. What is different is a time window. You have minutes or hours, not months or years. It's like leveling up in a video game. The rules don't change, but the speed forces you to build a whole new skill set. Now, let's focus on the 4 main tactics 0DTE traders have mastered that your classical investor really struggles with. I'll break down how this framework has shifted the way that I approach time and trading at the end of the video, but before we get there, let's start with number 1. There is absolutely no room for let's see how it plays out. Every 0DTE trade should have a risk cap, period. But here's the thing, most traders either forget to define their risk or never build the habit in the first place. If you're doing that, you're not really trading, you're just donating money to the market. The truth is, there's only one thing you can actually control in this game, and that's how much you lose. But if you lock in your risk before you even hit send, you take back control. And that's where real confidence comes from. Not wins, but knowing you manage the loss on your terms. I noticed after journaling a lot of my trades, after I strung together a few green trades, I had a tendency to oversize into my next trade or start to overtrade. And it was just a snowball effect from there. Where my confidence really came from was my ability to manage my risk. I learned that these green trades didn't add any confidence to my trading personality. If anything, it was my ability to manage the downside. Because now, I'm not gonna hesitate on taking any trade. I'm not gonna hesitate on pulling the trigger because I know if things go south, I'm gonna be able to manage myself in my trading. And this line from Dr. Brett Steinbarger, a clinical psychologist that specializes in working with traders, shifted my perspective.
I found myself making all the emotional mistakes that I was reading about in the books. And I realized that my own splits, my own inconsistency, my lack of maintaining control was interfering with my trading. And I became interested in applying the psychological techniques from my clinical work to day-to-day trading, first with myself, and then as others contacted me, I informally ended up sharing some of the methods with them.
Steinbarger called it resetting the emotional thermostat. And that concept applies to 0DTE traders every single day. You don't need to catch the perfect trade. You need to be in control of what happens when you're wrong. And he's right. That level of control is a skill. And like any skill, it's something you can train. When I started to implement this into my trading, it really changed how I look at the market. But for me, it started with one simple habit: capping my risk before I ever click send. Step 2, they take trades that make sense. You ever felt completely overwhelmed by the 1,000 different ways to trade? 0DTE options, iron condors, dividend stocks, jade lizards. It feels like you're supposed to master all of them at once. I've been there. And I've been trading for 7 years and trading options specifically for the last 3. And I still remember feeling completely overwhelmed by the 1,000 different ways to trade. It sucks because I've learned so much since then. What I was missing was that you need to find a trading approach that best reflects your personality, your risk tolerance, and your mindset. Risk reward means nothing without probability. This is a risk reward sheet that shows you the win rate you need to have a positive expected value on how much you're risking to make a certain amount. This isn't theory, this is math. It's probability in action. If you're risking $1 to make $1, you need to win just over 50% of the time to be profitable. But if you're risking $1 to make $2, now you only need to be right about 34% of the time. That's why knowing when not to trade is just as powerful as knowing when to click the button. Because if the setup in front of you doesn't have a favorable expected value, you skip it. In the first row of this chart, you can see that just break even, you would need at least a 50% win rate to break even. Now, if you have a 1 to 4, you would need only a 20% win rate to break even. And remember, with 0DTE trades, that timer's already ticking. So when the edge isn't clear, the premiums are weak, or volatility's dead, you walk away. That's how the pros play this game. They don't need a trade to be active. They trade to be effective. Number 3, they build scenarios before price gets there. The moment price starts moving fast and premiums start fluctuating, everything changes. That solid plan you had just 5 minutes ago doesn't exist. Now you're hesitating, second guessing, or worse, forcing a trade that doesn't even fit your setup. This is where seasoned traders separate themselves. They don't wait until the moment to decide. They plan before the market even opens, when their head's clear and emotions are calm. And they do it with a simple framework. If this happens, then I do this. But if this happens, then I do this. It's called scenario building, and it's not just good practice. It's a mental model. Here's how it works. If NASDAQ pulls back to a level I deem support, then I will look to sell puts. But if we slice through that level with momentum, then I step aside and wait for confirmation lower. By walking through possible outcomes in advance, you're training your brain to act on logic, not panic. Because the truth is, in the moment, your brain is more vulnerable to bias, fear, and impulse. Studies show that stress reduces activity in the prefrontal cortex, which is responsible for logic, planning, and impulse control. Instead, control shifts to the amygdala, the part of the brain that handles emotional and reactive responses. A consistent finding across studies is that individual differences are the norm rather than the exception when it comes to stress reactivity, with the prefrontal cortex playing a central role in how we process and regulate and respond to stress. And that's why you freeze, second guess, or chase bad trades. It's not always about discipline. Your brain is wired to survive, not trade. And this is exactly why using a if-then mental model is so powerful. By deciding ahead of time how you respond in specific scenarios. If price reclaims X level with strong delta, then I'll enter. If it rejects, then I'll step aside. You're locking in decisions while your prefrontal cortex is still in control. So when pressure hits, you're not thinking, you're executing a plan. That simple shift helps keeps emotion out of the equation and preserves clarity when it matters most. And you simply just follow your map. It's one of the cleanest ways to stay consistent, especially with 0DTEs, where time decay is brutal, volatility is unpredictable, and hesitation costs real money. And that gives you the confidence to execute or sit out with clarity and not emotion. Number 4, I had to build self-awareness into my process. At the end of the day, the only difference between long-term investing and short-term trading is the duration you hold the asset. But that one detail changes everything. Because when you're trading short-term, especially in fast-paced environments like 0DTE, you're dealing with a much faster feedback loop. More decisions, more emotions, more chances to get it wrong. And at first, that was overwhelming. But over time, I started to realize that feedback loop was actually an opportunity. Because it gives you data faster. It allows you to fail faster. And more importantly, to learn faster. But only if you're paying attention. For me, that meant building in consistent time to journal. And I don't just mean logging trades, I mean really breaking them down. What I was thinking, what I was feeling, how I responded to certain setups or situations, and I'll give you a personal example. After going through my journal over several weeks, I noticed a pattern I'd been blind to. After about 3 green trades in a row, I tend to get sloppy with risk management. It wasn't always dramatic, but my stops got wider, my sizing got looser, and I'd take trades I wouldn't normally touch. And here's the thing, we all have different personalities, risk tolerances, and emotional triggers. There's no one-size-fits-all formula, so if you're not actively studying yourself, you're not really evolving as a trader. You're just reacting. That feedback loop is fast. That can be brutal, but it can also be your biggest edge, only if you're willing to look inward and do the work. If you like this video and you want me to cover any other topics, drop them down in the comments below, and we'll catch you guys in another video. There's this really popular idea floating around in trading circles today. That one giant algorithm secretly runs the market. Every time a breakout fails, people blame the algo. Every time their system gets run, they blame the algo. Every sudden reversal, same story. And honestly, when you're new, it feels that way. It feels like there's some hidden hand pushing price around. This idea gained a lot of popularity online among newer age traders. But when I dug deeper, I realized there's much more logical and a far more useful explanation. The market doesn't move because of one hidden code. It moves because of a process, an auction. And the framework that explains this process is called auction market theory. By the end of this video, you're gonna see exactly how it works. We'll walk through the history and break down with a special guest using standard deviations, and I'll show you chart examples of balance and imbalance playing out in real time. So let's start with the basics. At its core, the market is a giant auction. Buyers bid, sellers offer, and price moves until they agree on value. And out of that process, there are two real market states: balance, a price range where buyers and sellers agree on price, otherwise known as fair value, and imbalance. This is when prices move away from that range. It's a directional move, searching for a new area of value. That's your breakouts, your trend days, price discovery. These ideas are as old as time. Back in the 1980s, a Chicago Board of Trade trader named Peter Stadelmeier developed something called market profile. It was his way of visually representing the auction process. And it caught on so much that the Chicago Board of Trade actually published it in their official training materials. Think about that. Before algos, before high-frequency trading, traders were on the floor already understanding the market as an auction, and that hasn't changed. Even though the tools are digital today, the core process is the same. Buyers and sellers negotiating on value. All right, so if the market is an auction, the big question becomes, how do we actually measure what's normal versus what's extreme? That's where standard deviations come in. Here's the math made simple. About 68% of all outcomes fall within one standard deviation. About 95% fall within two. Almost everything else is rare out in the tails. Now, when you apply this to markets, those ranges start to line up with value areas. Most of the volume, most of the trades, they cluster inside that one standard deviation. That's your fair value. Push beyond it, and you're in extreme territory, the market exploring for new levels of value. This week, I sat down with Frank to really unpack this. Let's roll that clip.
A classic way to think about standard deviations is a rubber band effect. Now, 68% of the time, that rubber band will stretch out and maybe get to its boundaries, and it'll probably come back in. That's one standard deviation. Now, of course, on the flip side of that, 32% of the time, that rubber band will stretch out and break. That's what we call an outlier move, or a black swan, 2 standard deviation, 3 standard deviation, and beyond. Rare move, but it does happen from time to time.
And notice how he ties it all together. Auction market theory explains the behavior, and standard deviation gives us a way to measure it. Now let's put this into practice with charts. Here's an example of balance. Notice how price keeps rotating inside yesterday's value area. Back and forth, overlapping ranges, no one really taking control. This is balance. The market is saying, we agree this is fair. Now, watch what happens when new buying pressure comes in. Price breaks out, volume shifts higher, and suddenly we're in imbalance. The auction is searching for new buyers and sellers to establish value at a higher level. Let's look at another example. On this day, the market bounced for hours in the morning. Then around midday, aggressive sellers came in, broke value to the downside, and pushed into imbalance. Notice how the order flow picked up, volume accelerated, and the market quickly found a new level to rotate to. These transitions between balance and imbalance are the heartbeat of the market. In balance, the market is more likely to be range-bound. You expect rotations. In imbalance, the order flow is with the direction. You expect continuation as the auction explores. And when you frame your trades around these states, you stop guessing. You're not asking, why did this happen after the fact? You're reading the logic in real time. So let's bring this all together. The market isn't run by some secret algo pulling strings behind the scenes. It's run by the auction process. Auction market theory gives us the framework to understand balance and imbalance. Standard deviations gives us a measurement of what's normal and what's extreme. Together, they explain how the market actually works. And here's the real takeaway. Once you see the market this way, every move starts to make more sense. Instead of randomness, you see logic. Instead of chasing patterns, you understand context. And that context is what gives you conviction. If this video helped connect some dots for you, make sure to subscribe and we'll see you in the next one. Good luck, happy trading, and we'll see you in the next video.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Everybody, and welcome to the Red Shirt Thursday edition of the Liz and Jenny Show. I'm Jenny Andrews. That beautiful blonde is Liz Deerking, and that handsome devil is Glenn. FX Glenn, welcome.
Hey, Glenn,
Hi.
You get 6 gold stars, 2 thumbs up, and everything in the entire world. You handled those boys smooth like butter today. Don't hate the player, hate the game. You come in a red shirt just because they're old fakakkas. You get all gold stars, 2 thumbs up.
Well, thank you. I'm getting redder and redder. You guys
you're great.
still
That's red.
outdo me every time in terms of hue and saturation. But I'll get
and saturation.
I'll get brighter. But at least this is less Merlot.
Yeah, we'll take it. We'll take it. Any shade of red, we'll take it. I'm cracking up that Liz is trying to say how they're like old guys, and she referred to them as fakakkas. What?
Fakakkas. So yeah, because they acted like they were old fakakkas when they were talking to Glenn. That's the only reason I referred to that. I know Nikki's. Do you know what year Nikki was born, by the way, Jenny Andrews?
80.
He referenced it. 90! 1990! Yes.
I mean, I threw out 80 because it's like I don't have any friends who were born in the 80s, so I just threw it out there. But I guess that would make him too old. So
I almost fell off. I actually almost tripped myself because I was walking when I heard that.
Because you thought that was really young?
Well,
I don't know how to. Can I plead the fifth?
we don't have any friends who were born in the 80s. So if you're born in the 80s, that seems young to us.
So the
Okay,
90s
fair.
for sure. Yeah.
Okay.
So yeah, like if you tell me you were born in the 2000s, and Glenn, you probably were.
Glenn, you're 01, aren't you?
01.
02?
01.
01. I knew it.
Oh my-
You were born the year that Jenny and I got married. We
Yeah.
didn't get married to each other.
I was
We
going
didn't
to
get married
say,
to each other.
that would
Both
be an
got married
interesting
last week.
wrinkle in your guys' history.
When's your birthday, Glenn?
September 4th, same as Beyonce's.
Oh my gosh! So it's right around
Beyonce's. I love it.
Same as Beyonce's, and my daughter's September 5th. But I was going to say,
nice.
so you were born right before September 11th. So you were home in the hospital with your parents when it all happened. Liz was on her honeymoon when it happened. I was planning my wedding when it happened.
No. I was home. I was on the trading floor when it happened.
Oh,
Oh, I thought you were just coming home from. I thought you were stuck in. I thought you got stuck in Hawaii.
You always bring this up. I was on the trading floor for September 11th. I got home on Sunday, went to work on Monday. September 11th was a Tuesday.
So what's the whole honeymoon story of September 11th?
It was somebody else. They got married 2 weeks after me.
Oh, who got stuck?
I got married August 25th, so I was home for September 11th.
Okay.
One of your other friends was stuck. It was not me. We've only known each other for 40 years, and you don't know this.
So it was that's kind of crazy that you were born right then.
Yeah. I can't say I remember it, but yeah, definitely later than
So how did
1990.
September 4th. So do you celebrate your birthday every Labor Day weekend? Like, do you just go crazy every Labor Day weekend?
Yeah, usually it's nice because it's either very connected or not connected. And so either I get like 2 birthday weekends or one long one. So
I love
win-win. This year I was with Tom and Tony in San Fran, so that was a ton of fun.
Oh, you spent your birthday with Tom and Tony?
Yes, I did. Best birthday to
I
date.
did. I did that once.
Once, never again.
Once. It's just like Johnny Dangerously. I did that once. I'll never do it again. He tried to kill me.
This is when you guys were all in the clown car.
I mean, I don't know if you know. I mean, it's not. We're women. It's not our. I understand he tries to overfeed every boy that comes on tour, but it was my birthday, so like there was so much food that was delivered to us, and by the time like we had tapped out, Jenny threw a steak on the floor, like a $50, like $100 meat on the floor.
Not on purpose.
We were just like done, and then all of a sudden, a cake the size of Texas rolls in. I was like, what is happening?
Yeah. Yes, I do remember that, and we had tapped out long before the cake rolled in. I do remember that.
Oh yeah.
And so one time, Liz, I don't know if you remember this. Tom and I were on the road for our birthdays because our birthdays are just days apart, and we had like a party in Atlanta. We had a viewer who made this giant happy birthday sign, and everyone signed it, and there was like a party at the Atlanta show.
I do remember that.
That's awesome.
Yeah. Those were the days. Those were the days, Glenn. All right, Glenn, I've got something exciting to show you. If you want to jump in the platform,
please.
If we want to jump in the platform. Here we go. I'm going to go to TastyFX. And our trade that we put on with you last week is winning.
Oh, nice.
Hashtag winning.
There you go. A little reversion there. Some yen strength.
Yeah, so let's take a look at this. So when you were on last week, we put this on, looking for a little bit of a down move. Now, we have gotten a little bit of down move, but not too much. We're up like $30-something. I don't know. What do you think?
Yeah, if you can scroll to zoom in a little bit on that price graph. Yeah, so you had your am I correct that you have a take profit in there? It's just right at the end. Okay.
Is this it right here at the dotted line? Yeah.
So what you could do is if you click on your 0.05 lots, that line, to show your take profit, zoom out.
Okay, there.
So you didn't attach a stop loss because you wanted to let it ride and you didn't want to get stopped out too soon. So what you could do here is now this is moved in your favor if you still want to keep that take profit level, but you want to make sure this isn't a losing trade. You can actually move that stop loss above the current price, but also below your entry price as kind of a almost guaranteed winner, if you know what I mean. So if you wanted
clever, Glenn. That's clever.
If you wanted to keep this running, otherwise, I mean, you could say that when you looked at it, when you put the trade on, you had we're looking at daily candles. You had 2 strong days in the right direction, whereas. So that if you put it there, that would be like the price it is right now.
That's the price it is right now. How do I know where we got in? Or just leave it right here. That's where we got in.
Or yeah, you can you could split the difference. Whatever. But
I like where you're going with this. Where if it starts to run back up, then we're not going to let a winning trade turn into a loser.
Right, and you can also think about like when you put this in, you had 2 days that were very strong. The price got well below where it is right now. Didn't hit your price level, and it's kind of oscillated in that range for now. So I could see it in one of 2 ways. If you guys were very active traders in this asset class, you've kind of had some momentum fizzle, and so I could see a line of thought where you just want to close it out at the current price. It was a winner, wasn't the winner you hoped it to be, but you want to redeploy that. Or if you are looking to kind of close that gap, get to that take profit level because you think it still has some more room to run, then yeah, you could add some downside protection and make sure this doesn't run away from you.
We stayed smaller with this. Remember, we said, well, we're going to start small. So if we're wrong, we could scale in and add to the position. So I know we're only up $30 or $32 or something, but we started with a smaller size thinking we could add to it if we're wrong. So maybe we do just take it off for the $30-something. Glenn, what are the fees for opening and closing these?
So yeah, there are no commissions for opening or closing. because of how TCFX is compensated. So it really is just that spread. So right now, you're seeing the difference between the sell and the buy price is 1.8 pips.
Okay.
So that's really the only thing you're losing here. And if you are factoring in all the costs, I imagine being short this position does result in, because we're looking at the swap bid. Every day you hold on to this, you're losing a pip because of the overnight funding
Yeah, get out of that.
All right. So let's get out of this one. And what do I need to do? Scroll this way.
Yeah,
and
so you can close it from there or from the chart as well. So now you're out of that. And if you think about it in the kind of tasty philosophy, in a perhaps a backwards way or a post trade thinking, this is around 50% of your kind of take profit level. So if you are
good job.
So if you are thinking about that, it's not like you didn't get some good value for the margin that you had to put up for it.
Right. Okay. So we made a little bit on that, but you brought up that whole point of the swap bid or swap ask, and we were actually like losing day by day in that.
Mm-hmm.
What's one of them that looks like, maybe not too bad of an entry point that we'd be making money every day?
Jenny's asking what's at an extreme that will make money for us every day.
No, it doesn't have to be at an extreme, but just I'd rather have one on where I'm making money every day instead of losing money every day.
Absolutely.
The opposite, right? If you would have done the opposite, would you have been making money every day?
Correct, yeah. Because the euro the European Union has higher interest rates currently overnight than Japan does. But if we're looking just at carry trades, potential carry trades here, the US dollar narrative is still the one that holds true to the most magnitude. So we're seeing US rates be the highest of major central banks. And so long US dollar positions against selected currencies like the yen or like the Swiss franc will yield you some of the highest overnight carry. And luckily for you, if you wanted to get into something like that, we are having a pretty, not substantial, but consistent US dollar pullback today. So we're seeing dollar down against all currencies except the Australian dollar to varying degrees here. But yeah, so if you're looking at, this one would be more of a price extreme than that dollar yen, which we've seen run in both directions here. Now we've dipped back below that 0.8 level that we held for about a week here, but a strong move yesterday. I did some correlations. This one is really trading almost 1-to-1. It's 0.91 with the euro dollar. So the euro and the Swiss franc moving pretty much in tandem, not as much of a unique safe haven bid that we've seen in other times with this Swiss franc. So that's what you can expect if you have some euro-dollar exposure in your portfolio. But if you scroll out here, just using your mouse on the chart, you can see that we've only really dipped below this level a handful of days recently.
Right.
And before that, it wasn't until 2015 that we were ever below this price level. So that's not to say that the global regime de-dollarization isn't still a possibility, but if you're looking for historic extremes, this one's definitely holding up.
What do you think, Liz? Get long the US dollar against the Swiss franc?
Do it.
And there's also an interesting exercise here as well, as if we were comparing the swap ask here and the US dollar yen, you would see that in pips, the dollar yen will yield a higher pip value at indicatively 1.35. But you also factor in margin requirements to this equation. And because dollar Swiss franc is only 3% and dollar yen is 5%, with the same amount of capital.
Where do you see that?
It's in here. I think it's in here, right, Glenn?
It's in here. I'm trying to get it posted on here.
This is tricky stuff, Glenn. This is tricky stuff. I mean, Glenn's going to have to come on every Thursday until we retire, Liz, because still.
Yeah, that's what I'm saying. I mean, it's all up here for Glenn. We're just going to blindly do it. Press that button, Jenny Andrews.
Yeah, it's just it's interesting to note that because of the leverage as well, you're actually getting a greater carry with the same capital in that
But
dollar.
how do we know which one's leverage more and which one's leverage less?
We have it. It's on the Tasty Trade webpage where it lists all of the available currency pairs to trade, much like it is for the futures products as well. But anecdotally, if you were just bouncing around here, you could put a position of the same size and see your margin requirement.
Can I ask a question? Can you guys, you know how they send out the cherry picks and they give the futures cheat? Would you ever print an FX cheat sheet?
100%.
I know
Absolutely.
it will change. Like, I understand the futures cheat sheet we need every couple months because the values change. But I would love an FX cheat sheet that is right in front of me. I'll laminate it and think of you every time I look at it.
Dr. Data owes me a favor or two, so I'll try and get in on a cherry picks edition.
Perfect. Because that would be good. I think that would be an excellent cherry picks.
Yeah.
Now, you didn't mention the Canadian dollar, which has this $1.67. Oh, but then we don't want to get long it here if it's already at the top.
Did you get it? Did you already trade something? Did you already get in with what we were
No, I didn't.
Let's
yet.
get in because Glenn's a very busy man. He's working double time. He was just on the show before ours. He was on with Tony and with the Bat Brothers, and now he's working double time. We got to let him get back to his real job.
No, this is fun.
Okay.
It's the highlight of my day.
Okay. So let's see if we can do this trade. I've got to buy it. It's like Glenn's on every Thursday, and he's just like, TikTok, let's go, girls.
I know.
And so if we do 0.1, $795 in notional value, $30 in margin. So let's increase this to.
Yeah, you got to increase that. Go
10.
Yeah, that's perfect. $300.
Right? 10. $300, which is $7,954 in notional.
Beautiful.
What do you think? Is that big enough? Glenn, is this big enough?
For what we have in here, that's big enough.
Yeah.
Suddenly Liz is the FX expert.
No, absolutely. It's your guys' account, so that's the
I figured I
kind of
should
trade
just chime
size
in
that
occasionally. So
that's what you guys have been
so-
comfortable with. So yeah, I don't think that's ridiculous.
Deal confirmed. I love
There you
that.
go. Now we're in
Deal
long dollar
confirmed.
USA.
Now we're gonna.
But good call out on the dollar Canadian dollar. From a price perspective, we're at US dollar highs. But I'll have to look into that swap ask and do some number crunching because that might be. Actually,
now
no. I know what it is. Sorry to cut you
I
off.
know what it is.
Aha, in here. The roll on US dollar pairs, on all of these pairs, is usually T+2. So on Wednesday, you'll see kind of the weekend roll. So you'll see a lot higher values for those swap bid and swap offers. Whereas because of our geographic proximity, I think, US dollar, Canadian dollar operates on a T+1. So today at 1.67 is a weekend roll. So that's 3 days of interest.
Okay. Okay, so here, if I put my take profit here, which isn't too high, and it says 49.1 pips. It's almost, you said we're almost dollar to dollar, so that we'd make like $49 or $47.
Yeah, so the exchange rate's at around 0.8. So that would be.
It's right here, 0.8. Okay.
Yeah, I mean, that's good. We're putting in tight stops.
Yeah.
Yeah.
And
slow and steady.
As you can see, that's around, if we just erased all the gains the Swiss franc made yesterday, we'd be right there. Before I go, I do have one graphic I just want to pull up for you guys.
Oh, you had a plan today.
I didn't. Sorry, Glenn, I didn't know.
That's okay. Sometimes I have a plan. It's very rare, but when I have one, I like to get it out.
All right, I can't see it. So she's got the take profit in. Done? Okay.
Yeah, click in the chart just to confirm it. It should say.
Oh, didn't I? Oh, okay.
Oh, there
is it in there?
Nice.
Yeah, I can see the line, the dotted line, and I can see nothing. So
yeah, there it is. It's there. Okay, so where's that? So time for Glenn's graphic.
Yeah, just have one slide if we can pull that up, please. I just wanted to cover a little check-in earlier this week with Jamal and Mike. I did some correlations, and today I wanted to get into a little bit of what we can expect from standard deviation data that can tell us what we can expect from these pairs in terms of daily price change. So to help
I
you guys
cannot wait.
set your take profit levels, what you can expect, kind of tying them to the time horizons that you're expecting.
Okay, so let's pull up Glenn's slide.
Yeah, I think Master Control will do it in a second.
Yeah, Master Control will do it.
Master Control, have you, or not Master Control, Glenn, are you a Seinfeld
I respond
fan?
to Master Control as well.
There you go. Are you a Seinfeld fan? Have you watched all the Seinfeld, or are you too young for that?
I have not watched all of them. I've watched some. The funniest.
Oh, because my reference in the chat gets it because they're old like us. Why don't you just tell us about it? Because when he's calling the movie phone when he can't get through. But yes, we've got it up. So thank you. Now we need some explanations.
Yeah, so this is just using 3-month standard deviation metrics on all of these are in pips. And so this tells you kind of what an expected move tells you, that roughly 68% of the time, a daily price change in these pairs will be approximately these pip totals. So if you see a move in euro dollar there in the top left of 50 pips or greater, then you can either speculate that this is one of those 1 in 3 occurrences where this will be an outsized move and maybe this momentum continues, or you can take the contrarian stance of this is more elastic than it usually is, and I'll play the opposite side there. And you can see kind of the different characteristics as a nature of what the actual price is. So we're seeing a very elevated in pip level in that dollar yen and that pound yen. That's also a function of that those prices are very high. And so on a percentage basis, that kind of nets out, which is why I look at those percentage moves and can kind of roughly guesstimate that if something's moving more than 0.5% in a day, then that's of note to me. But going over to your dollar Swiss franc there on the left middle, daily price change of around 33 pips. So yesterday we had a little bit of an outsized move. If you're looking for your take profit was around 45 pips, you can expect that maybe to take a couple days and not be inside one day. So hopefully this helps people just kind of get a gauge of what they could expect if they're scalping. It would be ambitious to try and take a whole 70 pips out of a dollar yen move in one day. It's been done before. Hats off if you can. But yes, and then some of those less volatile pairs like that euro pound that you guys are stuck in currently. That one definitely a slow mover.
Glenn,
in terms of
I'm going to take this as a
pips.
teaser to the cherry picks you're going to get me, and I'll laminate this. Start
All right.
something.
All right.
Sounds good.
Thanks so much, Glenn. This was
thank
great.
you guys.
This was great. And hopefully when you come next Thursday, our trade will be gone. I always like when Glenn comes and our trade's gone.
That is, I like when you guys have good news for me too. But I don't think I'll be on next week because I'll be in Charlotte with Tom and Tony.
You will be in Charlotte. Okay. Well, we'll wait patiently for 2 weeks for you.
Yeah. So if you're in Charlotte,
We'll give that trade 2 weeks. Maybe 2 of our trades will be gone in 2 weeks.
Yeah, that's our plan. We'll take profits on 2 of them. All right. Well, Glenn, thank you very, 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 very much. We really appreciate your time. You're a wealth of knowledge, and get back to work.
All right.
Bye, Glenn. Okay, that was good. So I'm glad we've got another position on.
Did you want to pop in the platform and take a look at what's going on?
Sure, we'll pop in the platform. There we go. And Glenn's still with us, but hopefully they let Glenn go.
I mean, they're just
Bye, Glenn.
Bye, Glenn. Just duck and army crawl out.
There he goes. Okay. All right. So I'm in the platform. Let's see what we have going on. I did put on my SPX put spread this morning I did it right at 9, really right at 9. I thought I would do them around 8:30, but I did it right at 9. And I don't even know if I go to the chart and the minute by minute, daily, minutes, it's kind of fun to look at this.
Oh, yeah, it is. And then I have something too. I mean, on the heels of what we did yesterday, and it is all on YouTube. You can go back and watch our small segmented SPX study on just put spreads, which I loved. I actually really did like the piece. I did something fun yesterday too. So today, what time did you put yours on?
So I put mine on right at. I remember spoos were trading. Want to say, let me see, or SPX. Let me see if I can find where they were. Right around 90, right around 66.90. So it must have been.
So I put I'll give you mine because I know you did it right before me. I put mine on at 902 and I was out of mine at 10 and I did the $10 wide for 25%.
Yes, I was going to say I needed an hour as well. I got out at like 9:40, but I think it was 60. We were trading right around 66.89 when I put mine on. So right here around 9:03, somewhere in that range. And then we had this drop down. Did this drop down make you nervous at all?
No, not really. I wasn't looking, so it didn't make me nervous. Didn't make me nervous at all. But you know what I did do this morning, and I kind of alluded to this to you, and we wanted to save it for the show too, is I accidentally, so I have access to my son's account. I accidentally put my trade in so at 9:01, I put mine in at 9:02. At 9:01, I accidentally put it in my son's account. And then I was like, he's pattern day trading. It's not eliminated yet. So when I got a little bit of a pop at 9:48, which was earlier than mine getting out, I butterflied it off.
Well, you could see we got pop up right here. And so this makes sense. I got out of mine at 9:40. Mine filled at 9:40.
So his was, I took less of a profit to butterfly it off. I mean, I don't think it was 25%. I think I locked in, and I texted him. I did text him. So let me tell you, I locked in a $50 profit with the chance. This is what I said. I locked in a $50 profit with a chance of another $500 risk free. One day, young lad, I will teach you all of this. Is what I said to him. Because the first one I put in was only $5 wide, so it was real easy to butterfly it off.
Yeah, that's good.
And that does kind of eliminate your pattern day trading, which will be eliminated thanks to Scott anyway soon. But it was kind of nice to do.
That was a good idea, especially if we end up getting like a slow day, to turn that into a butterfly. And that's another thing. Let's ask Jacob for selling that $10 I put spread, and then turning it into a butterfly.
Yeah.
Yeah,
so
how often will the butterfly
So I'm jumping into his account right now. There's a chance this kid's going to make some money because his short strike, he's got the 66.90. Go to SPX if you don't mind.
Oh, I was going to say, just look at this. It's kind of fun watching the minutes, because look at this down move we'd had while we were talking in the last 4 minutes.
Yeah, so he's 66.90, 66.85, 66.80, and his long strike is in the money. Thank goodness I butterflied it off.
90.
Yes. 85.80.
85.80.
That's his butterfly right now. Do you know how happy I would be if that kid makes $500?
Oh my gosh, he would love it. He would love it. He would love it. That would be exciting for him.
It would be.
That would be a big.
For an 18-year-old, for an 18-year-old making $500 trading, we're risk-free, by the way, right now.
Yeah. I mean, it wasn't risk-free when you put the initial trade on, but now you've got it locked in with a free butterfly.
Okay,
now,
Jenny,
can you have a free butterfly, or do you have?
No, it's for
credit.
I locked in $55. Okay, so somebody's asking you when you say butterfly it off, are you putting another spread on top of it? So I started by selling. Here's what I started. By selling the 66.85, 66.80. I sold that, and then when we went up, I wound up buying the 66.90, 66.85.
Okay, so you started with this. Yes, you started with this one.
So then I added a second short, and then you go up one and buy one, and you have to make sure you're locking in a credit.
So then your second. So this is your first trade, selling a put spread. And Mikey does this quite often, or used to. I don't know if he still does. He used to, where you sell one spread, and then if the market pops up, you buy that spread.
But I was surprised, Jenny, because he had about a $60 profit. So I did give up, $10. But
you give up a little bit.
He would have been dinged by the pattern day trading rule. So I did give up a little bit for that.
So I'm trying to think, I wonder how much you have to give up to do a wider one. Like on the study, it was $10 wides. This was my original put spread this morning, 66.90, 66.80. I wonder how much. So let's say it's a winner and it's, down here and it's
yes.
265.
This is when you can butterfly it off.
So then I would be buying the 75.65 So to buy the 75.65 is $3.40, and when I sold the spread, I collected $4. So
correct, you're locking
you're
in
giving up
$70.
you're giving up some of your profits, but you're locking in a credit, and then you have that butterfly on.
But it's not at that time when you're butterflying it off, you're giving up a little bit of profits, but it's not as if you're giving up $100. You're giving up $10, $20 to butterfly it off.
Yeah, right. I mean, the higher SPX would go from your put spread, the
more credit you can lock in.
The cheaper, the higher credit you could lock in, or the more profit you could take off. But to your point, you're not giving up too much. Okay.
Yeah, so that was kind of fun this morning. I mean, because I've accidentally put things. What did I do the other day when I was like, oh no? I threw naked natural gas into his account, and I immediately got out of it.
Oh my! You've got to make sure. Poor JD. One day, you're gonna just like throw some trades in, and you're not even gonna realize they're in his account. And
no,
then,
I can tell immediately when I send it. It says usually I have a lock on it, but I was actually glancing to see how he was doing in these moves because he does have Oklo and he's got all this stuff. Speaking of, Oklo turned around. Did you see it?
No. Let me take a look.
Yeah, Oklo is now down, and so we've got.
It was down this morning.
It was up before the open. A lot.
No, but like when I logged in, it was down $4 or $5.
It was up $9 or $8 before the open.
After the open?
Before the open.
High 163.
But you don't see that.
Yeah. It was before the open. It was
before the open. That's correct. So before the open. Okay.
Yeah.
We have a lot to do today. It is already 10:30. We are taking live tweets with the hashtag LIZJNY. We will pop in there. We've been getting crazy. I want to see where the VIX is because we've been up as high as 30 and now SPOOs are red, which is crazy.
Okay, so we'll take a look at that. I just wanted to show we are taking tweets. All you have to do is include hashtag LIZJNY. If you're on the chat, we have the hardest working man. Hardest working man is Frank the Great because he was working the chats yesterday from random locations as he was driving. He would stop at like a McDonald's on the road or like he would stop somewhere and be answering the chats on the road.
And Frank the Great is in Chicago right now. He's sitting at the big boy table talking to everybody while he's manning the chats. So I'm really trying to get Frank the Great to stick. So if you could please call him that'd be wonderful. FTG is what you want to call him, Frank the Great.
FTG.
And Bob, I want to say thank you. I hope you had a wonderful 2 weeks in Greece and Turkey. This makes a lot of sense. I was concerned for you because we didn't see any updates.
Okay, Bob, we're number one. I hope you had a wonderful time. Wonderful time. I'm sure he did. I send pictures, post pictures. I'd love to see some pictures from your trip.
Yeah, Bob is also one of my idols. I do love Bob.
Oh, yeah. I'm sure he's traveling through Greece. Unlike when I read this back from Greece, my daughter was there on a school trip and they weren't really staying in the nicest of accommodations.
I don't think Bob stayed in hostels. We'll put it that way.
I think Bob's trip was a little bit different. That's why I'm asking, send pictures. I'm sure it was amazing. So today, a CSX, Ally, Slob, and American Express.
Yeah. So, I mean, the only thing that I really want to take a look at is AXP. We've been in AXP. We've taken a look at it. You all did not move, by the way. I don't know if it's moved now.
Oh, I saw that. I saw it was like
it was up 30 cents or whatever.
Yeah. It barely moved, not even $1.
Yeah.
Now down 6. $5.90
was its expected move.
Expected move was $5.90.
Yes. But that's usually on the open, the expected move. It was literally almost unchanged on the open, but now.
Well, no, honest to God, on the chart, like that was the $5.90 was the expected move for the week. Like $5.90 was the expected move here.
Yeah, but if you wanted to, you could get out of if you were selling premium on the open because it didn't move on the open.
Oh God, yeah, you could. Everyone could have gotten out. It didn't move on the open. Everyone could have gotten out. Yeah.
So I love this, and like I said, I can only glance sometimes. Everyone should stay in a hostel once, so they never do it again.
I did. So
I've never stayed in a hostel. I shouldn't. I mean, I never. You went to Europe, and
I did 2 weeks. I did 2 weeks living out of a backpack, like 2 weeks with the Eurail pass, sleeping on the Eurail, living out of a backpack, staying in hostels. And when that 2 weeks was over, I know, like, this is no joke. I lit the backpack on fire and watched it burn. I was like, never doing that again.
That's awesome.
I mean, I couldn't take it anymore.
That is awesome.
It's kind of like when we went camping. One time, Liz and I went camping with a group of girls to this place called Shotgun Eddie's. Shocking, it wasn't nice. And I left and got a hotel. Do you remember?
We were 20. We weren't even 21 yet.
Well, somehow they let me book
It was
a
the
hotel.
summer before our junior year in college. I asked this the other day to our resident expert who remembers everything in detail, and you know who I'm talking about.
I know. I booked a hotel. I don't think you can book a hotel till you're 21. I would have been 21.
We were in college. It was the summer before our junior year.
Well, I guess I had a good fake ID because I got the hell out of Shotgun Eddie's and booked a hotel.
I don't think there were those rules back then, Jenny. I mean, I think 21, I do. I mean, that's old weird. I think you could book a hotel back then if you were 18, 16. I don't think they cared.
Yeah. So I and a group of people came with me. I had like 2 or 3 people come with me.
We all left. You know that, right? Your memory is so insane. Thank God for Mandy. We all left. We all went to a hotel.
There were some people who were like, "We're staying at this campground." I was like, "I'm out of here."
No one stayed at the campground because there was like serial killers that parked right next to us. Legit serial killers. Okay, let's jump back in here. So you all didn't do anything. We don't want to do it after the fact. Let's take a look at American Express.
I mean, maybe we'll keep an eye on you all. We'll keep an eye. The rank yesterday was 22. Now it's 15. But if it keeps falling, if it has like a decent enough, is this what you all looks like? Oh, I'm in the minute chart. I'm like, gee. Oh, funny. Okay, hang on. Let me get back to my day. 20-year 1 day. There we go. Okay, so if you all continues to fall, maybe it'll get an extra little oomph and vol. I'm curious to see what do these puts look like here. Not bad. 87.5 puts for almost $2.
And you're getting $9.99 for them. It's not bad.
No, that's not bad.
I mean, honestly, though, Jenny, there's bigger fish to fry now that if we're premium selling. This is a 14 rank. There's higher ranks everywhere else.
I know, but it's something I'm going to keep an eye on. I'm going to put a pin in this and keep an eye on it. I don't know if you saw Fast Market today, but I don't know if we ever put this in yesterday, but Dr. Data did a trade in Pfizer this morning.
Oh, did he?
Yeah. Talking about like
Pfizer is better because it's got a 31 rank instead of a 15 rank.
Yeah. And you're going to see this a lot of places. Now you're going through earnings, but it is a good idea. I do think good idea. Keep an eye on earnings announcements. And if they go down, I always like to, get in with short puts after a down move after earnings. And I know you like your 3-day rule. So let's let you all shake out and see. Let it shake out and see what happens.
Yeah. Let's do the 3-day rule.
3-day rule. 3-day rule. Okay. Anything on today's earnings list?
American Express is the only one that I would like to take a look at.
What do you think?
Did any of these other ones, did MasterCard or any of these things have earnings yet? Or is I'm sure American Express is the first. So the financials have been all over the place with some up, some down. So you don't know how this is going to go.
What is MasterCard?
MA.
They didn't have it yet. MasterCard didn't have it yet. Visa didn't have it yet. So American Express.
And also, I'm just putting a pin in this so we can finish this thought before we move on. That silver gold ratio is back in line. Silver's up a lot more than gold is.
Oh, really? I kind of like getting in and out of that, in and out of that, in and out of that. Can I take a look at that? Because AXP is tricky. $327 is tricky. We're not going to sell naked options in there.
No, I kind of agree. So let's just go. I mean, the silver gold. If it's still in line, it was earlier. That the silver move was crazy.
Okay, and what was our ratio the last time?
2-16, I think. I can pop out the side and see.
So 16 to 2, and we would flip it. We'd be buying gold. And
but make sure that can you just make sure that the silver's up more than gold is right now?
Yeah, let me make sure that ratio is right. And all I do is, calculate it, right? So you've got 16 times 49 is 784. Yeah, that looks right. And then 393 twice.
That's what we had last time.
Yeah. So that looks right. Yes, right down here. Nice call, Liz.
Yeah, thank you.
Nice call. So let's get back in. And I know we make very little on this because we do it on small scale. Do we want to go any bigger on it?
I'm not gonna lie to you. We increased it this time. We're making $30, $30. What we're doing is trying to get into and out of this pretty quickly.
So
if you wanted to, you'd add another 8 to the 1, add another 1 to gold. I don't care. If you want to do 3 by 24.
Let's see how much it is. If we do
3 by 24.
3. Oops. By 24.
I mean, we're a small fry in this account. I get what you're trying to do, but it's in this account, it's just for, kind of informational purposes only. This is us scaling up a little bit.
3 by 24. So
it's the same. It should be the same chart. 100%.
I mean, yeah, it changed just very slightly. Like instead of like 0.32, it's 0.22.
Yeah, I mean, this is as close as you're going to get it to the ratio. How much is this? Is it like $700?
1,179.
And that's why, because we're making $20 on it. The risk reward.
I know the risk reward isn't there for this. For us to put $1,100 into it.
There's way better ways for us to make $20.
All right, so I'll take it back down. I'll take it back down to 2 by
16. And 1 by 8 is one you can look at if you just wanted to look at it. But I think 2 by 16 makes more sense to us.
2 by 16, we can at least make something if it comes back, and we'll keep an eye on it.
Yeah.
Wait a second. It's bouncing back up to 87 point. It's fine. It was like point.
Yeah, I mean, you're getting in the weeds. Just press the button.
All right. And then this is using 784.
Yes.
Fine. We can afford 784, but
Ian, this would be the first, and we kind of talked about that yesterday with some of the things. This would be the first thing I would close if we needed cash.
If we needed money, right? Because it's not going to change much.
Yeah.
So I'm going to go to our position page and see it's still pending. By 2. What is this little squiggle?
What little
contingent on price? Oh, there it goes. Okay, so here we have gold and silver.
And push those out, and I'll do it on the other page so that it goes to the.
Oh yeah. Today, all symbols. That's all we've done so far today. But we did our FX. We did our FX trade, and that doesn't get pushed on the follow page.
No, it doesn't. And I don't know if there's anything else that we need to manage.
I'm just gonna quick zoom down.
So Bitcoin is totally fallen out of bed. So check our IBIT.
I know.
Check our IBIT, ETHA.
We did yesterday. We did this zebra 60.63, and it's trading 62. So IBIT, we put it on when IBIT was down, and it was it continues to fall. So it's $1 lower than it was when we put on yesterday.
And let's take a look at SBET and ETHA too.
SBET, I don't know. I mean, SBET. When Dan the crypto man, when we see him, I'm going to ask him about SBET again. We have 100 shares and a short 18 call.
That short 18 call is worthless.
It's going to roll off tomorrow.
So then let's sell another call against it.
But the question is, and this is a common question of people who have long stock, okay? And they're doing covered calls. We bought stock at 17.44. We took in 87 cents on this 18 call. So my cost basis is 17.44 minus the 87 cents. So 16.50.
Wait, where do you see 17.44?
Trade price. We bought 100 shares of stock at 17.44.
Trade price, I see 16.57. Oh, it's netting it out. I'm sorry. Sorry.
Yeah,
so it's doing it for you. So our what's it called? Cost basis is 16.57.
Okay, yeah, so it's right there. It added them both together. And
I didn't know that it added it for us. Did you?
Well, it won't. As soon as this is gone, then this trade price is going to say 17.44. It's only doing it because it's here.
No, I get it. But all I'm saying is, so we don't have to do it. We know 16.55 is our cost basis. So let's roll this out in time.
So here's the question is,
take it all the way to the 36 day.
Yeah, and what I never want to do is sell a call below my cost basis, but we don't have to here.
What is our cost basis? 16.57.
16.57. We could sell that 16 call for $1.70 if we want to.
Yeah, or just go to the 17.
Yeah.
There you go.
Let me buy the other one back just in case something insane happens between today and tomorrow.
Yeah.
So I'm buying that 18 call back, and we're going to sell the 17 call and get $1.45. I mean, hey, you can get your cost basis to zero pretty quickly in SBET.
Do you know what's pretty interesting too is not that it matters, and I think there's better ways to trade. But SBET is new to us. We bought 100 shares. We have a covered call. It'll be real easy for us to do our cost basis when we look at our P&L year to date and subtract it from the price.
Yeah.
Do you know what I'm saying? Though when I've got so many positions in different things, that's when I get a little bit newfangled with it. But right now it'll be easy.
I think I bought SBET at like 30.
You probably did.
Which is why I struggle with selling calls in there because my cost basis is much higher. But
it's much higher. Yeah, I get that.
Okay, so I'm going to close that 18, sell the 17, taking $1.45.
That's pretty good. I mean, honestly, you could sell the 18, but I don't mind this. I don't mind getting into and out of it though either.
Yeah, and I mean, you could even sell. You want to get some extra premium, you could add on a put. Now, I think SBET is cash secured.
You could add on it's pretty easy. You could add on a put spread too. But yeah, I thought it was going to hold up $1,100. It only holds up $385. Put it on there. Do it.
Right. I'm going to add this put on 59 cents. I'll see if we get filled.
9 at 69. So she's putting it mid market.
So I want to get
filled in the roll.
I want to get filled in the roll. You know what? That's annoying because I shouldn't have to like come all the way down to the bid to roll that.
You shouldn't, but it's wide and there's not a lot of volume if I'm looking at that correctly.
And it's 4 cents to buy the 18 back. These markets are wide.
4 cents.
I'll leave that 12 put, but hang on. I'm gonna try to first just sell a call without worrying about rolling.
Sell a call and buy a call.
Yeah. So what are we doing? Is that 17?
I would go 17 only because it's tighter markets than the 18.
Yeah.
Who cares? Sell it at 138. It is what it is.
Sell it at 140 and I'll watch my 140 there. Okay. So we're in that. I'm working that put and we still have this. Should we just leave it? Just leave it. It's going to roll off tomorrow.
Yeah, that's fine.
I mean, or do you want me to buy it back?
I mean, buy it back. It's 19 cents. Who cares? Just leave it. It's fine. And then push everything through so we can get it to the other side.
Oh, yeah. Okay, so the question is, do we want to get filled on that put?
I don't think I don't think you penny that down, penny it up, you leave that.
Okay.
Because we can always get a put.
SBET, we sold that. I mean,
yep.
Could put that closing order in.
The other thing I want to take a look at is ETHA, because those are the 3 things that are moving.
Yeah, I mean, all the cryptos. The cryptos are just...
Bitcoin hit 109, which is low for crypto.
Mm-hmm. And I don't know if you saw Slimmy sent in what's your assumption, bearish on Bitcoin?
Oh, he thinks it's a worthless, I believe he said worthless product. And it was the same time. Slimmy said bullish. We said get as long as you can.
As long as you can, as cheap as you can.
As long as you can, as cheap as you can. And Slimmy's like, it's worthless. I love Slim. I miss Slim.
I know. Yeah, you'll have to go look in messages because in messages, either on like LinkedIn or Twitter, he sent us a message.
Oh, did he really? I'll have to go look. I love him. Mm-hmm. Miss him. Okay, ETHA is down quite a bit too. What do we have in here? We have a zebra.
We're like,
go to the trade page.
Okay, yeah. We have okay. Look, this is the zebra 3033, and then we sold a strangle around it. So we sold the 43 call and the 2620 put spread. So we sold that around the zebra. So it's kind of like
we sold it on the zebra, and that strangle's doing nothing. It's the zebra the zebra's under the 30 level.
Yeah, right. So this is where, with the zebra, this is where you have to take action.
You take action, yes, because it becomes the at the monies. Now our go-to move, Jenny's been buying one. Remember?
Right. So we're getting 396 credit for this.
You can go nearer term and buy one if you want to.
Oh yeah, I see. Yeah, let's just like Band-Aid over a bullet hole, put it out for 8 days. We could just buy the. We're getting we're getting 404 credit for it. So we're getting a lot of extrinsic value. So just like buy the 29 for the 8 days. What do you think?
Yeah, I think that's fine.
I mean, we could pay more. The more we pay, the less extrinsic value we're
I don't mind paying a little bit of extrinsic value because we're getting extrinsic value by our strangle around it.
Oh no, you know what? That it's going to end up using a lot of buying power because our long, yes. Because our long call. So now our long call, like our synthetic stock long call, is this short term. Where did it go? It's this short term.
Did you see the capital go up?
Yeah. So, and where is it? Where's our new position? The new call. I bet. That's why I'm like, where is it? Okay. So the new call, take a look at this. The new call is in 8 days and the short call against it is in 36 days. So it's holding up the buying power of a short naked 43 call.
Well, then close your strangle because it's a wash.
Yeah, I'm going to close. So
it's a complete total wash. Like you're getting 44, 26, and then the strangle. Yeah.
I don't mind leaving that put spread, the 26-20 put spread, and just take off. We're like made 50%. Just take off this call.
Yeah, for sure.
Because then we'll get the buying power back. Now we're getting $1,000 in buying power back.
I see what you're saying.
Because if you have some kind of synthetic stock, your synthetic stock has to be further out in time than the short call you're selling against it.
Yeah, I get what you're saying.
Okay, so that's, let me push that out. So today, so we kind of sold out the zebra and then bought just one short term. If I want low risk and things seems to be falling, I'll do it short term like that because the only risk in that is what it's worth, $1.90 or something like that.
No, correct. Okay, so that's pushed out too. That's good. Anything else needs to be managed? I mean, we do have tomorrow too. It's not as if the weekend is coming up.
I feel like it's the weekend. I woke up bright and early today to book all my Disney passes because I leave next Thursday.
I know. That's so funny.
Anything else? No. Lunar's a weird one because it was really having quite a rally. It was having quite a rally earlier. Like, look at this big day.
I think we should sell calls against this.
Yeah, if we can. We have 100 shares, bought it at 15. November, 15 calls. Where do you want to sell? 15 calls, 16 calls?
Sell the 15 calls for $1.28. If this thing is gone, it's gone.
$1.19.
Let that work. There's your offer. There you go. I like seeing your offer put up
there. It is, $1.19. You're right about that. You're right. Why not?
Yeah, if it goes somewhere, it goes somewhere. I don't have any ties to Lunar.
Starbucks, we're up to 30% on our put.
I know, you wouldn't let me close this yesterday.
Well, because it just seemed like a little, but now $107, 30%.
I like closing things. I actually think that's the way to start trading is by taking profits, taking risk off the table, getting your $1,300 back because you can live to trade another day. But Starbucks up today. If it goes down, you can always put another one on.
Yeah. It's had this little like 3-day rally. Ding, ding, ding. 3-day rally. Okay. So I'll close that. $105. I'll take it. I didn't want to close the hymns because that was a roll. And I felt like we're such in the hole in hymns. But hymns, it's down 250 today. It really rallied. It was up $8 yesterday.
Yeah, and it's down today. So it's hard. But that's the one good thing about options is if you close it and you want to get back into it the next day, you can.
Right. And so here's the thing with hymns. Like the only reason I said not close it because 49 rank, if we wanted to put a trade on in hymns, we'd probably put the same thing on.
Possibly.
Or we could move it.
No, leave it. I mean, we talked about this. I think that's beating a dead horse. It's over. Leaving hymns in. We've got our GTC in for 50%.
Hymns. Vanetta was talking about hymns in the news today.
Was she? What did they say?
Like they're making some new. You know how they have their pills for like hair loss. Now they're making some kind of perimenopause pills.
Oh, great!
I don't know.
Wonderful.
So it was up 8. It was up big yesterday. Couldn't hold it. Did Archer, whatever happened with Archer?
Archer's down today. It was up big again today, down. Now it's down again, like a lot. Archer is out of control. That's the one thing you got to get into and out of. And that's what I was saying when I was looking at those two peaks. It goes up, then it goes down, then it goes up, then it goes down. Archer was up, like, look at the high and low in Archer today.
Yeah, I see. It went all the way up to, in the 14 handle. It's up to 1430.
1430 is the high, and now 1230. Yeah, that's what I'm saying. It was crazy today.
Yeah, it is wild. It gets wild.
I feel like that volatility should be higher.
I'm just like running through to see if there's anything else.
No, but we do have Blue Wackadoo in Twitter that came in before Bob. I want to see where his strikes are.
Okay.
Came in before Bob. Yeah, like right there.
Oh yeah.
So let's see. So this was an hour ago. Happy Thursday. IV rank meandering at 25.40. And I also want to see where the VIX is. I put on a single 7-lot Iron Condor, 105 points wide between the shorts. That's pretty wide.
Yeah, he's got spoos are down right now, but we're nowhere near his short strike, so he's good.
It's pretty wide.
Yeah.
And a 40% GTC is set. So we kind of talked about that. Excuse me, a little bit yesterday. When you're narrower, you have to set your GTCs lower. When you're wider, you can set them a little bit. You can set them a little bit farther apart. Or a little bit higher. 40% makes sense.
I wouldn't mind. What's CSX?
Oh, there's none of this stuff. Like Slob, Ally Financial, and CSX. I don't think it's
do you see Interactive Brokers is today?
I'm surprised that's not on the liquid list. Go to that.
Yeah.
And I know we only have a minute left. I do want to see where the VIX is. I could do it on my own though.
69. It's trading 69.82, and the expected move is 364.
I sold all my Interactive Broker stock at about 16. I'm just kidding. Okay, but that's fine. We don't need to.
When did you sell it?
Jenny, go to the VIX. I think we've got 1 minute left. Go to the VIX. Type in VIX because I think before you do, where do you think it is?
1980.
Yeah, type it in. You're going to die.
2160.
That's what I was saying. I was like, hold on, pump the brakes. Pump the brakes.
Okay, so we've said this before. Like when people thought like there was going to be some big movement, and VIX was staying low, and everyone's thinking like, oh, well, the market might fall, and VIX was low. Like VIX knew. So the VIX keeping his wings up, to me, it kind of feels like maybe it knows something we don't know, Liz.
The VIX is up 5% right now. Where's /VX? Spoos are down 12. I mean, the NASDAQ is still up. So you've got an unchanged market with VIX up 5%.
Yeah, but okay, here's another thing. Like, and this is another side, like a flip side. Like maybe VIX doesn't know, but markets so high, stocks are so high. What the VIX is based on the prices of the SPY puts. So if people are buying puts, like on SPY options, right? 30-day options, 30-day SPY options. So if people are out there buying puts, buying calls, and it's raising volatility because there are more buyers than sellers, and that's raising the VIX. So if people are out there thinking like, I've got to protect my portfolio, I'm going to go out and buy a bunch of puts to protect my portfolio, then it's raising the SPY prices, thus raising the VIX.
Yeah, that's true. But it is, I do think the market is smarter than, the market is faster than anyone else out there, in my opinion. Mm-hmm. The markets react faster than anyone else out there.
Yeah, for sure. So like the VIX at 2165, does that make you think, oh, I'm going to go into my account and like scale back on risk?
The VIX at 21. No, but I've been doing that with the VIX at 19.
Yeah.
So I've been, like I said, I've been going in just kind of how we did. I'm taking off HIMS. I'm taking off this. I'm taking off that. I'm taking smaller profits because guess what? I can get on a down day. I can get right back in. That's what I'm seeing. Like you look at Archer Aviation, if you take your profits when it's up, you can get right back in the same day, 2 days lower. Like that's what I'm seeing with the VIX as high as it is.
I know.
So I don't know, but we are done for the day, Jenny Andrews, because it is Option Trading Concepts live right after this. I don't know who's on it today because they always have a third guest, but I know there will be Jamal and Mike.
Yeah, I don't know. I don't know who they have today, but stay tuned. It's gonna be a great show. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
We'll see you tomorrow.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. I'm here with Jamal and Glenn. It is FX Wednesday, and I've got a bone to pick with you because I'm down bad. Down bad in my one tasty FX position. However, I'm thinking of adding another tranche.
Okay.
To soften the pain.
Wait, what is it and what?
Is
I'm short the dollar CAD.
Oh yeah.
Dollar CAD, Canadian dollar has not had a leg to stand on.
No.
Dollar's down today, but somehow against the Canadian dollar, still up there.
Classic.
Yeah.
Oh yeah, I did sell that too. Yeah. What's going on, Glenn?
Yeah. What the heck?
Yeah, no, this is just I got some correlations to go through later, but this one, it confirms that this one's moving a little bit uniquely.
Yeah, of course.
More
against me.
Against you.
Yeah.
And I think the only reason is because you have the position on.
For sure, the only person in this office with this position on.
You could say more unique or very unique. I know Josh Fabian hates when people say that, so that means you should definitely say it.
Says very unique.
You guys see Succession?
Oh yeah.
Instead of Greg, I'm gonna say Glenn. Now on, okay?
You wouldn't be the first person.
When something doesn't go right, I'm gonna be Glenn.
Honestly, that's one of my favorite characters of all time.
You got to make
the full character development of that guy.
You got to break
Greg?
a few
Yeah.
Gregs to make a Tomlet.
Yeah.
Well, you know what, too? I love, like, their interaction. Like, Tom's always so, whatever on other people, but with Greg, he just was like this, well, no, Greg, this is what's going on. Like, the way he would just talk. Their interaction was really funny.
Yeah, I mean, that show made me want to testify in front of Congress. I think that's one of my life goals now, is to testify in front
Careful
of
what
Congress.
you ask for.
I mean,
Glenn.
yeah. Hey, you're flying close to the sun.
You
man.
testify.
And,
But you might not end up knowing why.
See, my goal is for 0 people in Congress to know who I am.
Okay.
Fair. That's how you fly under the radar.
You know what? Look at him. He looks like a little congressman, doesn't he?
Yeah, and with the glasses, I can be like an expert, because that's, you can either be there in trouble,
Yeah.
or you can be as kind of a witness.
I imagine you just busting through the doors, screaming, "You can't handle the truth!" You know. Markets flying around today.
Yeah.
We'll talk about the FX world in just a bit, but I'm sure there's plenty of positions that are moving as well. E-minis up 27. They were up as high as 70 points a little bit earlier. NASDAQ up 170. Bitcoin back down to 110-ish, 111. Kind of crazy to see the lack of bid in Bitcoin given the recovery we've seen in the rest of the markets. But if we check out some of these other futures positions, to the downside, Ethereum, Bitcoin leading the charge, natty gas below 3. Scary stuff. And then to the upside, of course, naturally, silver and gold. Can't stop those. Even platinum. All of the precious metals just ripping higher. Gold is well above 4,000 now. 4,000 is the new floor, I guess, at 4,200. And silver above 51.
Crazy.
What are we doing here?
Bitcoin is really interesting because it seems to keep hovering around that 110 level on the downside. I am, if I were long, I'd be a little bit worried about a break at this point. I really do feel like markets kind of teetering on an interesting edge here. I mean, the way we pulled back today, you think about Monday and Tuesday, markets were down and then they bounced back. I think this is fine, but I think the scary part comes if for some reason gold ends up going negative and markets go negative. I think that's where we get somewhat of a mini crash. I think until that happens, things are generally fine. There is risk off today. And some of the names that everybody's been paying attention to, the energy names, by energy, I mean, we're going to have the nuclear power names is really, I'm trying to think about what do you want to call that complex besides just by their names. The nuclear, the batteries, I feel like a lot of those names are actually higher and then they pulled back. You see the rare earth names have pulled back today. So first of all, I love this because this reminds me of other turbulent times in market histories. You see days where those names are all mooning, and then the next time you come in, they're all kind of faded. So I think that's what's making this market really interesting. But it's all well and good for now until I think futures go red and somehow gold goes red with it. Then it's a sell everything. So that's what I think.
Interesting, yeah. It is a complex picture today. Not really sure what's driving what. I mean, had a boost on, those bank earnings, pre-market, now everything's getting hit. We had a Fed speaker. Wasn't good for the dollar. I think it was when she was talking, equities were fine. You kind of got a mixed bag today. Not really sure, but I agree with you, Jamal, that it feels like even though there's nothing slated that's coming in terms of news, I mean, I guess we're in earnings season now. There's a kind of a pause in the air. Not sure what direction.
What day was that last week where we had equities down, gold down, oil down, bonds down, Bitcoin down? There was a day like that last week. We don't have that right now. I'm just thinking like there's like 3 out of those 5 down, but there was a day like that last week maybe. Yeah, it might have been. I don't remember, but I think that's what if I'm worried as a long delta person, I actually reduced some risk today, but if those are the days that I'm worried about, because that could just lead to panic a little bit. But we don't have that right now, I'm just trying to contextualize it, which is actually good.
Yeah, only
Thursday, the 9th, E-minis were down and gold was down. Gold was flat when Friday the mayhem was happening. But yeah, we are in funny territory.
Feels like we've been trading in half days almost. It's like, oh, if we're red, somehow we'll finish green. If we're green, they'll take some of it out, but we'll still be green.
Yeah. I mean, that's what it's kind of funny because this morning we were up 70 and I was just sitting at my desk. No one was even around me. And I just said out loud, this is the funniest market in the world. Like, it's so funny because it's just like every 200-point sell-off is bought within 2 days. But now you're seeing a little compression from the highs. And it's like, oh,
that's a first.
Maybe something's changing here. But yeah, nuclear names going nuclear. SMR up 14%.
I got out of that short put by the day today.
So did I.
Yeah.
So did I.
Nice.
That was one of those trades where it's like, for me, it's a no-brainer. It's a $50 stock, and you can get $500 for a short put. Sure, why not? So yeah, looking at the follow page, I can highlight myself and Jamal. I got out of the SMR position, just like Jamal said. I got out of the Costco call diagonal spread that was a calendar at 1,000. That was almost a $200 winner. And then I had the 1 day to 0 day iron condor that I was filled on right before the close. So unfortunately, I didn't have it posted, but that came in for $100 this morning too, into the sell-off from the highs.
Yeah, people should reward us when we post those because sometimes you just kind of forget.
Well, I had it on. Like I said on the show, I was like, I'm not budging.
Yeah.
And then it filled me with like 30 seconds before the close. So what are you going to do? But yeah, the 1 day to 0 day iron condors are interesting to me, especially if we continue to get this heightened implied volatility day to day. So we're seeing 50, 60 point implied moves now for going from 1 day into a 0 day. So you can set up a nice wide 100-point range and collect $200 on a $5 wide spread. So I'll continue to do that until I get blown out. How about that?
Yeah. It's usually how it works.
Yeah.
That's what most people do.
It's been good. But yeah, market's chopping around. If you want to join us on the YouTube channel, we're streaming live there. Just head over to Tasty Live. You can throw in your trade ideas, questions along the right-hand side chat. I've got the money match promo that Tasty Trade has on right now. 1% cash match on any and all deposits up to 30 days. And also 30-day commission-free trading. So what perfect timing in these volatile markets. If you want to open an account, check out the platform, trade whatever. It's a good little deal.
Yes, it is.
And then speaking of earnings, we do have a bunch of earnings next week. We've got a ton of earnings this week too. I just wrote a United Airlines earnings preview on the News and Insights tab on tastylive.com, and I put a link to that tab in the YouTube chat. So check that out as well. So Glenn, you've blessed us with slides.
I did. Yeah, I made slides today.
Perfect.
Quick little update for you guys because markets are in flux. The regime we're in is a little undefined. And so wanted to give you guys a quick US dollar correlation snapshot update. all those fun words. Everyone loves tracking correlations, especially if you don't track US dollar as closely as someone like myself does. Tying it to what other asset classes are doing can spur some interesting trade ideas or potential trade strategies. So first, I want to hop into cross-asset correlations on the next slide. So here we've got a little more of a familiar story here. I've tracked major U.S. dollar pairs against S&P, gold, crude oil, 10-year treasuries, and copper, because that's had perhaps some more interesting price action than just gold straight up as a functional metal there. And we've got 3-month correlation of prices here. And this, to me, it's classic relationships. We've got your 10-year treasuries moving with dollar yen primarily. We've typically seen that very consistently be the pair that reflects interest rate sensitivity the most. We've got Australian dollar, your exposure to gold and copper, those commodities, those metals, as well as S&P 500. That's the top of the board there in terms of risk on correlation, risk off, kind of sentiment driven. But then we've got an interesting wrinkle here with crude oil and U.S. dollar as of late. Crude oil and U.S. dollar, a positive correlation right now with the highest impact in or similarities between euro dollar and dollar yen. I did a little bit of digging on this. Can't really get too much of a story. Might be more of a range-bound coincidence, if anything. I mean, we've had general bearish price action in crude oil over a longer term horizon, a little bit of a bounce back as that's traded in kind of a range. US dollar now flipping a little bit positive compared to recent months. Do you guys have any additional color on that? I think it's more of a coincidence than anything. US crude production is at an all-time high, but crude oil typically just more of a supply and demand of its own. You have the historic kind of anecdotal inverse relationship with crude priced in US dollars. But is that worth reading into from your guys' perspective, closer to crude perhaps?
It's an interesting question. We had Thomas on yesterday. We were talking about crude floors in terms of a break-even price, and it's around 60, and it's gone below that. But at the same time, I don't think there's anything that's too. I wouldn't hang my hat on something to just go nuts with the trade there. But.
Agree. I can definitely agree with that. I wouldn't hang my hat on it. It's sometimes these correlations flip every now and again when political stuff or whatever it may be, and I think this is just a result of the current environment. I think obviously the dollar has been suffering as a result of global trade potential between us and China, and in a way, crude oil has been kind of suffering from that too. So I think that's why it's happening right now. I wouldn't formulate. This is the thing. When I learned trading, I also traded alongside some traders who traded big, and they would see something like that, and they would formulate this real deep thesis and create a trade around it. And so that's why I'm saying that from that standpoint. There's people I know who used to do that, and that's just a lot. You don't need to do that, but a lot of people figure that out. I just think it's cool to be able to see that, and the reason why it's probably happening right now, but I don't know if it's something that's going to last long enough for you to formulate a trade.
Agreed. If we flip back to the slides here, switching over to FX correlations, this is a much more interesting picture to me. We have just dollar pairs here, didn't go into the currency crosses, but what this tells me, we have some pretty extreme correlations among dollar pairs, which screams to me that even though we don't have U.S. data, even though the government's in a shutdown, all of this U.S. dollar price action by pair is primarily being driven by U.S. specific factors. I call out the correlation between euro dollar and dollar Swiss franc, negative 0.91. That's the top of its historical range since they depegged from each other. And that negative correlation, just a function of the U.S. dollar being on the bottom half of one pair and the top of the other. So in essence, the euro and the franc moving very much in tandem, which you wouldn't necessarily expect given how much demand has been attributed to the Swiss franc from a kind of safe haven appeal. But yeah, there's no really euro-specific news that's driving that. You get a little more with British pound dollar because we've had some recent Bank of England commentary, a little more speculation on their rate cutting path. But this just screams to me that no matter what dollar pair you're trading, you have a lot of dollar exposure primarily. And then you look at your current trade there, Mike, with dollar CAD, and that one of the ones that isn't as correlated to the others. You're seeing around a 0.6, 0.7 correlation to other US dollar pairs, where it's more towards 0.8, 0.9 in a lot of those other pairs. So all this says to me is keep monitoring US dollar exposure. If you do have multiple pairs across positions across US dollar pairs, it might be driven primarily because of dollar factors above all else. And then lastly, wanted to cover what might be top of mind for everyone is just the relationship between U.S. equities and U.S. dollar. On the last slide, please. Plotted the rolling correlation of U.S. dollar and equities, and traditionally we see this be a negative correlation when stocks move higher, a U.S. dollar moves lower, and vice versa as a function of, risk sentiment, wanting more exposure to greater returns in the stock market, or a safer play with just holding U.S. dollar, U.S. assets, perhaps treasuries. But here we're getting some flip back and forth throughout 2025. The main storyline through the spring and the summer was kind of this greater U.S. asset risk, where we saw U.S. equities and U.S. dollar move in tandem with just some of the administration exposure, global perception of how some of those policies or growth perspectives would change. And we've seen that kind of erase now as U.S. equities continue to churn higher and U.S. dollar kind of stutters. And so this calls out to me that we don't have a clear answer of how this relationship will play out over the medium term. And that could potentially be a catalyst for, some trade ideas once that is established. We're kind of in no man's land right now, as we've speculated when looking across asset classes. And this relationship is definitely one of them. So, today alone, we've seen U.S. equities rip higher, dollar suffer, U.S. equities pull back a little bit, and U.S. dollar not necessarily getting that bid. So I think there is still a little bit of that overall U.S. asset nature at play, but we could be closer if this trend reconfirms to a more historic relationship where you have this stronger inverse relationship. That's what I got for you on a little update there for how the U.S. dollar is moving as it affects or pertains to other asset classes. Anything speak out to you guys?
Well, I love it. I think it's great analysis. For me, I think it is, when you look at a chart of DXY, you can see there's still plenty of room to grow for the dollar strength in general. But when you look at some specific pairs, when you look at the popular USD watch list on the Tasty FX tab here, there are a handful of them that are moving half a percentage point. What of these stands out to you? Looks like the only one in the emerging USD that's over 0.5% is the Israeli
shekel. Yep, you got it. Yeah, we're seeing a bit of a mixed bag. What we've seen this week and last week has really been a tale of two trading sessions. We see a big move in the European session, and then U.S. markets interpreting that a little differently. And so we had some, dollar strength overnight, and that was immediately peeled back, and we had euro ripping higher Swiss franc going lower, and we're seeing an outsized move in British pound, perhaps a little bit of a catch up there. That one hadn't been able to capitalize on U.S. dollar weakness because of some of that Bank of England speculation. Now that one playing catch up a little bit, coming off of 2-month lows hit earlier this week. But yeah, if you're a U.S. dollar bull, this isn't really the momentum that you want to see. A big reversal yesterday that went against the U.S. dollar. So we're reestablishing some trading ranges. If you think that further U.S. dollar weakness is coming, then maybe we did bounce off that floor. Like I said, there's nothing really on the economic calendar that speaks out to me, but we have a ton of ad hoc event risk in the form of new developments in this trade policy. We have some other Fed speakers. Not sure how much weight markets will take to that after Fed Chair Powell's speech yesterday, where he all but confirmed the cutting path for this year, and a lot of his colleagues saying that we should get to a neutral rate as soon as we can. So not sure. Again, this is a kind of an interesting time period because the storyline that will emerge is the one that markets take seriously, and we don't have kind of that traditional hierarchy in the form of, oh, this is a high impact event, this is what people will take seriously. All of that kind of prioritization is in the wind right now, so not sure what the next big US dollar catalyst will be on our board here. So if you're thinking of trading ranges, then you could look to just some unique price points that confirm that. Like I said, we're probably closer to more room to run on the US dollar weakness side there if you're thinking of ranges. But if you're looking to trade some US equity exposure, Australian dollar might be the play. Always like calling out the Australian dollar Japanese yen pair, because while they're both geographically similar in terms of proximity, they are on the opposite end of the risk spectrum. So you have Australian dollar typically risk on, moves, as we saw, a positive correlation to the US stock market. Japanese yen, historic flight to quality. So this is a good one to monitor if you're trying to gauge risk sentiment. Other than that, yeah, I mean, tracking the China story, that'll play through in Australian dollar, somewhat New Zealand dollar as well. But a lot of options out there. There's just, you need that conviction, which is perhaps not as clear right now.
Yeah, for sure. Non-USD pairs. Austrazealand?
Yeah.
Is that?
You could say Aussie Kiwi.
Okay.
The Kiwi dollar is New Zealand.
What's the phrase you always say?
Australasian.
Australasian.
So yeah, if you look in Australian dollar, Japanese yen, Australian dollar, New Zealand dollar. You could even throw in Hong Kong dollar there, Singapore dollar, all Australasian.
Lovely. I'm already short this one, 5 microlots, the Australasian pair. But yeah, plenty of movers today, just on a one-day net change. If you look at non-USD pairs, things that are around 0.5%, Aussie dollar CAD, you've got British pound CAD, you've got CAD franc. So yeah, there's a lot of things that are moving to a pretty strong degree today.
100%.
Kind of like take your pick at what you feel is best for you.
Yeah, so even just like top of the board, British pound, US dollar, that at over 0.5% move and 70 pips there, that's a little bit outside what we've seen in terms of a typical one standard deviation move. So if you're looking to fade that, then you have maybe 10, 15 points to get back in that range. Yeah, looking at the daily Bollinger Bands, not necessarily bouncing off this high, but curious if you go over to the hourly. Let's see.
Oh.
Yeah, so we're right up there.
See,
if you think that there will be some more chop, but like I said, I could also see this being kind of a runaway, no news is bad news for the U.S. dollar. Just kind of a lack of demand, right? I mean, if we saw equities kind of start fading early, right before our show, and that demand not go immediately to U.S. dollar, I don't know what that says, but it's not, as bullish for the dollar as you'd hope to see kind of a reflex movement, 1-to-1 there midday.
Well, I just got short this British pound dollar, but I think for me it feels good because I have a larger position now in the short dollar CAD. So I'm short 15 microlots in the dollar CAD with 3 tranches, starting at 138, then 139, now 140. I'm short the Australasian.
You're short the Aussie long New Zealand dollar.
It's Australasian.
Australasian is the categorical term.
Yeah.
Okay. Just wait till we get into Scandinavian.
Let's not. We can't do that. But what I was going to say is so I'm short the dollar CAD. If I get short the British pound dollar, I'm getting long the dollar through this pair, but this pair is at a daily extreme, we'll say.
Yeah.
So it feels like a nice hedge against this other position that I'm battling, at least from a day-to-day standpoint.
Right. Yeah. So you're now kind of netting some of your U.S. dollar exposure.
Correct.
Very good.
Nice.
Lovely. Well, I mean, I guess if you want to go eat lunch, it's 11:30. You've done your due diligence here.
Well, if you insist.
You've fulfilled
He's nice.
your
I would have
prophecy.
made you stay here sometime. Even if it was like an extra minute or two.
But yeah, thank you for joining us. If you want to shoot Glenn a note, he's on Twitter, Glenn Freibarger with an A. Also give a Tasty FX a follow as well. If you don't have an account through Tasty FX, you can just click on this tab and open it through Tasty. And that will give you what we're looking at here. Beautiful charting, beautiful continuous positions through these currency pairs that definitely pop out and stand out during these wild times.
There you go. Thanks, guys. Always fun.
Yeah.
Always
likewise.
pleasure.
See you next week.
What is it, pita pita?
It is pita pita.
Looks so good. I can't
Love
wait.
it.
They have the best like vegetables and stuff too.
And falafel.
Yes.
Great falafel.
Yeah.
But no turkey.
No. Hopefully nothing spicy over there too. There's no spicy falafel.
You got to start.
I told Tony that the turkey was spicy yesterday, and I've never seen his head go further down in shame. So love to disappoint.
Yeah. Yeah.
Always fun, guys. Thanks.
All right. Appreciate it. Thank you. E-minis up 31, NASDAQ up 200. We are just sitting in this range now. Interesting to see. But yeah, UAL earnings after the close today. I did a earnings preview for that one. I'll pop it in the YouTube chat. But basically, executives last earnings quarter had positivity in sentiment. They said, demand is high. We expect demand to continue to increase, which could result in a good year-end result. Stock price, interestingly enough, on the year is basically flat. I mean, it's up a little bit, but if you look at the move from the lows around 50 up to where we are now, it's up 100% from the lows. So with that said, implied volatility for earnings, 5.79 points of an expected move right now based on current implied volatility for the next 2 days, which is about 6% of the stock price. Not too crazy of implied volatility, but when you look at the 2-day cycle relative to November, December, you've got about a third of the implied volatility projected over the next 2 days. That accounts for the rest of the year's implied volatility. So still some projected movement here. I think if you're directional, you can certainly get away with a diagonal spread. I would probably go long December, short the 2-day.
Totally.
If you want to do short premium, I think you can go to November if you want to be really conservative. If you go to the 2-day, if you have a defined risk trade like an iron condor, it is going to be basically instant pain, instant gain. You don't have any defense if there's a big blowout move against you. So I typically like to go to the 30-day-ish monthly cycle around earnings for those kind of trades, just so that I can have time on my side, just in case it's wrong. It feels like I want to be long United.
Why?
I just love United. I never have any issues.
You know, it's funny. I was actually going to ask you that. I mean, you've traveled more than I have this year. Have you noticed anything different? Have they done anything new?
But I'm also biased because I have micro status, we'll call it. I've got the silver status, which is basically nothing.
Yeah,
But it does
I know.
give you free premium economy upgrades when you check in. I've got the United Club access, so I'm very biased here.
For sure.
But at the same time, knock on wood, I haven't had any issues with flights. Like flights getting canceled, flights getting delayed. Like really, it's been smooth flying for me.
Yeah, it's been interesting watching how they've monetized more, right? I mean, you've seen that with some of these airlines, particularly United. My only thing I wonder about is, like, how is this oil price level? This actually should be good for them, right? I mean, this oil price level.
Oh, yeah.
Again, I don't know how much they hedge with that. I mean, you would imagine some degree airlines kind of do, but you think that might create a bullish case. So for that, I might be in as well.
Yeah, at least for costs. I mean, you typically see when you see oil slide, you'll usually see airlines kind of have a little bid. But yeah, I think I'm just gonna go with my gut here, and if I'm wrong, just doing one of these diagonal spreads. So if I go long the 105, let's see what kind of pricing I can get for.
Yeah, I was kind of starting to look at the same. I mean, it does seem better if you're going to do the diagonal to do NOV Ds probably, as opposed to trying to do a NOV versus like 2-day.
Yeah. Yeah, I like NOV Ds or just Ds 2-day and then roll into NOV if you want to. The 110 call on the upside is trading for 80 cents. The 110 in NOV is trading for $4. So, yeah, I think to your point, Jamal, I think I'll go from the 2-day and just reduce basis a lot more going to NOV, because this 80 cents against a $10 cost is not anywhere even close to what I would expect for an earnings cost basis reduction. Like I'm usually expecting like 20-30% in the weekly cycle off the option I'm buying, but this market has created this interesting dynamic where we're not really seeing super low implied volatility in the back months right now relative to the weekly cycle for these earnings announcements. I've seen a few other ones that are like this too. Like normally I would expect to see $10 of implied volatility in December with $6 in the 2-day, like a huge dispersion like that. But right now we're still seeing plenty of implied volatility in these back months, which is going to make it harder to do cheaper diagonal spreads. So yeah, I think I'm going to do.
I mean, because this thing could definitely move on earnings that time.
Yeah.
I'm looking at the last quarter, though. It was actually kind of quiet. 7/16. What did April look like? Oh, April was during the storm, so that doesn't really count.
Yeah, I think I'm going to do this. So I'm going to do the 100, 110, long D's, short November, pick up $400 against my $11 debit on the long option. That way, if this thing sells off, it'll be much easier to recoup if we get a rally back to like 90, 95. It's assuming it goes down below that level. So yeah, I'm gonna throw this on, and this is a $6 debit for a 10-point wide spread, so there's no risk to the upside. If you do get that rally, you're still gonna make a couple $100. You just don't have nearly as much risk to the downside because you're reducing cost basis by an additional $300. So let's ship it. 645, 5-cent improvement. Uh-oh. All right, we're long. UAL earnings. 645, long December 100, short the November 110.
Nice.
Yes, yes.
Yeah, we could. I think the bullish case for that is where oil is right now. I think that could help them some.
Yeah. Lower costs for fuel if demand stays strong. If they beat both EPS and revenue, you could see, even if you get a 2 or 3 point rally, like it's not going to matter. It's still going to be a good trade.
Yeah. And I always remind people too, I will say, you can always try, if you don't necessarily feel like playing the actual earnings thing for earnings, especially in this situation, the airlines generally move together. So you can always look at AAL as well. You can also probably look at the LUV. I mean, you can look at some comparables as well.
Yeah. AAL is earnings next week, the 23rd.
That's the best thing about it. You get like the free look, right?
Yeah, for sure. But yeah, United reporting first, and then LUV, AAL, and then DAL.
DAL, that's what I was trying to think of.
They must have. Did they already report?
They might have. I think last week, actually.
Yeah.
I think. Oh, yeah. Well, see, that's the other thing. Yeah, what'd they do last week? Was it last week? Was it like late last week?
It had to have been.
I think it was.
Double check on that.
Yeah. Wait, where is it? Oh, jeez. I don't know. I think they did, though. I don't see it for some reason. October 9th. Yeah.
There you go.
Yeah. So yeah, last week.
On the day before the mayhem.
Yeah, exactly. So that's a little tough. It's really tough because a lot of times I like to look at that and see what they did on earnings and what they said. And I mean, obviously, you know, if DAL sneezes, AAL catches a cold, and the rest, you know, and so.
Yep. I like that. If DAL sneezes, UAL catches a cold.
That's what it is.
Love it. Cassie actually had she said it's like having six in one hand and half a dozen in the other.
Yeah, yeah.
I was like, that's amazing. I've never heard that.
You never heard that one? Oh, yeah, yeah. 6 in one hand, half a dozen in the other. Oh, yeah. Yeah. Tomato, you know, they all kind of mean like.
Yeah. All right, some questions from the YouTube chat. Again, if you want to join us there, Tasty Live channel. You'll see this video streaming live. What do you think about TSM? That was the first one I saw.
Yeah, so this is the other one that has, is this earnings tomorrow? It's coming up soon.
Yep.
Tomorrow, is it tomorrow evening or tomorrow?
Tomorrow before they open.
Before the open, yeah. I was looking at this one. I mean, this is usually one where I just like totally calendar called it up. I just feel like it hasn't been earnings that these semis have been moving on. It's been deals. It's been other stuff. So I don't know. I haven't decided yet whether I just want to throw money at it. I mean, if I do, again, the reason why I do the calendar calls is because it's usually for big upside plays, and I usually do it outside of the expected move. So in this case, I'd be looking at the 320 area, right? Like just a 320 calendar call, which is fairly cheap. It's $2 and change. I just don't know. I mean, does the thing I like about the calendar calls, I usually do it on stocks that are either sort of, maybe consolidating like this one. They're not necessarily on highs, though, and they might return to former highs. In this case, I would be betting on it going to no man's land. As far as I know, I don't know the last time TSM was this high. So I've been debating about it. I probably put it on later in the day. I probably will end up putting on a calendar call. $2 is fairly cheap for the 320, but that's what's the expected move? Yeah, I mean, well, there you go.
14 points, so yeah, right there.
It's possible.
What expiration is he looking at?
Just front month, 2 days versus the October 24th. Just the 320 calendar call.
Okay, yeah.
2 1/4 almost, probably, to a little over.
Yeah, so you're basically
just I've already talked about it. I might as well just do it.
Yeah, you're just banking on an upside move. The 9-day will hold some premium relative to the short that'll go to zero.
Absolutely.
Yeah. It's definitely a cheap way to get pure exposure to the earnings announcement and limit your risk if you're wrong. You can go more long-term too. You could do December, November. That's a little bit more expensive, but same idea. And then on these types of trades where you have a 60-day long option, you could turn this into a diagonal spread, do something like that. But yeah, plenty of implied volatility in this one as well. 13-point implied move relative to 30 in November. This one is projecting some pretty hefty implied volatility in these back months, which is why it's much more expensive. But yeah, I like the 9-day, 2-day for situations like this where you're really capitalizing on that 2-day short premium.
And it's fairly cheap. I mean, it's $200 in premium. And again, you do have the opportunity to win in a multitude of ways, like Mikey said. I mean, if of course you need the stock to move up, right? Like, and that's the most important thing. But you get the chance to possibly have a long call that gains a little bit more value, and the one that's further out, as long as it doesn't completely blow through strike. And if it blows through strike, well, this is the other thing that happens in my head as far as chaos. If that blows through strike, there's probably a bunch of other semis that are moving really that big that day, and then it creates just other trading opportunities. So,
indeed. Bloom Energy looking for some help in managing an inversion. 65.90 strangle with 65 days left. So you're in December. So yeah, the 65.90.
Yeah, whoa.
Also have the 100 call with 93 days and short the 100 put with 37 days. Should I just wait for time to pass? So you've got a lot going on here. The 100 call.
Do you believe in going inverted?
Yeah.
You do?
Yeah. Especially in like products. If you're going to do a strangle like in a product like this, like 100% IV, going inverted and manipulating the strikes is a lot easier to do than if you're doing it in like a 30% IV product.
Yeah, correct.
But yeah, I like to go inverted and keep the inversion under my total credit received. So like if I have $1,000 in credit, I won't go more than 10 points wide, just to make sure that if I'm right and the stock retreats between my strikes, I can still profit at expiration.
Go inverted.
Yeah.
You got to do it,
Yeah.
Somebody says it.
Especially in like products like this, like you really have no choice.
You got to do the Top Gun.
Yeah. But yeah, it depends on what your credit is, honestly. You need a sell-off regardless here. The 37-day 110 put. So if we just look at this in totality, it really depends on where your credit is here. Like if you have, let's just say, $50 in credit, you have a locked-in loss regardless of where you're at with this current setup. So you would need like a $10, even more. You need, $100 credit.
I love it, Chase. Mike
There
was
you
in a
go.
4G inverted die with a MiG-28. I love it.
There you go. Yeah, I mean, it's tough. You've got a lot of different positions here. You clearly need a sell-off. But if you get that sell-off, I might be looking to peel off some of this, manipulate the strikes, ideally getting yourself back into a scenario where you've got a couple $1,000s in premium and you've got a straddle like near the current stock price or an out-of-the-money strangle, something like that. But yeah, it's a tough one.
I actually just put a strangle on here the other day again. I had one maybe a week or two ago. Wasn't working, got out. It after the big move more recently, got back in actually just 2 days ago, and I got the 80-140 on. And I've been debating whether to roll the 80 to the 90 strike. So maybe you do get your sell off at some point back down towards 90. Maybe that helps some. That will definitely help, obviously, in your situation.
Yeah, and don't forget, there's also like you don't have to follow the lean short narrative here. Like if you had a strangle on and you were neutral, you can move all your strikes up. Like you can do that. So what we just had on was a $12,000 credit with all 4 of those strikes. If you wanted to neutralize the delta, you can just buy that back and move it up and do it for a scratch or close to it. So like if I had, for example, a 100 strike 80 inversion in November, this is $5,400 and it's leaning short. If I wanted to neutralize this, I could buy this back and do something like a 135, 120 inversion or 115. I can do this for a scratch. So like if you look at my greens that I'm buying back and my reds I'm selling, you can do stuff like this and just shift your current credit all the way up and offset your deltas if you don't want to be short. I've done that in iBid a couple times. I've done that in DraftKings a couple times. So you don't have to underhedge if you don't want to. You can move the strikes entirely and just do it for a scratch. So that might be another option, especially for a position that if you don't want to be that short with 4 legs, you can shift all that stuff up and just reestablish where you're at.
Yeah, there's plenty of ways to make it easier on yourself.
Yeah. How are we picking our one-day SPX strikes? So I'll throw one on right now. So we've got the 1-day PM settled that we're going to choose here. So the AM settled is the expiration where if I threw this one on, I'd have to wait until Friday morning to get the settlement price. So if we want to stick to the 3 p.m. close, we're going to go with the 1-day weekly here, October 16th. And basically, I've just been going to near or just inside the expected move, leaning a little bit long usually, and picking up $200 on a 5-point wide spread. So let's just see what we can get here. If we go right to the expected move, $1.90, on the 66.15, 66.10, and the 67.20, 67.25. So this orange bar implied move is basically your 50-50 shot, kind of 25 delta area. I like to pick up, because I'm holding overnight risk, I like to pick up more in premium rather than less, because if there's a huge blowout move, I'm going to be a loser anyways, and I would rather have more credit to offset my loss. So I'll just do this. I'll route this for $200, see if we get filled here. And this would lean me slightly long. We got 50 points to the upside. Yeah, pretty neutral here. But if
you're trying to get it for 2?
Yeah, for 2. And yeah, you can do stuff like that. So like we've sold off from the highs. If you think we'll retouch the highs tomorrow, you could move this put spread up. You could bring it up to like 66.40, 66.35, or anywhere in this range. And then you can bring this call spread out above the expected move here and get a similar premium. So you can skew them slightly. But yeah, generally speaking, 5-point wide spread, collecting $200, sort of a chicken iron condor setup. And like we saw this morning, I was actually tested on the upside, and then we got that 20, 30-point sell-off, and it went from a $100 loser to a $100 winner really quickly. So these things will move with smaller moves in the market than you might think. So I always have a GTC order in for these, just in case I'm away from the desk and you get, a flash sell-off or whatever you need.
Mm-hmm.
But yeah, we'll see if we can get filled there. Got it at $2 right now. And we'll go from there.
Yeah, I'm trying to join you on that trade. Same thing, $2. See what happens.
Sweet.
I love the 0 DTEs.
They're great. They are great. Nick and I just did an Ask Tasty Live segment all about 0-day stuff. So we got
nice.
Mm-hmm. If we want to get more deltas in gold and silver, how should I do that with my existing positions? I've got some diagonals on close and reestablish, add contracts, close and do a zebra. So you could do what Liz and Jenny do, which is ratcheting. That would actually reduce your deltas though. So ratcheting a zebra is like when you have a zebra on, it starts to become a profitable trade. You buy back you close out of your current one and you just move to a new one that's at the money again, and it removes the monetary value from the table, but it still gives you that continued upside with a basically stock rental position. So if you want more deltas in gold and silver, same kind of thing. Like if you have, let's say you have a 360, 390 diagonal spread on gold. Let's say you bought it for $1,500. It's trading for 21 now. This is completely in the money. So what you could do is you could sell out of this one and then just reestablish, go to like a 390 December and go to a 415 or 410 November. So now you're technically reducing your deltas, but you're giving yourself a lot more upside profit potential because this is not yet in the money. So I would consider doing something like this if you're trying to play for continued upside movement, but remove some of that monetary risk from the table.
Yeah, I mean, that's the simplest way to do it for sure. And you take a little bit of profit, right? Now you're playing with house money a little bit.
Yeah.
Almost, given that scenario. But you're playing with some house money.
Yeah. You definitely reduce risk in that scenario for sure. TSM, let's see, a 400. Okay, so yeah, that's exactly what Jamal was looking at. The October 17th, 24th, 400 call calendar.
400?
400 call.
Whoa.
So this is not what I would do. Because, first of all, you're not selling this for anything. Maybe you're looking at the 300 call calendar.
I would assume so.
But yeah, any of these. So the problem with this trade. So the 9-day, if you stick within the expected move or around the expected move with the 9-day, it's fine because if you get the rally, these options are going to appreciate in value. When you go this far out of the money, if you get a TSM move that's only like 3 or 4 points, these 400 strike calls for 9-day are going to zero. Like this premium exists because it reflects the possibility of TSM having a blowout move to the upside. If that doesn't happen, these options go to zero. So that's going to be a losing trade, even if you get an upside move. You need a blowout upside move for this thing to work for you. So yeah, I like to stick within the expected move or at the expected move. Like we're looking at the 320, which is right at the expected move of the 9-day. So you got to be closer to the stock price if you're doing the shorter duration diagonals. But if you're talking about the 300, I think that's fine. It's just a super neutral way to play it. You're playing for a really inside move where if you create some delta here with the 320, you have way more profit potential because you're going out of the money versus just trading this extrinsic value that exists right at the money. So I like to go out of the money and lean a little directional, but it's up to you.
Yeah, expected move is a lot of what this trade is about, like Mikey said. And so what you ideally do want as you're putting these on is, A, for the expected move to kind of jibe with what your strikes might be, and possibly a little bit more upside. Like, again, in this case, we saw the $14 expected move gets us the 318. But if they blew out numbers a little bit, you could see it exceeding that, maybe 320 or 325. And this will actually still kind of work out on that.
Let's see. Follow up on AMD. In a poor man's covered call, want to roll the short call up and out. How do you think about the strike and expiration choice, and how would you manage?
Good question.
So let's check it out here. Okay, AMD is just
rocking. I mean, a lot of things have pulled back today. This is not one of them. This hasn't pulled back much at all.
This has been the craziest trading year where it's just like things are just right in front of you, just waiting to explode to the upside, and it's just
I know.
It's insane.
I know.
Literally all these stonks. All right. 165, 225. So you've got April 2026. Okay.
They're long or short? Oh, they're short that one?
Yeah.
Long. They're long that one. Oh, okay.
So the Nove 7th, 225. Okay, so you've got a $1,000 winner here. Nice trade.
Nice.
Want to roll the short call up and out. So let's just get rid of the long and just focus on the short here. So this move has pushed this in the money, which kind of hurts you in terms of your flexibility because now you have $10 of intrinsic value here that you have to replace with extrinsic value when you roll out in time. With that said, if you were to buy this back for $2,200, I keep it simple. I'm just like, okay, I'm buying this back for $2,200 in isolation. Where can I collect $2,200 out of the money? So you could go to December. If you buy this back, which is right in the earnings cycle, and you go to December, you can sell the 240 and pick up 62 cents. So this offsets all of your intrinsic value with extrinsic value. It gives you another 7 points, 7 points of upside movement to the upside. Plus, you're removing that intrinsic value. So you're moving the 225 to the 240 for a 50-cent credit. So that gives you all that upside profit potential. If AMD continues higher through earnings, it's going to yield a lot more profit potential than your current setup because your current setup is offsetting your gains in your long call. So I would consider something like this if you wanted to be even more directional and basically get rid of the thought of implied volatility contraction and theta. You could go to January or February and go even further out of the money. But I might go to December for now, considering the upside move, because the nice thing about this trade is if you go to December and you sell that 240, if you get a reversal of this move tomorrow, you could buy back that 240 and then you could go to January, move it up and out that way. Or you could just keep the 240 or, leg in and out. So I would go to December and keep it more near term personally, but that's pretty much it.
Nothing to add. It's perfect, man.
Couple minutes left here. Just a quick recap on what we've done today. So did you get filled on SPX?
I did not. No.
I did not either.
No. It's at 195.
They're going to make us wait.
Yeah, you know they are.
Ooh, it's bouncing around. Tasty FX, I got short the pound dollar, 5 microlots, and then I got another 5 microlots of the short dollar CAD. So I'm up to 15 microlots there. Need a little sell-off there. But yeah, what else did we do here? Oh yeah, UAL. So we got the UAL call diagonal spread on. That is the 100 December long, short the 110 November for 645. If you get an upside move, it'd be perfectly fine. And yeah, we'll keep our eyes peeled for some other stuff later today.
Yeah, I think I'm going to do a diagonal in there too. I got to think about some strikes, but it's clear this is kind of a risk off market a little bit today. Like I mentioned, some of those high flying names that have been moving around a lot seem to be quieting down today. I don't think it's it though. I think it's just it's just a breather day, and I think this market is here to stay for a little bit.
Yeah, it's good to see two-sided action, even intraday.
Yeah.
I mean, we've had a 50-point sell-off from the open this morning. And yeah, like you said, vol is staying bid, not really moving. All three of the remaining futures, the V, X, and Z for this year are flat. So the Contango has been zapped out of the market, which speaks to what Jamal said in terms of these markets continuously flying around or being projected to continue to fly around, which we will take.
Absolutely.
Love it. All right, I think that's it. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. Again, Glenn is at Glenn Freibarger with an A. Give Tasty FX a follow as well. But yeah, we'll see what happens the rest of the day. We will be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday, around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
What's going on, everybody? Welcome back to another segment of Risk and Reward. The market's selling off, the market's rebounding just on time as the segment's getting started, as always, right, Gus?
Yeah, what I just said to Ariel before we went on air is, why do we even sell off in the first place? What's the point? If we're just gonna reverse it, 2 minutes later, what's the point of selling off in the first place? But yeah, a little bit of vol, a little bit of a chop coming in. It presents some good buy spots. I know Jared's gonna be looking to sell some premium, as he alluded to yesterday. Excited to hear about that.
Yep.
And yeah, feeling good. Trimmed the mustache, which as always.
Did you?
Yeah,
oh, it looks good.
Yeah. Took care of that this morning. Finally, it was long overdue. It gets real annoying getting in the corners.
What's the frequency maintenance on something like that?
I'd say like once a month, probably.
Okay.
I think if I people who really care probably do it more often than that. But I just do a rough little trim once a month.
Was it scissors?
Nothing sophisticated. No. Just I use a razor.
Okay. With the
I
guard.
use like my standard electric razor, but then I take a comb. So
Okay. I wasn't sure if you just use like a really large guard or whatever it might have been.
I was just raw dogging it with the electric razor at first, but then my my hairstylist, who she'll also take care of my mustache every time I go in, she was breaking out the comb, and I was like,
she was getting it.
Watching her technique. Yeah, it rubbed off on me.
Okay, no, looks good. What's going on, everybody? Hope everybody's doing well and not flipping too much on their positions. I took a few trades today. We'll show all the entries and exits with all those trades here in a little bit, and then after we will get into the Tasty Trade platform. I know vol was expanding a little bit. Maybe it's coming back in now over the last 20 minutes. We're now bouncing, so maybe VIX is coming in now, but we do got some things to talk about. Some quantum computing. We're getting crypto pulling back a little bit. We got gold and silver still going strong. We got to see where they're at relative to our moon positioning. But we'll start it from there. Let me just go ahead and put some ranges on the chart just so we can grasp a little bit of context as to what exactly we're looking at, and then these entries and exits will make a little bit more sense.
Gold is so ridiculous, man.
What's that?
Gold is so ridiculous.
It's a different beast, right? We could even start with that.
I see, Tafe Dozy there in the chat saying, Oklo, ASTS, IRAN, RGTI, LEU, IONQ puts all paid.
Nice.
Yes. We are finally turning over on the bubble that I alluded to yesterday. I just got short RGTI myself not too long ago, posted that in the follow feed. But yes, we are finally, whoa.
Give me a couple moments. We accidentally clicked an ad over here.
Damn it. Good marketing. Anyway, Gus, didn't you short the VIX yesterday? Yeah. Yeah, I did. I'm still holding that strong. We're not down too terribly, $40 at the moment. But yeah, I need VIX below 18. I'm 12 DTE on those. The whole thesis is that it just takes one good day to knock down the VIX. So I'm not abandoning this conviction yet by any stretch of the imagination.
Especially with the market we've been getting, it's keeping you on your toes. Before it was like, okay, a 1,000 move, a 1,000 point down move. It's like, all right, maybe we put the top in, maybe we're getting that volatility, but the market's being extremely more resilient than it already was being beforehand. So
it's true. All right, you ready to kick back to you?
Yeah, I'll get over here. We got IONQ right now. I think I sold a call spread on IONQ, defined risk. That was one that was so tempting to go undefined risk, but because of the nature of how volatile these names can be, it's like, defined risk, feel a little bit more comfortable in there. And then at the same time, Just not wanting to. What's the opposite word for catching a falling knife? Picking up pennies in front of a steamroller.
Oh, sure.
We got a couple other
flying
ones.
knife. I don't know.
A flying knife. I don't want to catch a flying knife. That's valid. That's a good one.
Yeah.
That's valid. But no, IONQ finally pulling back a little bit here. I'm not going to add to my position to add more conviction. A zebra wasn't out of the window in terms of strategies too. It is a cheaper underlying. So if you are trading stock equities on something like IONQ, just looking to take advantage of the, sorry, I lost my train of thought. Looking to take advantage of the volatility in the market, you can get a little bit better buying power using some of those zebras. So we can take a look at RJTI, because I know you chose RJTI over IONQ and the other quantum names we could have chose, right?
Yes, I just feel that RGTI is the most, parabolic, unsubstantiated of these moves. I don't disagree that RGTI should have taken a run given all the recent news. But I mean, this company reported 1.8 million with an M, not billion with a B, million with an M dollars in revenue last quarter, and they are currently valued at 15.5 billion with a B dollars. So I mean, we're talking about I mean that's orders of magnitude 1,500 times their previous earnings call is kind of what we're talking about with the valuation on RGTI right now. So it just feels inflated. I detailed the specifics of my position in the follow page, but my broader thesis is that they have earnings November 11th or 12th, one of those two. And so I have November 14th as my expiration date. So if we get the sell-off before then, great, I'll happily take it and head to the bank. But if not, I'm thinking that earnings call that happens midweek right before my expiration might be enough to remind everybody that this is a little unsubstantiated and it, ignite a correction.
Right.
That's where I'm at on RGTI. But
no, 100%. It seems like a lot of the other lines are in the same boat. It's been getting juicy. We've been seeing a little backwardation. I think I'd seen Jamal mention that earlier today. When we get into the platform, I think I have a watch list set up with all the VIX products, so we can check out backwardations, Contango. We even spoke about that in a little while. IBIT fizzling out. We were speaking on IBIT yesterday, right?
Yeah, I got long some ETHA either yesterday or the day before while we were on air.
Yeah, I know. Crypto's been taking a little bit of a hit. It was funny. Today I was making a video, a short form video, and I was talking about how I was like, housing market at all-time highs, crypto at all-time highs, the overall market at all-time highs, right? Like NASDAQ, the Russell, the S&P 500, all of the assets at all-time highs. Gold at all-time highs, silver at all-time highs. This is one of the first moves I think I've seen in the market where we're finally starting to see a little bit more of a disconnect between all of those assets. I know gold is still really resilient, very resilient. Bitcoin pulling back, but quantum computing especially getting a little weaker here. So it's nice to see correlations fall off from one a little bit, because I felt like I was trading the same asset among different assets.
Yes. Well, yeah, I mean, that is kind of what we've been getting into. I mean, especially with gold and silver. Yeah, it's like they have been moving so correlated with the market that you could just substitute, almost anything in for it. I guess gold and silver, maybe not gold specifically. It's seriously been moving, but there's so many assets that are just moving directly alongside the overall market. And yeah, I mean, as you alluded to, it makes it a little frustrating when pretty much no matter what you trade, you have to go at it with the exact same sentiment all the time.
No, 100%. 100%. I've been taking a little bit of a beating today, dragging these ETFs down. But let's take a look at NASDAQ. I did take a few trades today. And we got chopped up a little bit. This morning, the market was very volatile. There were some areas where we could have taken some profit, but because of how small the range was, we didn't think it was worth it. We, as in me, and I think we took about 3 or 4 trades today. So let's go to the 1-minute chart, zoom in a little bit, and look at the details where we were getting involved. Let me go over here.
RGTI is overvalued to me right now. That's my personal opinion. Yeah, I absolutely agree, Donna.
Yeah, all those quantum computing names. It's tough to be patient when you, not that you know what's coming, but like the potential destruction when valuations are overvalued like that. It's like tough to sit on your hands sometimes or catch that opportunity when it comes. But
I already lost an RGTI short once. I'm just diving back in. I'm ready to get hurt again, I guess. But yeah, it's just I refuse. Like Palantir was one that I was like, this is going to stagnate sometime, and it'll have to, and it kind of has. And that was not one that I was trying to time up, but I refuse to not be an RGTI.
So that was, you said Palantir.
Back down. Yeah. Palantir. I mean, yeah, that's just the classic example of something trading, way ahead of its valuation. But it has just kind of stalled a little bit in recent months, hasn't really made any major headway since the beginning of August.
I got you.
Which, yeah, I think is justified. I don't think that that's unhealthy or it means that the company's doing bad or anything. I just think it needs to breathe for a little bit. RGTI is a bargain at any price. This is great.
Yeah, it depends who you're asking. But so what I'm going to plot right now is I'm going to plot the value area or the one standard deviation range on NASDAQ over the last, I believe, 2 or 3 days. So that's where these levels are coming from right here that I'm about to plot. A lot of the levels got messed up as we were hopping up on here. So 25,107 is the value area high, 25,107. As you can see, you can kind of see the range that I was trading in now. The value area low was 25,029. Let me adjust that. 25,029. Because I think there's a lot of value in terms of, like, again, the thought process and then how do you manage the trades when they go against you? Because the green trades that work in your favor are never going to hurt you. Never going to hurt you, right? Obviously, the math has to work out at the end, but this is what we were looking at, and this is why I was managing some of these trades. So this is that first standard deviation range from this week. So it's a newer range. Usually, you might feel a little bit more comfortable using data from like all of last week or the past 2 weeks or the past 3 weeks, and then you can find the levels of value from that portion of data. But this snapshot of value right now is again from this week. So we built this level up here. I was pretty bearish this morning, so the initial trade was taking a couple shorts. That was working out pretty well. We took the initial short over here. Let me get the drawing tool out so it's a little bit easier to follow along. So for October, it was a truck, not a treat. Yeah.
Yes.
It was it was a Mack truck.
Yes, we were joking about that yesterday.
Oh, okay. Yeah, no, that was a Mack truck. So we took a couple shorts. We could have decided to cover at least half of the position after we took out the morning low. Like, that's always an option because whenever we take out a day high or a day low, you know, the market has a tendency to do whatever it wants to do. So that could have been an option. But what I was actually anticipating right here, which anticipating isn't always the best thing to do in the market, I was anticipating the shift from balance to imbalance. So it's like I wake up today, the market's trading with imbalance. I know I'm going to be looking for mean reversion strategies. That's why I took the shorts out of the gate in the morning. Now we sell off. Again, I got to consider, do I want to start scaling out at these day lows? Or do I want to, trade the anticipation for the shift to imbalance, from balance to imbalance, to where then we could kind of go into a price discovery type mode or more of a directional market. But all morning, it was extremely choppy. We cut that one at break even. That was fine. We took another short. We cut this one at break even. So we got boom, boom, back-to-back trades, right? We sell off down to our level of value. I take this long, right? So at first I was looking for the shift from balance to imbalance. And then when I recognized the market was giving me some fits, I was like, you know what, this might be a range day. And it's like, it's funny how when the market gives you more information, you start to gain a little bit more clarity and you start to become a little bit more decisive. Not that your decisions are going to be correct, but that confidence and decisiveness that you need sometimes in the market really helps you snag the really great risk to reward trades. So that's why I pulled the trigger on the long there. We popped a little bit, and I took that one off both contracts just to cover a couple of the losses that we just took. And then at the same time, I realized, like, wow, I already took 3 trades, right? The market hasn't even been open for 30 minutes. It's like, I need to pump the brakes a little bit. So that was a thought process for some of the first trades. 2 losses, 1 long at the bottom of value. This was another hesitation long because I already took 2 losses. This is one where I was like, I got to stay a little bit more disciplined. Let the market develop a little bit more so we can get a better read. In hindsight, that would have been another great long. This was another break even. And outside of that, I think that was the main trades this morning. I mean, it was a tricky one because we also tried to shift from balance to imbalance, like over here, right? We kind of started to break. So anybody that were shorting these pops are going to get ran over right here. But we ran out of momentum, right? Like the market couldn't hold, the market couldn't take it higher. We started consolidating, making lower lows. And now I'm thinking, okay, we tried to pop out of this value area. We might have a failed auction here now because we didn't have another level of value to attack to the upside. So with that being said, when we got that failed auction, it was like, okay, some bear opportunities is the play right now. So then we got a little bit more of a solve there, but we'll take a quick pause there to catch up on everything. I know it gets a little hectic with multiple trades in the span of 30 minutes to 45 minutes sometimes, but
that was a little bit of the thought process. Got chopped up, got lost in the sauce a little bit today.
Sure, yeah. I mean, yeah, I think that breakdown and that the risk management of that is important. Mike
tough.
asking, hey, Errol, can you explain how you're finding those value areas? You plotted on the graph?
Yeah, 100%. So they're all going to look different, but the value areas are always going to come from the volume profile. So whether you take the value area from this week or the value area from last week, or you can combine the value area from this week and last week. So depending on the subsection of data that you choose with your fixed range volume profile, it's going to have a different level of value, right? Like if we take value from over the last 6 months, we can see where there was the most market interest. Where was the most volume traded over the last 6 months and at what price levels? And when we can see that chunk of volume, we know there's a level of value over there. And let's say we take the last 3 months, that value might change wherever that one standard deviation or that chunk of volume. So that is more so the answer for that. It's going to be relative to the data points that you're specifically taking.
Do you want to pull up the volume profile here?
Yeah, I'll pull it up right now. Yeah. But to your point, we got the drawing tool on. Let me take that off.
No worries.
There's a couple different ways you can use a volume profile. The fixed range, I think, is easier to do it just because you can get that exact window. But you can also use the other volume profile. Let me find it real quick.
Oh, good.
But yeah.
What did Steven say? Something made me laugh. Oh, sorry, my IBIT long position crashed the cryptos. My bad. Yeah, I feel that sentiment, Steven. Don't worry. But I agree. I mean, I think we're going to bounce back. I mean, I view cryptos. I don't know. Similarly to bonds. I mean, at any time that there's a dip, I think crypto is a buy. I got long ETHA. Whoever was asking about Macro Brewski up here. Is it too late to buy OTM calls in GLD in the IRA? I remember Tom saying gold could crash 2,800.
I don't think so.
I don't think so. I assume you're talking about getting short gold in that context. I'm short silver, is kind of what I would say on the matter. I don't know that I could, in good faith, say. I mean, gold is just this is such a parabolic run up on gold that I have no idea how to even time the top, how much higher we're going to go. But at some point, this has to chill out, in my opinion, which is why I'm short silver. My silver shorts are into the end of the year. So just gave myself, I have 76 DTE now, December 31st on the nose is the expiration. So I'm going to just let those eat into the end of the year and hope that we'll take a dip below 42 in SLV by then. But yes, I think that the metal run has to end sometime, and then the question becomes how much of its value can it hold, and how much will it give back? Which
no, the moon can keep adjusting higher. So actually,
we can keep our moon higher.
Yeah. No, but that rebound on gold is no joke. I mean, we even sold off a little bit today, and it looks like the same picture almost every other day.
No, yeah, I mean, it's like, you think,
I mean,
you think it's time, and then it's never time.
I mean, if you bought every dip,
the bears, I mean, the bulls just come flying right back in. It's insane. I mean, and again, it's just very similar to what we've seen in the broader market. I mean, anytime that there's a dip in SPX or NASDAQ, it's incredibly short-lived, and everybody just swoops in to buy it up. I mean, SPY was down 0.8% when we got on this show, and now it's 0.33. I mean, it's ridiculous. Stuff immediately snaps right back.
No, and it looks like gold is going to take the day highs here in just a couple moments while we're live again. So we're getting all these volatile movements, during that 12-to-1 slot. It's looking like somebody's kicking on the buying pressure, the algos, whatever you want to call it. Let's go back to NASDAQ quickly. Look at some other levels of value that we're going to be looking out for.
The value area includes those where my puts remain out of the money.
Hey, it sounds like you got involved in the spot where the action was taking place, is what I'm hearing.
I saw that there's some news breaking this morning that they're looking to form leveraged ETFs for crypto now.
Oh, yeah?
That's like the next step.
Is it like a you know how we'll have the triple leveraged ETFs for like QQQ?
Yeah, that's what I was reading. I forget who's spearheading the charge, but they want to do a 3X and a 5X for both Bitcoin and Ethereum, and they want a 3X for XRP as well.
Okay. Long-term triple leveraged ETFs is probably not the move, but for short-term, it seems like that's what they're targeting.
It's a great trading vehicle.
Yes.
But in long-term, it doesn't make a particular ton of sense. You might as well just buy the stock. Or, I mean, you can diversify. Like in my long-term portfolio, I hold regular Qs and then at a 1-to-4 ratio TQQQ, which is the 3X leverage on Qs.
I got you. You have a TQQ and SQQQ, right?
Yeah.
Inverse ETFs.
SQQQ is inverse, right? But TQQQ
I believe so.
is leveraged.
I forget. Which one was it again?
S is the short.
Short, okay.
S for short. And then, T is the leveraged.
Got you. Low for the day? Not too sure. I actually have no clue. I actually don't even have a hunch. Like, sometimes I'll have a hunch, but I don't even have a hunch.
I have. If anything, I think we go higher.
Yeah.
If you put a gun in my head and made me make a decision, but I agree. I have very little hunch.
Because the next level that I would be interested in the market, just speaking from, let me double check, where is this data from? So from the data from last week, the next level of value, the downside is going to be at 24,644. So whether we get down there today, whether we get down there tomorrow, that's going to be another area to at least pay attention to. Not to say that the market is going to bounce right there or the market's going to sell off right there, but it is another one of those standard deviation levels that we can pay attention to in terms of behavior and direction.
Data Trader says he had a dream last night where Ethereum went to below $8.
Below $8.
I hope that would be a bit nuts. Hopefully, I'm not a prophet of that.
We got to ask the real questions. What did you do when it went to $8? What did you do in that dream? Don't leave that out.
What was the market action like at the $8 price level in the dream, Theta? We need details. I have a covered strangle on GLD where my 390 short call is breached. I'm thinking about letting it ride and take assignment. What are your thoughts on this? Roll up the put or close it? That's a very interesting question. GLD 390, you said? My cost basis on the shares is 370, so I'm sitting pretty. Yes, yeah. In that case, I would say I think that you have the right idea. I mean, provided that you have the capital to eat assignment, I don't see anything wrong with that. SQQQ is bear 3x, even more. It's leveraged bear. QQQ. What's the standard inverse QQQ then? Not even sure.
The standard QQQ 643.
When does the put expire is also a good question. I kind of assumed you meant end of week in the context of that question, but that is necessary. It held around $7.52, and I was buying 1,000 lots of coins, says Theta Trader. All right. We know what we're doing if Ethereum touches $8.
It held around 752, and I was buying 1,000 lots. Is nuts.
752 is so specific, yeah. Oddly vivid dream, yeah, it sounds like it.
Honestly, 1,000 lots at 752 sounds fire.
Yeah.
That wasn't a nightmare. That was a great dream.
I wish that I was buying 1,000 lots of Bitcoin at $5, but I was busy I don't know, playing 9U baseball or something.
Come on, get with the program.
When was Bitcoin $5?
What, 2011?
Something 2010? Like that.
I still have 36 days on the strangle.
Google AI is telling me 2011. So yeah, that's my my fourth grade year. So I was busy in Miss Goldbach's class.
Yeah, honestly, bro, there's really no excuses. So please just stop with that. It was so obvious. I think they call that a wish fulfillment dream.
36 days on the strangle. Okay, that's longer. That's a longer time frame than I was thinking. I don't know. What are your thoughts on Steven's situation?
Let me go back to it real fast. We got.
I think if you have the capital to eat assignment, then that you're on the right thought process. Assignment is like something I always try to avoid like the plague in a capital preservation sort of context. But if you're one that takes assignments regularly or has the capital to do that, I don't know that's necessarily a bad call.
Yeah. I'm curious where your short put is at too. But gold is a beast. So I mean, if you could roll up, get a little bit more credit and reduce that potential loss, that would be nice. Just because, again, where's the ceiling going to be on gold? Who knows?
That is the other aspect of this is that if gold goes to 5,000, then I mean it's like all bets are off, and that would have seemed preposterous to say, I don't know what 5 days ago, but we just keep ripping higher. It's preposterous to say. Why are people buying the boomer shiny rocks and not the cool new age shiny rocks called cryptocurrency? That's my question.
Exactly. Asking the real questions.
Short put is at 350. I own 100 shares at 370.
Okay. This is like one of those textbook questions.
It is. I was going to say, this is like an exam question. This is like something that that I would have gotten my senior year of college, this kind of question.
Here, we'll go right to gold right after this NASDAQ, but just to give a little bit more of an update, what's going on NASDAQ. Into this afternoon, whenever we recognized, because one comment that I had seen on one of the previous videos is like, how do you put something like this into practice? And when we see something like this, right, we push outside of our level of value. We push outside of that one standard deviation. I mean, the market had not enough interest here. I mean, we just failed here. Not enough new buyers came in to really drag that momentum on. And we went from out of bounds or tried to back into bounds. So I think that's also an indication to show us that the market's pretty weak. right? So now whenever that happens, we're paying attention to the next level of value because we understand, okay, we can get a rotation here. It's like you could have been getting short here. It's a little bit more of a gamble in my opinion. You're like, yeah, it would have worked out, but I think that would have been hard to know and to be proactive about. I think it's a little bit more obvious in hindsight because this level right here ended up being a failed auction, but it could have easily been a level where participants were getting absorbed and then use that as a level of support to take off because, again, we're dancing the line between balance and imbalance right there. So I think that one's a little bit more obvious in hindsight. I decided to take the longs at this value area low. Yes, could have taken the shorts. Decided to take the longs, manage my risk, and called it a day. But the one thing that I really want to point out that I think is the main takeaway here is the fact that whenever we were in a balanced market, notice the price behavior. The price behavior is more range bound, so we know not to look for or expect more directional moves through there, right? So it's a little bit more range bound. We're a little bit more choppy. Those trades are going to be more quick scalps. You still want to focus on that risk to reward, even if it's a smaller range. But now when we recognize we're shifting from balance to imbalance, we have more of a directional type market behavior. So depending on if we're in a balanced or imbalanced, we understand the type of market behavior we can expect or that we're likely to get. It doesn't mean you're going to be able to have perfect execution, right? Because another thing is like two traders could be trading the same exact setup, the same, maybe they're both shorting the top side of value, and one trader might come out green, one trader might come out red. It all depends on your decision making and your execution like in the moment, right? So those were the two states we saw play out today, more of a directional market than a range-bound market. Pretty cool to have two examples back-to-back right off of each other. But that's where we're at right now. And now hands are just off the wheel until we gain a little bit more clarity. Maybe we make new lows. Maybe we make a high today. I don't know. Going to be watching for the rest of the day.
Yes, it will certainly be an eventful rest of the day.
Yeah.
And yeah, I mean, I think you're alluding to like realized versus unrealized gains and losses. Like you gotta, your entry and exit timings, especially trading,
100%.
This tight of time frames. It has to be.
Because I was wrong on direction, right? I took 2, 3, 4 longs right here. It's like if I would have been holding those longs still from here, understanding we have the possibility to shift into imbalance, I know that directional market could come, so I have to cut the risk. It doesn't have to. It could fake me. That's one of the worst things too. It could fake me out, then rip to the highs, but I'd rather not risk that, cut my trade, manage my risk, because I don't want to absorb a 50-point, 100-point downside on 3, 4 contracts, 2 contracts, whatever it is.
Well, yeah, and way more often than not, because we know where the value areas are, we're going to continue to move lower rather than move to make new highs in that situation. Ask Finn, because cryptocurrencies have no actual value. I mean, I would counter that with gold has no actual value. Gold has value because there is a finite amount of it and we want it and we assign value to it. And cryptocurrencies have value because there's a finite amount of them and we want them, so we assign values to them. I think that they are, similar in that regard. What's crypto worth after the power goes out? What's gold worth after the power goes out? Now that, Wit, is a good point. I have no counter to that. Good job. Oh, hell, this is dependent on my decision making?
Grumpy Mike always coming with the most fire sarcasm.
Mikos, Gus, you said you were short VIX. How did you trade it? I have a short call vertical on VIX is the short answer. October 29th expiration, which is 12 DTE. I'm long the 19 strike and short the 18 strike calls on the October 29th cycle is the trade that I took. They're down, the position's down about $10, $15 now a contract.
Or we're break even.
But I'm not. What?
I consider that break even.
Oh, yeah,
I guess we got our own rules, but to me, when I see a plus 10 or a minus 10 or 15, 20, I'm like, we haven't gone anywhere yet.
Yeah, and I'm even doing extra mental gymnastics to get there because I actually have 4 of them, so I'm really down $60.
I
but
see.
it's like, but that's only $10 each.
Right.
So, when you really think about it, it's that is like 10%. So I don't know, kind of significant. But like I said, I mean, the whole thesis with VIX is that all it's going to take is 1, maybe 2 straight good, stable green days, which have seemed to be a dime a dozen as of late. And VIX will just head back down to the 16 range. So, hopeful that thesis will work out. You see, though, being short VIX, I get long VIX often because I've been so long Delta for so long, and so it sort of acts as a hedge. The issue with short VIX is that I am just further loading essentially long Delta by being short VIX. It works the other way. There is now no hedge. Market go down, everything go down for Gus, except RGTI. RGTI would go up for me.
I mean, even VIX over the last few days, even though we've been getting those I don't want to say micro sell-offs, but we've been getting bought up back we've been getting bought so quick after the sell-off. I mean, VIX has gone from 23, a high of 23 to a low of 19, and then, trading within that range. And I mean, we get those pullbacks very quick on VIX. So
yeah,
it can come very
and
quickly.
that's kind of my whole thing is just the speed at which VIX pulls back.
Snapback.
Yeah,
It's coming like
as soon as things stabilize, VIX just wants to rip right back down to the mean. So
I got you.
Yeah, that's sort of my thesis there. That 1918 is like a little bit aggressive. I wanted to get out of the money because there was really, really good cost basis on these contracts.
Yeah.
But yeah, the 1819 is a bit more aggressive. Like the 2120 is kind of what I was thinking initially as a safer bet. Because yeah, I mean there has been plenty of time when I wouldn't really consider volatility to be high, where VIX is channeling in that 17 to 18 sort of range. So I might be the sense might come into play as this nears expiration, but we will see.
Yeah, we got some time on it.
Surely nothing volatile will happen in the next 12 days, right? People acting like it's volatile times we're living in.
I know. I do have a question more so for the chat and anybody that has more experience in this area if you're a little bit older, but what are your guys' thoughts on the housing market? If you've been in the market, right, you've experienced the market from the 2000s, let's say the 2010s, the 80s, the 90s, especially anybody that was living through the 2008 housing bubble. I am just curious on your thoughts. I would like to hear some of your guys' perspectives just on where we're at right now. It's always nice to hear different perspectives from different generations, people that have, purchased homes, sold homes, done this, done that, lived through the 2008.
Yeah, we lived through 2008, but I was like 7.
Actually, yeah, well, I'm talking like we weren't. Yeah, guys, lived through the 2008, lived through NOM. No, we were around, just not involved in the market.
I was alive. I just didn't care. I
didn't care.
I think I was playing the Wii.
Yeah.
I was playing
you don't know what you don't know. So how do you know you didn't care? Did you just not know it existed?
I guess that's true. I guess I didn't care because I did not know, which
That's
perhaps
good,
is just ignorance. Are we going to get into a psychological thing here?
Honestly, I feel like we could get into a philosophical conversation one day, and we could probably go at it for like an hour.
We definitely could.
Yeah.
We definitely could. We need to get, we got to do some Gus and Errol after dark. Until I can get groceries with it, crypto has as much value as Counter-Strike skins. It's actually a pretty good comp on crypto. Also, I want to say, I just like crypto okay. I'm not some crypto bro. I'm not going to die on this hill. That said, I don't think you could buy groceries with gold either. I think you would have to liquidate your gold and then buy groceries. I think if I walked into my local Jewel-Osco and threw some shillings on the counter, that they would say, you can't pay with gold.
Just pay with cash, guys.
Although they have a scale. That's what I would counter with. I'd be like, you got a food scale right there.
Yeah.
Just weigh this gold. I'm overpaying you here, guys.
No, just pay with cash. It's losing its value.
I think cars are the new homes. Oh, you mean in like a bubble context? If that was in response to the bubble thing,
I think cars are the new homes. Interesting.
That's an interesting perspective.
Like an RV? No, I'm playing.
Marry the house.
Marry the house, take the rate. You know what? I had a feeling I might see that comment in here.
Saw people losing it all. Yeah.
What do you in 2008?
Yeah. Yeah.
What does that mean though?
What do you mean?
Losing it. What does that mean? In terms of. I don't know. It just seems pretty vague to me.
House value, default on a loan, life's ruined sort of situation. They were just handing out loans willy-nilly to everybody.
Right.
So I think that there's lots of that where people defaulted. Although, I mean, I guess the banks got bailed out. So I was going to say who gets hurt more there, but they bail out the banks.
I think the middle class, actually, after all the bailouts, this, that, not to get into it, but the middle class probably is the one that actually takes a hit. Because you're right.
Housing market is tight, but not in trouble. Lower mortgage rates and insurance rates would help get the housing market moving. Yeah, I know, and I mean,
26.
I don't keep up with the housing market too in depth. But one thing that I do keep track of is inventories, just because I think it's interesting, and I think that's a really good surface level indication of just where the market is at and whether it's favoring buyers or sellers at any point. And I do believe inventories are up a little bit right now, but housing is all cyclical. Surely we learned our lesson.
Yeah, 2016 housing is going to soar. Wow. That'd be a short squeeze for like the housing market. No, but with that being said, it's just going to be interesting. Again, just morning thoughts this morning coming from some young guys in their 20s, right? I mean, we see crypto at the highs, gold at the highs, silver at the highs, the overall market at the highs. You just get curious.
Well, yeah, and there always is bubbles, and I think especially all this quantum stuff, which is starting to come down a little bit now. Well, thank God, but it was like we got to a bubble level there.
Yeah,
and when you can identify those spots, it's really good profitable angles. I don't remember who listed off every single quantum stock and said that they were short them all earlier, but like that's if you spotted that like sometime this week, good on you, because that you could not have timed that.
Yeah,
any
take
better.
3 out of the 5 off now. Cover those. Take some profit on 3 out of the 5. You got 2 more to ride down.
Yeah. Oh, here, I'll complain about something.
Yeah,
Capital
absolutely.
One, after I just lauded them yesterday, COF, they tanked. I'm so mad. I should have taken my profits yesterday. Yes, hindsight's always 20/20. But it was ripping. There was good news. The vibes were high. For reference, everybody, I need Capital One over 210 end of day tomorrow for these contracts to work out. So, like an idiot, I get a miracle recovery yesterday. I thought these were dead in the water, and I had 2, and I did not take one off. Why didn't I do it? Irresponsible trading out of me. So then this morning, it opens way down. It continues to tank. So when my entire position was at break even, I went ahead and liquidated one of them just to take a little bit of risk off and leave some room. That was at like the 207 level, and it's just falling apart. I'm quite sad. Something about lending. I forget the exact story that broke this morning, but. Yeah, this one, it sucks to see a winner turn to a loser like that. And I mean, like I said, yesterday, obviously hindsight's always 20/20. I should have liquidated at the highs yesterday, whatever. But this thing rips to 216. All the momentum is bullish. Felt like I would be fine to hold it for 2 more days and it would stay over 210. But with them, you never know. You never know in this market. I believe yesterday I said, I needed 4% out of Capital One in a week, and they said we'll do it in 1 day, and they did do it in 1 day, and then they gave it all right back today. Yeah. So. Brutal one there for me. But yeah, I'm watching this bleed. I think I'm probably going to, unless we get like a below 200 break or something crazy, I think I'm probably going to continue holding this till the bitter end. I'll go down with the ship on this one just because of the move that we got yesterday. And this Capital One, you don't usually expect it from a bank, but it really has the propensity to move.
That's true.
Intraday.
And I mean, to the point that you made, 4 hours ago. I mean, it was at 214 4 hours ago.
4 hours,
it's a bank,
yes.
right? And then yesterday it was trading at what, 203? And
216 was highs yesterday.
Good Lord.
Yeah. And the day before that, we were at like 205. Yeah. So, I mean, yeah, it does really rip back and forth. I've just, my levels are not quite right coming out of these lows for Capital One. So I hope we get a 4 or 5% day tomorrow because that's what I'm going to need. So
I got you. And
then I'll be kicking myself because I didn't hold both of them. So it's just FOMO left and right for me on this position.
So I see right here.
Margin Call is a great movie, Donna. Sorry.
Yeah. No, all good. I was going to allude to that next, but it said, I worked in the mortgage industry in 2008, right? I have seen $300,000 homes being, so 2008, a $300,000 home was like, I remember at that time, that was like pretty, I would say $300 home. That was pretty like solid middle class.
I think that's like upper at that time.
I think at that time it was upper.
Yeah. Right? I mean, have home values not pretty much just doubled in the last 10 years, more or less?
They have. So I think it has been about double. Because I remember when you hit like a $400,000 home in that time, I remember knowing like, oh, you're more now like upper class as like a 10, 12, 13-year-old. I remember people's homes that were $400,000. It was like, dang, you got almost a $500,000 home. That's crazy. So you're saying I've seen a $300,000 home being sold to McDonald's cashiers making $7 an hour. I see the reference you're making. I don't know if you're being for real or the reference you're making.
I think he's being serious. I mean, stuff really was that crazy. My dad was actually not in 2008, but in the early 2000s, he was a lender. Like as the regulations were getting lighter and lighter, I've heard lots of crazy stories in that vein from him.
Okay.
Collector's not the word. He worked for a mortgage company.
Yeah, but he's got a couple stories though.
But the mentality at the time was just like let everybody in, like find a way to give them a loan. It's not like now where it's like you have to prove to the bank that you're worthy of a loan. It was the other way. It was like all banks were just throwing money at everybody.
It's just crazy because that was like yesterday, right? I'm joking, but 2008 wasn't that long ago for us to make it a little bit more difficult to take out loans like that, to not put ourselves in a financial crisis. So the way that I think about it now too is like, right, I understand.
Brothers.
What's that?
I said Lehman Brothers, man. It's not even a comment I read, but I mean, they were like largely responsible for it and downplayed the hell out of it until it all fell apart.
I think margin call.
Yeah, 300K is 650K today. There you go.
I think margin call would be fun. We're going to have to circle back around to that. You know what would be fun? Like watching Margin Call or I don't know.
What's watching the movie Margin Call would be fun.
With the team.
For a lot of clarity here. We are not talking about getting Margin Call.
Oh, no. No, absolutely not.
Not be nearly as fun. We have movie nights every now and then. You should suggest it.
Oh, really?
Yeah.
Okay.
We'll do like a little, like they do like a little after work thing. And
Okay,
really
okay.
Pop some popcorn.
Oh, say less.
Yeah. Although I don't know if Margin Call is necessarily what we would watch here. The movie about a stock brokerage shutting down is what we're gonna watch for our
Yes,
after work.
find out, figure out what not to do.
That's true. Yeah. We got Berenstein Bears. You know.
I mean, you don't got to learn through all your own experience. You can learn from other people's experience too. Shortcut that a little bit. Bank of America taking a hit today, along with Capital One. Seems like a lot of these bank stocks. Let's check out J.P. Morgan as well. JPM.
Sorry to hear about the bad day, Raul. I hope the future brings better and brighter days, and that's very smart to just liquidate and get out. If you're having a bad day, you feel yourself getting emotional, whatever it may be. There's always tomorrow. There's no shortage of positions that are doing no shortage of moving. So
No,
best of luck.
Yeah, 100%. 100%.
Now, 30405, you could qualify for a loan at teaser rates. You could not afford the loan with the rate readjusted. Teaser rate. What does that even imply? They were just lying.
I said, gotcha.
A teaser rate. Hey, we're gonna tease your income up 3 times what it is. Housing. I want 10 to 20x leverage. I'll just go long yes. Stated income loans. Didn't verify anything. Interesting. I think that with credit cards now, like that's how it works with credit cards, is you just state your income. I mean, I guess maybe higher level stuff they might verify.
Trust that source. Trust me, bro.
No, yeah, literally.
Right.
Second house I bought was a foreclosure. Plan to fix it up. Money pit. Never buy a money pit. Sounds like sound advice, Theta. Loans were packaged and sold at auction in New York, August 2007. No one showed up for the auction. That's crazy. That's a good story.
Oil pulling back a little bit here. That's what we're looking at right here. Just
subprime made a comeback in car loans. Oh, is that the cars with the new houses thing? So we got subprime financing on cars now. I could believe that. We got I'll just say there's a few people from my high school that are driving very high-end vehicles that I know are only for appearances. I know what they do for a living. I know how much they make, and I know they can't afford that BMW X3. And the more pictures you post of the BMW, the more I know that you can't afford it. There's a correlation there. Teaser, qualify at 2% for first 2 years, loan then reset to 6%. Oh, I see. Yeah, what could go wrong?
It's a big deal. Everybody's in a fuss about.
Yeah, I don't see. Surely this won't cause any massive national issues.
Yeah, oil 57. Sheesh is right. Armenian Muscle, man, he changed the name. He changed the name on me, but.
He's on Sophos. YouTube messed everybody up. I don't know what happened. And they took
Yeah.
away everybody's names, and now we got the ads. I don't know what happened.
57 oil right now. It's been volatile. It's been volatile to the downside. Oil's another market. Again, I always bring it up, but I need to get a little bit more engaged in this market, even if it's just with the micro, and just get a feel. I think that's the best way to do it.
It makes me laugh because it is technically, CL is light sweet oil futures. That's like what the index is called. What does sweet mean? What does it imply? Have somebody tasted the oil?
I've actually never thought about that. I've always called light sweet crude oil.
Yeah.
Cool, that's what it's called.
That's what it is, but is it? What are we saying?
Is it light and sweet? And who found that out?
Sweet?
Who figured that out?
Can I taste the crude oil? I yearn to drink the crude oil. But yeah, oil getting beaten down. I literally could not tell you the last time, like I think it was COVID, like peak COVID 2020, the last time I traded any oil at all. But at these levels, feels like it might start to be worth it.
No, it does.
I mean, it's cyclical. So like, if I just take year-long leaps, I can't lose, right? Those are the rules.
7 month. All right. So on oil, we're going to do a little analysis. So this is going to be the 7 month value area, VA, right? It's going to be the VA. We're going to put it in bold. So it's already in bold. So I'll do this. I'm going to take this, right? I hate having those volume profiles up all the time. I like a clean desk. I like a clean screen. So take this tool over here. In my opinion, especially when you're trading directionally, I think keeping it as simple as possible in terms of your areas of interest is super important. That's why I like to take off all the extra indicators, all the extra this and that. Different strokes for different folks, but the reason why I like to use this tool over here, if I can find it, goodness gracious, where is my box? Oh, right here. This tool is just nice, just to give you that visual element of the value area. So here, I'm gonna take this off, and this is how you can do your analysis if you're using volume profiles. You can mark off the value area. I like to then take off the volume profile, and then most of the time on my computer, I'm just going to label it so I know exactly where that value area is coming from. So sometimes it'll be the previous day value area, sometimes it'll be the previous week, sometimes it'll be the previous month, sometimes it'll be the developing day, sometimes it'll be the developing week, the developing previous 2 weeks. So if you label them very specifically, you won't get confused at all.
Sweet oil is low in sulfur.
Low in sulfur. So it smells better. I hate the smell of sulfur.
It must smell sweet.
The sulfur smells sweet? It smells like sheesh to me.
Sulfur itself smells like eggs. Yeah, like
Yeah,
rotten eggs.
yeah.
But if it's low in sulfur, I'm thinking maybe it smells like something else is sweeter. Or
Maybe you get a
maybe this
hint
is
of
just
it.
an oil term that they've
maybe
coined.
maybe it's
I
just
don't know, but this feels like some old timey 1920 stuff when we were naming this, where someone was like, "Ooh, that's some sweet oil." That's
sweet oil.
Sorry, I didn't break out the full transatlantic accent for y'all there. Mr. Pillows, how's cooking oil doing today? It depends what time frame you're on, but I am prepared to give you the prices on soybean futures. So give me a month and year, anytime between now and 2028, and I'll tell you what those soybean futures are doing. They're up holistically, is the short answer. If soybean oil is your fancy, I could probably find you some other futures as well.
Kodak, an absolute terrible stock to trade, in my opinion. Extremely volatile. It starts acting like a penny stock
sweet.
now.
All right, go on.
No, say that again.
It doesn't actually smell sweet.
Okay, it doesn't.
We've had confirmation. Go.
Okay. No, whenever we brought up the sulfur, it brought me straight back to I think it was geography class where we started to get into minerals. I've been looking to get into more hobbies, and this is like probably one of the most whack hobbies that I could choose, but I do like minerals. I think minerals are pretty cool. And now that we're bringing up the sulfur, it's just bringing up the periodic table all over again. Say that again?
I said Hank Schrader over here. You seen Breaking Bad?
No.
Oh, yeah. Hank.
Everyone around me loves Breaking Bad.
Hank he's a big character in that show, and he
glasses, mustache. He's
the cop. He's like he's Walter's brother-in-law, but he collects rocks, but he's always correcting people and saying they're minerals. That's like a thing. Yeah.
Oh, good
Marie's
Lord.
like, has Hank showed you his rock collection? He's like, they're minerals, Marie. That's what that makes me think of.
That's valid though.
You don't like rocks.
He's got a point. Actually, he's got a point. No, light sweet
you
crude
were
oil.
Tanzanite, bro. There you go. you rock with Tanzanite?
Hold on. Who said Tanzanite?
Theta, I think.
Theta.
Yeah.
You over here studying minerals, brother? Who's bringing up Tanzanite right out of their back pocket?
Oh, it is. This is pretty though.
Yeah.
It's like a blue.
Okay. I'm not much, look. I will also say, I just want to preface, I'm not much of a look. I know
it's as much gem description as I can do. It's blue.
We got the crystals and all that. It's gotten a little bit more popular in our generation. I don't really vibe with the crystals. I'm not a crystal guy. That's not what I was referring to.
Sure.
But I think minerals are pretty fire.
Yeah.
I'm not hating either.
Same boat.
Yeah,
I like geology.
Yeah.
Yeah.
Yes.
I like geologic minerals. I guess crystals are too. I don't know a way I can class this.
What's that?
I was just saying, like, crystals are also, I think they're minerals. I don't know how I can differentiate the type of minerals that we're into here. Regional Bank's tank as concerns grow about sour loans. Cue the Big Short scene. Real interesting. Sweet refers to quality. Sweet crude is more liquid and easy to process. Heavy crude is more like tar and hard to process.
Okay, actually, good to know.
This is stuff you would think I would have picked up on living in Texas as long as I did and going to Texas A&M University. Fun fact about me: my freshman year of college, I actually was planning to be a petroleum engineer. So I would know all of this stuff.
Okay, I remember traveling. So we traveled to Lubbock to play Lubbock Christian, that college. So we took a trip down there, and I remember seeing the oil rigs. And again, it's probably normal if you're in Texas, but when you're from a region where you don't see those little things like deers or whatever it is, it's like kind of cool. And I remember seeing them pump, and I'm like, wow. It's like
you get out in Central West, even up north
everywhere.
Texas, it's all just you're driving through fields and it's either windmills or oil rigs, one of the two.
100%. Quickly, a few of the positions that we've had on over the last few weeks. Baidu, it's coming back a little bit. I know we had that Chinese announcement like the day after we put this position on. It's coming back in a little bit. They're out of the money, so we're comfortable there. Around break even on the position, but we're up a couple dollars. Gold, we're not up a couple dollars. Gold is still ripping. We have 36 days left till expiration. We sold the 370 strike on gold. Let's get a little visual. Holy moly. I know it's there, and it's just impressive every time.
It's amazing because it keeps creating gaps. Like that's the craziest part to me is it's not even like a sustained run. It's a gap every day. It's nuts.
370. And look, so this is what's even crazier, right, guys? So we breached the short strike only 4 days ago. 4 or 5 days ago, and we're about 25 points above that. So, our break evens will probably have us sitting at around 372. We're going to need this down by, but we have 36 days left to expiration. It is October. Things could get volatile. I have no choice but to sit in this one since it's defined risk, and I'm pretty much in the worst scenario you can be in a trade like this. So we got 36 days for the gold market to shake up a little bit.
Yeah, I don't know who made the point earlier, but I thought somebody made an excellent point. Maybe Donna, I don't want to misattribute, but somebody said when this government shutdown ends, that it should at least stifle gold a little bit. And
Right.
I'm inclined to agree with that. I do think that there is a inflation currency hedge aspect to this run now now that the government shutdown has happened. So yeah, I think that a correction should that government shutdown end, which I think they just they failed the 10th vote today, I believe. Is the news that I read. Nobody's budging. So yeah, but I'm inclined to agree though. I think end of government shutdown would, logically would put a damper on gold.
Okay.
But
yeah,
gold hasn't been trading logically for a little while. So
not at all. But maybe we get more volatile. Anything's better than like straight up with this tenacity that it has right now. So. We got gold. Oracle's working out pretty well. Oracle up a lot on the day, actually. We sold off very aggressively on Oracle a few days ago. Maybe that was last week. The days are kind of bunching up together on me now with how volatile the market's been. But we're back up to the highs. Oracle's working out pretty well. I know we're at 50% of the potential profit.
You rethinking things there?
I know we're at 50% of the potential profit on this trade. Really, we can look to take this one off and manage it. It's more so the case that I'm a little bit more long-term bullish on Oracle, but at the same time, I don't want my longer-term view to collide with my shorter-term view on Oracle at the same time, if you know what I mean. So,
man, you're good to 280.
What's that?
You're good to 280. You better not exit this thing just yet. I would let it eat a little bit longer. If I were in this position, there are potential future, like near future bearish factors for Oracle, but 280 is far. You would get. I guess what I'm trying to say is, I think you would get a day of warning, like if this thing was going to go below 280, and you could maybe attack it then. But if there's theta coming through to the 9s for the next week before you get that warning, I think you might come out ahead on that.
Hey, yo, theta trader, you coming through to the 9s next week?
Theta,
no, I like that. I like
give my man some theta.
Facts. QQQ, this one's going to be a bust. It expires tomorrow. I'll get that out the portfolio. Get it out of here. SPY, that one expires out the portfolio tomorrow. This one is on the brink, actually. So we got this SPY position. It expires after the bell tomorrow. We're up $70 on it. We're pretty much break even on the overall position. We sold the 660, bought the 665. We took about a $2.71 credit on that. So the risk isn't too bad. We're trading at 662 right now. The short call that we sold is at 660, right? So this trade right now is going to come down to what the market does in the next couple hours and then Friday, because we expire. Or I can make the decision to cut it at break even right now when I'm inclined to do that over the other options that we have and waiting it out. This one is coming down to the wire. It's almost like a buzzer beater, literally.
Yeah,
you know what I'm saying?
That's how I'm feeling with Capital One. It's
okay.
Yeah. And it's kind of fun. It's kind of a fun position.
It is. It's fun right now. And then if we're ripping tomorrow, I'm going to be like, this isn't that fun anymore.
Theta Trader said 6.7. Did we say 6.7?
6.7.
6.7.
I don't know what you mean by that, Theta Trader.
Those gaps are like deep foreign pockets are buying up gold during their daytime. That's an interesting thesis.
Yeah.
I could see that. I could see that lot.
Oh, yeah.
We have a very... an American Express trade here. First and foremost, it's been mentioned here. What do you think about selling a call like 350 and getting a put calendar 305, 1 DTE, 7 DTE? That's what we're talking about here. So there's a lot to unpack. My first words out of my mouth are going to be, I don't hold things through earnings. So that would scare me a little bit. I don't know. Did American Express go off this morning? Or
what was the ticker for that one again?
AXP. American Express. That said, I can see the line of logic. The short call on the front end is what scares me the most about that. What's the expected move for this look like headed into earnings here? I guess, 350 is still outside the expected move. And it would be an all-time high. So, yeah, I think I could get behind that. That would be the scariest part to me, is that short 350 call at the beginning. Should they come out and say something parabolic that sends this flying, it's just being naked short like that is kind of a dangerous spot to find yourself in. But that would be all-time highs. It's outside the expected move. So, I say if you got the risk tolerance for it, shoot it. It'll be tomorrow morning, yes. Also, Ice Nomad, I will have you know, when you asked that question, I went over to pull up the American Express chart, and I typed ICE, and like I was getting ready to type your name into the ticker box on my platform. I've seen 2 articles about 6-7 now.
You know what I think is so funny about that? Some people are learning about it through articles.
Yeah,
that's like the last piece of the funnel.
That's exactly what he said. That's the next part. This trend will be done now soon that the olds, now that the olds have picked up on it, was the vernacular that he used.
That is hilarious, actually.
Maybe it's a strategic thing to kill it, because I know that teachers are at their wits' end with this 6-7 thing.
Oh, good Lord. To be a teacher in this day and time, as we spoke about yesterday. Pray for our teachers, y'all. That's a tough job.
Yeah, no kidding.
Not gonna lie.
No kidding. Especially with this iPad generation coming through right now.
Oh, yeah. Someone said, I thought you froze. You know, when I was thinking right here for a minute, someone said, I thought you two froze. No, just thinking, guys.
I stopped to like give you a moment to think, and then I was worried you froze. I'm right here in the room with you.
I know we got a few moments left. The market's selling back off a little bit. Might take a new day lows.
Is it the Mitch McConnell clip where
what was that?
It's like the politician and he freezes.
Oh, I know exactly what I think it was Mitch.
Is it Mitch McConnell?
When he was standing up there at the podium?
Yeah, and then he just like that was like the moment that you had. I was like in my head, I was like, do I have to? Yeah, I have to get up. And
Yeah.
Like,
that's funny. I was thinking. Thank you.
Pondering. Anyway, sorry, I cut you off.
Pondering, 100%. No, the market had a little bit of a dead cat bounce today after that extreme sell-off. Now it looks like we might be taking the day's low. We have 2 hours left to market open. Our next level of value is going to be down here, value area low at 24,000. 24,641. This is something like if you're interested in trading a little bit more directional with these futures products, what I would recommend is that you just plot these levels. Don't even trade them. Plot the levels. Look at just the market behavior on how price responds to these levels, and then you can decide when you kind of want to dip your toes in. But I would just mark out those levels, mark out those standard deviations, and just watch and take it from there to get started. But market's selling off. You think we get a new day low?
I mean, I guess
it's a coin flip.
I guess probably. I mean, yeah, it's such a coin flip. I don't know. I don't think so. I will submit my final answer as no. I think we might test the lows, but I think ultimately that we have established the bottom here. But we'll see.
Yeah, we'll see.
You certainly never know.
The turtle has frozen at the podium more than once. That's funny. Nightmare, but my friends who are teachers say this group is way better than post.
Much better than the post-COVID crowd. I could imagine that. Yeah. I mean, it's the loss of socialization for young children during COVID is like very significant.
That's tough.
Yeah.
With that being said, anything else to wrap up on?
Nothing else. Yeah. Donna, don't worry about 6-7. It's not worth learning. It means nothing is the short answer for anybody unaware. It means nothing. It spawned out of who knows where. And when you see the number 6-7 in a row, you say 6-7. That's how it works.
And I know we've seen my eyes are glued to gold, bonds, and the VIX. People getting spooked easily lately. That's the exact same thought process that I had as well, Mikos, because last Friday when we had sold off, we barely went anywhere from the highs, and VIX just pops like that. Yeah. I'm like, people get that fearful over a little shakeup, and we haven't even had a downtrend yet.
Yeah.
So I think people are kind of on edge right now.
Well, yeah, and that's the thing is, I mean, we're just at such highs that it feels like every sell-off is going to be the
Is this it? No.
Yeah, exactly.
Okay,
the one where
we're good.
Finally correct and VIX goes crazy, and then as soon as we establish that it's not, things come right back to, reality. But yeah, I don't know. Scary. It's a scary prospect for someone who's short VIX, but I'm not particularly concerned about it. I'm hoping tomorrow will just bring some highs, bring some cruising. VIX will chill out. We'll see though. I mean, especially with this happening on a Thursday, like into the end of the week, Fridays tend to be a little bit more of a day that favors sellers. So perhaps we could see a continued dump into the end of the week before some new highs next week, something like that.
Cool.
We'll see. We'll be here tomorrow to talk about it.
Yeah, we'll be right around. So it is Thursday. We got a couple hours left to market open. Thanks for taking the time to tune in with us. Be sure to stay tuned for more segments coming on next week. We'll be back tomorrow. Peace out, guys.
When you've got a futures contract that's in Contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in Contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of Contango. So where Contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Schulten, this is From Theory to Practice. We're going to shoot from strength again here today on this Thursday edition of the program, the Market Crash edition of the show. We are going to continue talking about leverage. So Laura, go ahead and bring us into the title slide there. So this is the question, right? How much leverage should you use? You're trading derivatives, maybe some futures, whatever, and options. How much leverage should you be exposed to with what it is that you're trying to accomplish? We just got done talking about short delta. Let's now turn the page and talk about my long delta friends. So Laura, go ahead and bring us into the information. So with a long delta portfolio, I think you need to approach this very, very differently. From a short delta standpoint, you're playing the market to the downside. You have a bearish bias. Remembering that the objective is to have the short delta kind of shield or protect some or most of that positive theta. That is the goal, right? That is what you are trying to accomplish. If you're playing long delta, you can't use the delta theta ratio anymore, in my opinion. You can't use it because the delta is not protecting you against any market drops. The delta is not protecting you against big volatility expansions like what we're seeing in the market here today, actually. When you are short delta, you do have some of that protection because you have this reliably inverse relationship between market prices and market volatility. When you're long delta, you don't have that protection. When you're long delta, if you're getting hurt on the delta, then you're probably going to be getting, hurt on the volatility as well. So it's not going to line up as neatly and nicely as it does on the short delta side. Okay. But many of you out there are carrying long delta. You want to play the positive drift higher. You want to play, the natural tendency of the market to move higher over time. That makes a ton of sense. So how do you determine how much leverage is suitable for you? Well, this is where I think using as your reference point, your anchor, the SPY index itself is going to make a ton of sense. So you want to think about how much leverage, how much size do I have relative to the overall SPY index? Okay, so for this example, let's assume SPY is $650 a share. So that means 100 shares is $65,000. One thing to remember is if you're inside of your Tasty Trade portfolio, when you see your beta weighted delta at the very top, the default setting of that beta weighted delta is beta weighted to the SPY index. And so one beta weighted delta at the top of your portfolio is basically equivalent to one share of SPY. And of course, if you have a positive delta, you're long the shares. If you had a negative delta, you would be short the shares. But understand that beta weighted delta and share exposure to the SPY are essentially synonymous as we're talking about how much size you're holding, what your directional bias might be. Okay, so let's go through 3 examples to help you get started with figuring out how much leverage, do I want to be holding? How much leverage is suitable for me? Let's say you have a $65,000 portfolio. So you happen to have a portfolio size that is essentially equivalent to 100 shares of SPY. Because again, at $650 a share, 100 shares is going to be $65,000. So the notional value of your portfolio and the notional value of 100 shares in SPY are indeed the same. Okay, if you look at your portfolio and you have 100 beta weighted delta at the very top, that means you essentially have, 1-to-1 exposure, 1x in terms of your leverage to the overall index. You're basically like holding 100 shares of SPY. That matches the notional value of your portfolio. So it's like you put all of your capital into SPY. You didn't go on margin. You're not really using any leverage. You're just 1-to-1 with the overall underlying index that is SPY. Okay. What if you had 200 delta though? If you had 200 delta in a $65,000 portfolio, that's like you are controlling 200 shares of SPY. So hopefully you can clearly see now you only have $65,000, but you're actually controlling $130,000 worth of notional in SPY. So you have 2x leverage to the overall underlying index. And lastly, if you only had 50 beta weighted delta, now of course you're only going to be half an x. Now, of course, you're essentially only controlling approximately $32,500 of notional in the SPY, even though you have a $65,000 portfolio. Hopefully that's clear for you guys to see. Obviously, I chose these numbers for a reason to make the math work out kind of nicely and neatly for us. What if, now we're in the middle portfolio, what if you had $130,000? So essentially here, you have the notional value that is worth 200 shares of SPY. So we can move through this a bit more quickly now that we kind of understand what it is we're trying to accomplish. If I'm looking at my portfolio, beta weighted delta at the very top, and I see plus 200, that tells me I have 1-to-1 leverage with the index. It's basically like I took all my capital and plunked it into SPY shares. What if you looked at your portfolio delta, however, and you saw plus 900 delta, which is not that crazy. It's a pretty easy number to get to if you were really trying to, lever up your exposure and have more bullish delta. Well, now you are essentially controlling 4.5x the notional value of your portfolio. You have $130,000 in your portfolio, but you're controlling north of $500,000 worth of SPY shares. And then lastly, if you only had 100 beta weighted delta, in this scenario, you can see you only have half an X again because you're only controlling $65,000 worth of SPY, but your portfolio is $130,000 in total notional. And then lastly, what if you have a smaller portfolio? What if you only have 32,500? Well, now if I have 32,500, I basically have 50 shares of SPY. So 50 beta weighted delta would be 1x. 100 delta would it be 2x? Because now I'm controlling $65,000 worth of SPY. My portfolio is only 32.5. And then lastly, if I had 300 beta weighted delta, I would be 6x or 6-to-1 leverage with the underlying SPY index. My hope is that you can use these numbers to kind of plug in what your portfolio is to kind of figure out, okay, how much leverage am I holding right now? Like again, we just went through short delta, use the delta theta ratio for that. But if you're holding long delta, I think you have to take a different approach. I think you have to take a very different approach. And I think this makes a lot of sense when it comes to understanding, hey, if the underlying index moves by 1%, what is my portfolio anticipated to do? Of course, these are approximations. There's other things happening in the marketplace. If you're trading options, you've got theta, you've got vega. So it's not just going to be delta as the only driver of your P&L on any given day, but that's going to be a big driver. Like that's going to be one of the primary drivers without question. Now, lastly, I'll say this. How many X's should you hold? I mean, that's going to be for you to decide. I can say from my own experience and also conversing with so many traders over the years, most traders are going to settle somewhere between 1x and let's say 3x. 1x, 3x, maybe up to 4x. I've seen traders go as high as 5x, 6x. I've even seen some go as high as 8x or 10x. Of course, your skills need to be very high if you're going to do that. You need to be very clear on what you are indeed signing up for. I don't think that's going to be the best fit for most traders out there. But I do think somewhere around 2x to 3x is going to be pretty comfortable for a lot of traders out there once you have enough experience and you have, a large enough skill set, enough knowledge and know-how to kind of navigate and manage when it comes time to navigate and manage. So I would say somewhere between 1x to 3x for most traders is probably going to be a good level. So when it comes to how much leverage you should use, there's a few thoughts around long delta. So, all right, Laura, bring us into the market. Man, let's take a look. What's going on? Man, guys, have you kept it above zero? Man, not really. Look at you guys. You guys are letting me down. EME S&P is down 58. Is that the low of the day there? Man, look at this. Got the risk-free instrument down 155 on the day. You've got that, of course, is the NASDAQ index, which is anything but risk-free, especially on a day like today. Got the boomers down 344, but we call it the risk-free instrument because it's fun. The boomers down 330. That confuses so many people, by the way. I get so many emails about that. I get more emails about that than pretty much anything else. And I'm a couple days behind on my emails, by the way. And so in preparing for Sunday, which, by the way, oh, wait, Laura, do you have the art card for Sunday? If you have the art card for Sunday, can we put that up really quick? So this Sunday, I'm leaving after the show. Like, I may have to end the show early so I don't miss my flight. Like, we are flying to Chicago tonight, and then I'm going from Chicago to Detroit. And so this Sunday, we are going to be live at the Magic Stick right there in Detroit for an options crash course live. Man, it's going to be so much fun. It's going to be so much fun. I cannot wait. This is for the new beginner traders that are out there. Right now, if you've been trading for a while, I got some stuff for you too. Like, if you consider yourself to be like Tony Batista level, like expert status, I got some things for you too. So I got a little something for everybody on Sunday night. Like, it's going to be so much fun. And I've got a quiz that we're all going to take together, like while we're doing the actual thing. It's going to be really, really, really fun. I cannot wait. And so come out. It's totally free. Bring your friends, bring your foes. Again, we just need heartbeats in the room and bodies in the seats. That's all we really need. And so I appreciate you guys. I can't wait to see so many of you guys on Sunday night. And yeah, that's going to be awesome. So if you can still make it, there's still time. I'll see you guys on Sunday night. But okay, so thank you, Laura. Let's go back into the platform. So Russell 2000 down 50. Man, guys, this is just crazy. This is bonkers. Like, this is totally bonkers. Because not only do you have markets melting down, it's not even a full percent, right? Which is just so funny that we've become so accustomed and so kind of insulated from like market movement to the downside that, NASDAQ down 200 kind of feels like a crash. Where it's like, wait a minute, that is literally not even a 1% drop. Now, again, that doesn't mean we need an 1,100 point down day like we had last Friday, but it's like, 160 points is really not a big move at all in the NASDAQ index. 60 points is really not that big of a move at all in, the EME S&Ps. And so, is this day number one? I'm not even going to venture a guess. I'm not even going to put that out there because we all know that is almost certainly not the case. But man, look at the shifties, guys. Do we have to say it again? Look at these guys. Man, gold up 103. Wow. Silver up $1.70. Wow. Look at this, man. Look at this. Silver was even up another 50 cents, I think, above where it is now. It's at 53.04. I think it was like 53.5 just a little while ago before the show. I was looking at it, and I was looking at it this morning, and it was like, well, hold on. Let's just look at the chart together. This is just the craziest thing I've ever seen. I've been trading for a long time, guys, and I have to say, this gold and silver move, have you guys seen a move like this in gold and silver? For those of you, I know I joke about the Hunt brothers, but I actually think the last time something like this happened with silver was back in like the late 70s, early 80s with the Hunt brothers. I actually did a report on the Hunt brothers like my junior year of college for one of my finance classes for Dr. Felton's finance class there at Central Michigan University. I think he's still there crushing it, by the way. And so Fire Up Chips and Dr. Felton had a huge impact on me. And he's one of the reasons why I chose the pathway forward that I did in terms of doctoral school, my doctoral program and all those kinds of things. But I did a report on the Hunt brothers, late 70s, early 80s. And I think they cornered the silver market and they ran the price up to like 50 and then it just completely crashed. Just completely crashed. And so is that going to happen again? Man, I don't know. But look at this. This is now, S&P's down 71 now. Silver is even down another 20 cents. Man, what is going on out there, guys? Let me look at silver, though. I want to get to, man, look at rigatoni, guys. You guys see this? Look at rigatoni. Look at this. Look at this. Look at that. Oh, man, it's like the first day of spring. Man, it's like a breath of fresh air. Like, it's like, oh, man, is that pumpkin spice candle that you got in the house? That smells really, really nice. That's that's exactly what it looks like or even smells like when I see this rigatoni position. That's some good stuff, man. But we'll get back to rigatoni in a second because nobody takes the victory lap quite like I do when you're still down $1,100 on the trade. But let's go ahead and let's look at silver. So it's down to 53 even now. Where are my, is this like a 1 minute? This is, yeah, look at this 1 minute chart. So look at this, man. This is crazy. This is like totally bananas, like BANANAS. Like this is it, man. Like, look at this. So in the morning, you had silver was under 52 at one point earlier this morning, right? Just kind of meandering about. But I mean, even still, look at the early morning. Look at some of these bars, man. I mean, you've got this is a 1 minute chart, guys. This is a 1 minute chart. That's a 14-cent range. You know, go a couple minutes later, that's a 16-cent range. You know, the following minute, another 15.5-cent range. I mean, this is just completely bonkers, right? And then you go to like, obviously there was a huge up move. I mean, all these bars are like 10 to 12 cents a minute. 10 to 12 cents a minute. And that's a huge move for silver. You know, whether you're trading SI or even SIL. SIL, you know, don't sleep on SIL, man. Like SIL, SI, whatever. Like these things can move and they can get where they're trying to go in a hurry. But if you look at, I mean, look at this move lower. So right when they took it up to, it was like 53.60 at one point. So 53.60 at one point. And then look at this move lower. Look at some of these bars, man. You got silver moved 20 cents. The next minute it moved another 20 cents. The next minute it moved another 20 cents. I mean, look at that. Look at that feng shui-ness, man. 20.5 cents each time. Boom, boom, boom. There's your three black crows right there. And then, you know, another 17-cent range, another 16-cent range, another 22-cent range. This is just crazy, man. Like, this is totally crazy. Similar thing with gold. I mean, if I look at gold's only up 97 now, so it's pretty much melting down. But if you look at gold, right, same thing. I mean, gold this morning, I mean, some of these bars, you know, it's like, man, this is like a, you know, it's a $7 move. In gold right there. You've got a $13 move right there. This is just crazy, man. I don't even know. I mean, this looks like an IPO chart. This looks like, you know, some of those stable coin charts that are just volatility off the charts, but this is bullion, right? This is bullion. These are the silver medallions that you see on like those commercials that they run at like noon or like noon 30 for all the boomers that are like, well, they're probably shutting it down around noon 30. But then they run it again at like 3 when the boomers get up for the, you know, the back half of the day, you know, like 3 to 5:30 before they shut it down again for good for that day. Those silver medallions, man, I mean, they're pushing that stuff out there, man. Wow, it's just crazy. I don't even know what to believe anymore. I really, truly don't. But anyway, I digress. So let's go ahead and a couple of things. So number one, I appreciate you guys, and I see you guys in the chat, man. Look at you guys. I appreciate you. Let me know what happened today. I really don't even know because I was getting ready. I've been packing, and I've got to leave. I, you know, was doing the leverage stuff. But I see you guys, Theta Trader, Ordenu, Wolf in the house. Dan Ducarn, Brian Dowdy. They're trying to tell me you're not Brian Dowdy, but I know that you are, and you know that you are, and so that's all that matters. And so, anyway, EMI S&P is now 77. Let's go to UAL. Man, look at this. It's beautiful. It's beautiful. So I don't know, guys. Like, we got Bank of America. Now we're about to get UAL. Yeah, is the tide turning? Like, is Dr. J going to hit a little bit of a hot streak here going into earnings season? I don't know, man. I still think the safe bet is to fade everything I do. I still think the safe play is just take the opposite of any and all directional plays that you see. That would be definitely the thing to consider. But for now, I just picked up, you know, a little over $1 on this UAL butterfly, and so let's take it. I don't really want to, you know, mess with this any longer. Of course, let's just be done with it. Let's try it. 247. That's fine. See if they, okay, so we got filled at 247. So there you go. So we're out of UAL, a nice earnings trade. Very happy with the earnings trade. And there you go. So now let's take a look at Starbucks, by the way. Man, look at this little flight to quality in Starbucks, right? Everything else is just crumbling down around us, and Starbucks up $1.37. Like, people know. I mean, I'm going to do it on the way to the airport. Well, I'll probably wait till I get to the airport, actually. I'm going to have myself some Starbucks because I very frequently in like the afternoon or late afternoon, I'm like, man, I've got a hankering for something and I can't quite put my finger on it. But I'm pretty sure if I could score me some B- coffee, that would do it for me. Like, that would get me where I'm trying to go. So that's exactly what I'm going to do. And where is the best place to find B-, maybe C+ coffee? It's going to be Starbucks. 100%. So Starbucks up $1.36. And there you go. Now we're going to sit tight. We're not going to sell any calls against it right now because, I like having the clean delta exposure to the upside. Again, if you're brand new to the show, I'm not going to bring up the screenshot because I've done this a million times and maybe I'll do it again next week or something. I want to get to other things. But this was a long-term holding that I've had since last December. So we've had this trade on now for 10 months and it's been intended to be a long-term play. It's not intended to be I'm zigging, I'm zagging, I'm trying to dance between raindrops. I'm not trying to do really any of those things. I'm really just trying to, mimic a long-term holding and then show you guys the different things that you can do, like along the way in terms of selling calls against it, just holding the shares. We've done plenty of both along the way. And so at some point, I can't do it. I got to show you the screenshot because if you're brand new, you're totally lost right now. And I don't want you to be totally lost. Yeah, when you're a little bit lost, it makes sense, but I don't want you to be just completely lost. So let me do this really quick. If you're brand new to the show, get your phones ready, get your screenshot softwares ready. So I did this trade. So here you go. So we bought the shares right there on 1227. You can see that right down there. So take a screenshot of this because you see every trade I did is during the show. Every trade I did is during the show. And so I think that that's obviously very, very helpful if you're trying to follow along and learn and try to acquire new skills and whatnot. And so take a screenshot of that and I'll scroll up a little bit on the screen. You'll see the rest of the trades. That's everything I did in Starbucks. If you go back and watch all these shows, then not only are you going to boost my watch time through the wazoo, but you're going to learn some things along the way, I think. And so I think it's going to be a win-win for everybody. And so that's Starbucks. And then, man, I don't know. I mean, Rigatoni, we're just going to sit tight for now because we actually got a shot. Like, we've got a shot. Like, if we can get Rigatoni down under 42, that's going to be amazing. Like, that's going to be super, super amazing. And so for right now, I'm going to sit tight. I'm going to do nothing. And we'll just kind of see where the wind blows us. But IWM... So IWM, we're a little bearish on IWM still. I'm gonna leave this on because we're only down a few bucks on the trade, and we've got visions. I mean, we only have a straddle on, so it's not inverted. Like I'm not at like the final stop on the train tracks, as I like to say. Once you go inverted, and so straddles are really nice because you still have a lot of wiggle room to work with, even though you don't have the distance between the short strikes like you would have with a strangle. With a straddle, you have the overlapping strikes and they're at the shared spot, of course. That is literally the definition of a straddle. But still, because you've oftentimes collected so much credit at that point, the break-even points can be really, really favorable on both sides of the market. And you can actually see that right now. If I go ahead and grab, I've collected 1650 on this trade. You've got the stock at 244, but my strike is 234, right? So if I take my strike of 234 as we break out the final Jeopardy pen and I add 16 to it, that's going to give me 250, right? So 250, this is my break-even point on the upside. Now, my break-even point on the downside would, of course, be 234 minus 16, so that'd be what, 218, I think. I'm no Jacob Perlman, but I think it's about 218. So if you look at the price of IWM right now at 244, and the break-even point being 250, we're in a pretty good spot. Like, is this the best spot ever? No, but it could be a lot worse. Like, I mean, if IWM was up 6 today instead of down 6 today, then we'd be in a much, much, much less desirable situation. And so, all right, that is the goings-on in the portfolio. Man, I want to see where you guys are at. Man, I want to see where you guys are at here in a second. But are there any earnings today? Do I even want to do anything with the earnings? Because I'm not even, I'll be in the studio tomorrow. It's weird because I'm traveling tonight, so I always kind of assume like I'm not going to be in the studio because I'm traveling, right? But I'm traveling to the studio. And so it's going to be amazing to do the show from Chicago tomorrow, so that's going to be awesome. But let's see, do we have anything tonight? I don't think we do. October 16th. No, we don't. But man, look at what's coming up next week. So you got all the heavy hitters. I mean, you got your Netflixes, 1021, right? You got IBM and Tesla, 1022. And so next week is, I mean, those are just kind of some, some warm-up sets. A little amuse-bouche for you guys, 3 times, I guess. I think amuse-bouche is supposed to be just 1 time, but we're going to do it 3 times. Netflix, IBM, and Tesla. And there you go. So that's going to be next week. That's going to be fun. Nothing today, though. And I don't really want to go to like tasty earnings, which I mean, tasty earnings is great. Like if you're in there crushing earnings left and right, then this is your jam, right? Like you're looking at this list, like you're living on this list. But I'm looking at this list and I'm like, man, am I gonna trade CSX? I mean, I don't even know what CSX is. Not that that's ever stopped me before, but TFC, like RF, is that Redfin? Hang on, is that Redfin? No, that's Regions Financial. See, there you go. I don't even know. I mean, that's completely different, right? And so, yeah, I'm going to pass on all of these kind of lesser known stocks. I'm going to let the Shooter McGavins out there deal with all that. But all right, let's see. Where are we at, though, man? I see you guys. Look at you guys in the house. Man, you guys are getting a little rally going. EME S&P's down 62 on the day. And so, let's see. Jay Hawkeyes. Okay, hold on. So Jay Hawkeye says, Dr. Jim, if the U.S. is downgraded because of an imbalance in the U.S. budget when tariffs are ruled illegal. Oh, is that what it was? Was there some, because I know the Supreme Court is kind of overseeing the tariff thing right now, if I'm not mistaken. Is that what happened? Some news came out about that? Like, let me know. But Jay Hawkeye says, will gold and silver be more valuable safe havens? I don't know, right? I mean, again, all these moves are obvious after the fact. All of them, right? Now, again, some people, especially a lot of like my macro brethren, like your Ilya Spivaks, obviously your Chris Vecchios. I mean, he's on paternity leave right now, but you've got Ilya, you've got, Thomas Westwater. I mean, these guys are great. Like they're amazing. And the macro guys are very good at what they do. And from a macro standpoint, like if you nail the thesis, like if you nail your hypothesis, then you're going to make some money. Personally, in the short term, I actually tend to lean on more randomness and unpredictability in the marketplace. I don't know that it's that obvious what is going to happen in the marketplace if, the tariffs are ruled illegal or whatever, or if, the U.S. debt is downgraded, or if, Trump, went for cooking oil the other day. It's like, what if he starts, going after spatulas? Like, what if the frying pans get put on, the front burner? Like, that would not be good. Like, that would not be good at all. How's the market going to react? I don't know. I have no idea. And I genuinely don't know that you can know before the fact. I know that historically, gold at times can be viewed as a safe haven. And so right now, this run, it's historic. It's historic. Gold going from, 2,800 earlier this year or whatever to 4,300 is insane. That's crazy, right? That's a 60% move or whatever it's been this year. That's really, really crazy. Now, what is the rationale behind that? It could be stagflation concerns, and it could be, essentially, the Fed cutting into an inflationary environment. There's a lot of things, but we've seen so many examples historically where, it looked so obvious that it was going to be X and it ended up being Y. It's just never that obvious, in my opinion. There, Jay Hawkeyes. It's a really, really good question. I think that what you're proposing as them being more safe havens, gold being more of a safe haven than silver, in my opinion. Silver has more risk-on characteristics than gold, in my view. Now, some people that look at this more regularly might say that no, silver is also a safe haven. It's a physical asset. It's got inherent worth. It's not just made up paper with pictures on them like the fiat is and whatever. Like I understand. I view gold as being more of a safe haven than silver, though. I would say that your thesis is the chalk. Meaning your thesis is kind of the expected move of how you would expect things to play out. But it's like, man, gold's already up 60% this year. Silver's already up however much it's up this year, 50%, 55%, whatever. It's like, is it really going to run more? Is it really going to run more? And of course, the next thing we know, silver is going to be, it's going to be 60. And so I don't know. I wish I did know, because if I did know the answer to your question, I wouldn't tell you, Jay Hawkeyes. I would be in Fiji trading that information on my own. And then I might let you in kind of on the back end there. But I appreciate you, my friend. So thank you for being here. So let me see. Can I surprise and delight somebody else? Well, I see Joe YQ says, Dr. Jim, the VIX touched 24 this morning. It's got to be over 24 now, right? Are we going to make it to Halloween? How far away is Halloween? I mean, Halloween's a long ways away, man. Volatility futures up to 22. The VIX is now up to almost 25. So this is it. This is what you train for, right? This is why you do all those extra sets of walking lunges. You don't want to do them. Nobody wants to do them. But you do them for moments like this. You do them so that when this happens, man, your glutes are ready. Like they are ready. And so here you go. You got the VIX at almost 25. And if your glutes aren't ready, like that's on you, man. Like that's 100% on you. And so anyway, I think that's enough glute commentary for not only this show, but many, many shows to come. But let's go to the beginning. Show's off the rails, man. But this feels like a Friday to me because I'm traveling tonight and I'm going to be, with, I can't wait to see everybody tomorrow. It's going to be great to be with, the crew tomorrow. And then of course, Sunday night, we've got the event and stuff, and that's going to be awesome. But let's see. Let me go to, Let me go to Theta Trader. What's up there, Theta Trader? These new usernames are really, really bad. I really hope YouTube makes the switch back. This is just bad. But Theta Trader says, discussion on beverage. How much can you really know about Natty Ice or matcha? Well, I don't know what matcha is, so I can't comment on that. But, Natty Light Ice, it was the go-to staple in college because you don't have any money, right? You got no money, like you're borrowing money. You've got a debit balance with like all your friends, right? And that's everybody's college experience. And so Natty Light Ice, like it's pretty much in every college student's like repertoire. Right, Natty Light Ice, obviously the Beast, right? But I would choose Natty Light Ice over the Beast. I think it's cheaper, and I think the quality is even a bit better. And so, how much can you really know about it? I don't really know. I'm not sure. But man, good times for sure. Ordenu's in the house. Greetings from Italy, Dr. Jim. As a contrarian and from the point of view of risk management, would you advise to do a pair trading on gold, even though they both are always going? So a pairs trade on gold. Do you mean with silver? I would imagine. So, typically pairs trades are going to choose two assets that are highly correlated. So gold and silver would be a good choice. S&P 500 or NASDAQ would be a good choice. NASDAQ and Russell could be a good choice. These are favorite candidates for pairs trades. I haven't done a ton of pairs trades in the past. Maybe it's something I'll explore in the future. I do think it's interesting. I do think it's, an interesting way to play kind of the divergence or convergence between, I think you're normally playing the divergence, between two different assets while really minimizing the risk that you have on. Because if you think about it, like take a day like today, right? Gold is up huge, silver is up huge. If you're long one and short the other and the notional is matched, you're probably not really going to be up or down too much because you have essentially, the hedge in place where they're going to essentially wipe each other away. They're going to more or less wash out. And so that's the objective. That's what you're trying to do with a pairs trade. And so it's kind of nice from like a straight directional play because a straight directional play, you are taking on the risk. You need the direction to move in your favor. And where a pairs trade that you're really just playing kind of the basis between the two products. Sergio's in the house. What's going on there, Sergio? Ordenu says in the same direction. Yeah, they keep moving in the same direction. I probably wouldn't do a pairs trade. Oh, wait, well, okay. So now I understand your question. You're talking about doing gold, like the asset, like GC futures or GLD, right? And do a pairs trade with the miners, like GDX or GDXJ. Sure. That would be very similar actually to doing it gold and silver. You might even have a higher correlation doing it that way because now you've got, your first trade is on the thing. The second trade is on all the, entities or one of the entities that is mining the thing. And so you don't even have two separate things. You just have one thing and an offshoot of the thing. And so because of that, this is very high technical jargon that we're using today. Because of that, you're going to potentially have even tighter correlations and, even less risk in terms of directionally on that pairs trade. So I would say go for it. I would just make sure that you match it notionally. So make sure that you understand the notional exposure of one and the notional exposure of the other, which is kind of similar to, this is the reason why we like to beta weight our deltas. Like for our portfolios or for a given position, because the deltas on Pepsi and the deltas on, Tesla are not the same,
right? The deltas on Bank of America and the deltas on Microsoft are not the same. And so you can do a 30 delta, put in Bank of America, and you can do a 30 delta put in Microsoft, and they're completely different positions. Like on the surface, it looks the same, like the same delta, bullish exposure, whatever. But the actual size and magnitude of the trades is radically different. And so this is where doing a beta weighted delta is really helpful. I would just do something similar with the notional that you're exposed to with, the miners and then, GLD itself. And so let's see. Wolf's in the house. There's Jay Hawkeyes. My surprise and delay. Oh, that came pretty early today. So there you go. Sometimes the surprises and delights are even a surprise and potentially a delight as well. And so let's see. Sam L says, interview with Gus, rocking the classic dad combo, polo, shorts, and New Balances. Oh, yeah. You're talking about the Detroit promo. Did you see that? Did you see how I faded myself? I faded myself on the size of Ford Field. And of course I won. Like my initial instinct was dead wrong. So I faded myself. And it just came up roses. Like that was just, I remember when we shot that like a few weeks ago. That was so funny. But Sam L says all he's missing is a lawnmower, a lecture about Delta and Theta, and maybe a scoop of his favorite pre-workout. One scoop? No, man. Scoops, plural, of the pre-workout. But thank you there, Sam L. Sam L goes on to say, Doc, Rigatoni's getting smacked. This is what I'm saying. It looks like the do-nothing strategy might actually be the winning play this time. Yes, this is the only time it's ever worked. Should we trust the quantum bros or just stick to B- fundamentals? So Rigatoni is a quantum play? Is that what it is? Quantum. Are we talking like Quantum Leap with like Scott Bakula? That's a very underrated show. Very underrated show. I mean, I remember I have fond memories of watching that like late at night when I was like 10 and like my mom, told me to go to sleep and I'm like, I'm not going to sleep. I'm about to watch this Quantum Leap marathon that's on USA. And so I don't know if that's related to Rigetti here, but maybe it is. He was leaping through time, right? Maybe there's an episode of Quantum Leap from like 1991 where he fast forwards to 2025 and he's like, all right, listen, Dr. Jim, don't do that strangle in Rigetti. Like you are going to regret that trade for quite some time. I don't remember having that conversation with him. So I think he kind of took me down, but they're getting smacked. We're going to sit tight. We are going to do nothing. And let's just, again, it's inverted strangle. EME S&P is now down 82 on the day. The VIX is now over 25. And so there you go. Again, if you don't have the bunker materials on order or in your driveway right now, that's on you. That's 100% on you. And so we're going to sit tight, Samuel, and we're just going to see what happens. But Donna Ski says, I remember vividly Bernanke claiming subprime was contained in 2007, the worst market call ever. Well, thank you, Donna Ski, and I see you saying hello as well. Hello to you too, my friend. I thank you for putting Bernanke in the worst market call ever category because I've given y'all some doozies in just the last couple months. I mean, I think I've gone back and successfully edited all the tapes now with my deepfake abilities. But there's a chance, hypothetically, that just recently I was like, you got to be short metals here. Gold at 3,500, gold at 3,700. It's like, you're crazy if you're not short. Like, you're crazy if you're not selling silver. Like, with both hands at 40, at 39, at 43 and a half, right? And so that may have happened. I mean, again, it's a little fuzzy in my head there, but it's possible. And so, Sam L., how much leverage should we use? A sprinkle of logic, a scoop of pre-workout, once again, scoops, and a full dose of B- confidence. No, the confidence is high. The confidence is not the issue. It's all the other stuff. Sounds like the perfect recipe for another questionable trade. Yes. Oh, you got me there at the end. That was good. Edgar's in the house. Hello. Hey, Dr. Jim. Good afternoon. What's up, my friend? Dan Ducarn, Dr. Jim time, B- humor time. That is correct. We are very, very consistent. The quality is low, but the consistency is high. We are running the Walmart business model here on the show. And so Joe, there you go. Joe said the VIX touching 24. 24 VIX, that's old news, man. Like we're at 25, headed to 26. I mean, again, crazy stuff. And you see the market bouncing around. Wow. So gold is back over 4,300. What's silver? Is it back on the highs? No, it's still under 53. All right. So looks like the silver shorts woke up a little bit. And so where are we at? Dan Ducarn says Boomer equals Dow futures. That is correct. And then I see HK is helping out with a bit of a legend here on the show. So thank you there, HK. Says the Dow is boomers, QQQ is risk-free. Yes. Which again, it's obviously not, just to be very, very clear. Like officially it is not, but unofficially, come on, guys. Come on. And then gold equals rocks. Yeah, I don't know what gold is, man, but it's something. And so let's see. Dan Ducarn is going to play some 50 Cent. That might be a little too adult for my ears personally, but go for it, man. Let's see. Death Sneeze 007 says Frank is in airport mode. Yeah, Frank is quite a traveler, and so he gets it done, man. He'll be in like the airport. What are those things called? The terminals. The terminals. He'll be in like the airport terminals and he'll be like propped up on some trash cans and like just getting it done, man. He's in the chat. He's with you guys. Like he's helping Tony and Nick. Like it's just, it's good stuff, man. And so let's see, where are we at? Sam L says, we need just enough leverage to make it exciting or enough to explain to our kids about Christmas. It's canceled that year. Yes, you need to have enough to where it's going to be one or the other, right? You don't really want to middle it necessarily. And so let's see, where am I at? Theta Traders just keep holding XLE, Dr. Jim. Maybe we'll get assigned shares in a short month, then collect that sweet dividend income and sell calls for something that seems like income, but is not. I can't do it today, man. I mean, I'm traveling today. Like I'm in high spirits. I can't do it today. All I'm going to say is this. So here's your 7 minutes, right? I'm just going to say this. Somebody check in on your selling options for income bros today. Like somebody popping on these bros. I know y'all checked in on them on Friday. 1,100 points down in the NASDAQ. 170 points down in the ES. I know they're crushing it. I know they got out on the perfect tick. Like I know all these things are true. But still, like if there's one in your neighborhood, if there's one in your Discord, group that you're part of, one in the subreddits that you frequent, just check in on them. Just checking on them because, again, I can't do it. I can't go any further, but just checking on them. And so let's see, S-Swing, but I'm definitely going to hold XLE. Don't worry about that, my friend. I mean, we're barely even tested. Like we'll sit tight on XLE. We should be fine. So the next take will be 77. S-Swing says Peter Schiff is right once every 10 years. I think it's once about every 15 to 18, but still, again, was he wrong? No, he was just early. I can appreciate that. I can definitely appreciate that. And so Peter says, here we go, guys, into the abyss. I don't know, man. They're really squashing them today. And it's been quite I was looking at the metals earlier in terms of the action in the market. Let's look at the actual market action. I mean, it's been really, really wild today because the morning was obviously really good. And so again, I don't know what came out. There must have been some news that dropped, or maybe some tweets or something to that effect. And, yeah, I mean, just quite a turn of events. But I mean, the market tried to get itself back, right side up, but it hasn't been able to do it. I mean, the shorts have just come out and just squashed them basically every turn, every turn. And so, yeah. So let's see, Stephen Bivens, big one inbound. Hold on to your booties. And so, yeah, it might be something. I don't know. Again, VIX is 24.5. So it's hanging in there. Dan Ducarn says buy the dip. I mean, that's been the play. That's been the 100% the play. Is it not today? What's funny about buying the dip? So buying the dip is obviously a great strategy long term. It's a great strategy. I don't know that you could find a better strategy long term when it comes to your portfolio and maybe your passive assets and whatever. But what's funny is it's always the same story. It's always the same story. And the best example of this recently is Liberation Day. Liberation Day from, back in April. That was scary stuff, man. Like you had the market was down, like 18, 20, 22% in like 3 days or 5 days. Like it was pretty quick if I remember correctly. And then that bottom tick on the S&Ps, it was 4,200 or 4,400, whatever. I mean, it didn't feel too great to buy that. It never does. It never does. And so buying the dip, I mean, we joke about it. I certainly joke about it. And it's funny, but it's actually not that easy to do. In my opinion, especially now, like I actually think this dip is much harder to buy than the Liberation Day dip. Now that one was hard because it was like super scary with like the tariffs and like trade wars and, Trump pulling out like his big poster board of like, you get a tariff, you get a tariff, you get a tariff, kind of Oprah Winfrey style. And so, that was like some spooky stuff. But now I think it's even spookier because you're so close to the top. Like you're so close to the top, when you're already down 20, 25%, it's like, all right, are we going to have another Great Depression? Of course it's possible. Is it going to happen? I think it's pretty unlikely, at least in the, in terms of like a crash that quickly. And I know that obviously the perma bears view that very differently, but that's what makes a market, and so there you go. But let's see. There you go. Theta Trader, Rigatoni, and URA Uranium. Can't go wrong. I don't know, man. Rigatoni's getting smacked around today, so maybe you can't go wrong. But let's see. Peter says VIX is now higher than it was on the big down day last week. That's pretty crazy when you think about it. Brian Dowdy says, hey, Dr. J, you got me on UAL. I closed it for a small profit. Nice job. I got nervous when it dumped to 9%, and I closed it when I broke even. Good job, my friend. Sometimes that's all you can do. Sometimes that's the best you can do. Like you just get the scratch and you move on, and then that's just the way that it is. And so, nice job out of you, my friend. That's a good trade. If it doesn't go your way and you're able to get out for a scratch, I consider that to be a win. I 100% consider that to be a win. And so let's see. Wits7 says, Dr. J, good day. What's going on there, Wits7? And then let's see. We got Dan Ducarn's in the house. Lobo Doe's in the house. Regional banks getting hit. And then let's see, HK, my cubes position already hit 50%, but I don't want a PDT point. Yeah, that's tricky, but that could be getting changed here soon. If you've been up to snuff on the FINRA latest, that should be getting changed hopefully in the next few months, I think. And so that would be super awesome. But man, can I get to like one more? I kind of have to go because I have to leave for the airport. But let's see, where are we at? Man, I'm gonna surprise and delight somebody at the end of the show. Let me surprise and delight somebody at the end of the show. Where are we at? Can I find somebody? Let's see. Well, David Gallimore just says, I'm here late. I took a nap. What happened? Man, you missed everything. You missed everything. I still don't know what happened. I don't see you guys putting it in the chat, so I still don't know. I'll have to check after the show. Maybe check at the airport terminal. That's what it is. But thank you for being here there, David Gallimore. I appreciate you, my friend. You are certainly part of the core position, and so I appreciate you so much. I do have to go now, though, guys. I have to get to the airport so I can go to Chicago tonight. So tomorrow I will be live in the studio. So, guys, I appreciate you. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
So, Tom, what is your definition of underwater?
The futures close 15 minutes after the cash markets close. So underwater means when the futures close under fair value, under the cash price.
If you're selling in the hole, what are you doing?
Oh man, if you're selling in the hole, you're puking. That means you're selling it at a price you don't like, but you have to do it because it's hurting too bad.
Tom, in the pit, when somebody would say it was an out trade, what would that mean?
An out trade's a mistake. That means one person thought they were doing one thing and the other person thought they were doing something else. And so an out trade is just another word for mistake. You can use an out trade in anything in life. When you just have a misunderstanding, that's an out trade.
When Tom says double whammy, what does he mean by that?
Ooh, double whammies when you roll down calls because the stock's going lower, and then all of a sudden the stock goes higher and you start rolling up puts, you're getting double whammied.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hey, what's going on, everybody? TSM had good earnings, and they said some positive stuff about AI, naturally. We'll talk about what's going on there. CoreWeave also creating a new AI-related project. We'll talk about that as well. And finally, if you haven't noticed today, many of the regional banks are starting to sound the alarm a little bit, and it's not looking good in that space. So we'll talk about those three things and more. There's quite a few earnings out coming up over the next 24 hours. I'm probably not looking to trade many. I got a whole lot of other interesting, more risk on than earnings right now. So we'll talk about that, and obviously gold and silver's meteoric rise. But first, welcome to the most dangerous show on the Tasty Live Network, folks. It's Engineering the Trade, and I'm your host, Jamal Chandler. We got a wild market here. I mean, I've been telling you, I've been teeing it up for you. I told you it was coming, and the volatility has been telling you that it was coming. We saw the volatility rising more recently. You couldn't no longer say it's a low volatility environment. Sure enough, that's exactly what we're seeing here. Let's dive into slides so we can quickly, eventually head over to the platform. TSM had earnings yesterday. They had a really good earnings outlook. Of course, the stock didn't necessarily respond the way that, well, at least I had hoped it would have. I had a calendar call on this one. I was hoping for more of an upside play on the earnings. And look, I think this is a good example to let you know. I really believe that a lot of these names, they haven't, when I say a lot of these names, all these chip names, whether it's NVIDIA, whether it's TSM, Micron, and correct me if I'm wrong, you can check the tape, but I don't feel like they've had these blowout earnings moves. They may have had blowout earnings numbers, but they haven't had these blowout earnings moves. And that just comes from the fact of the AI story is strong still, but you almost have to really go way above and beyond for a lot of these stocks to really make the kind of moves that are going to work for some of my type of plays on the calendar call plays on earnings. So I just don't think I'm going to be playing too many of these on earnings from now on. The story is always fascinating, though, because clearly you can see that stories that come out or the things that they say on earnings make the other stocks move. I mean, AVGO was moving today at one point. AMD was higher, obviously, before the market took a dip here. A lot of the other chip stocks were up higher just based off of what TSM said. Another AI chip-related stock coming in to say something positive. And again, I think some of their biggest users, who is it? NVIDIA, AVGO, and Micron are some of the stocks that were moving on it. But I think there's also, what was I going to say? There's two stocks that use TSM chips the most. NVIDIA and Apple also use a lot of TSM chips, and so of course they were excited by this news. But again, you don't see the stock move in TSM, if you will. It was the most it got up to. I mean, it got up to 310s, but then of course turned lower as the rest of the market started. Actually, it turned lower way before that. It turned lower right around the open. It was at 310 prior to the open, but then turn lower as soon as the market opened. So I feel like that's been kind of par for the course with some of these chip names. Keep an eye out for that when you're looking at earnings to play for this earnings season. Some of these names might not exactly do what you want on earnings. CoreWeave announced a fully managed AI object storage service. Fully managed AI object storage service. You'll be able to store AI objects, apparently, and it's the first of its kind that I've heard of. CoreWeave is one of those interesting names because it has a lot of different customers. As a matter of fact, we're going to look at this later on a slide that I have here that I think kind of continues to stay in the mix. I kind of feel like it's a, sort of dark horse play in the AI space here. So it's one that I keep an eye on. But, you're just hearing more and more every day. I feel like these guys have new news, these chip names, whether it's earnings, whether it's some type of new project, whether it's more funding, every single day here that we're going through it. And that's what makes this whole U.S.-China trade war relations that much more important, and that these moves of these names revolve around it. Finally, in the regional banking space, Zions and you know what? I still always call it Wahlburgers. I don't even remember their actual name. It's Western Alliance. Two of the more larger regional banks, if you will, kind of sounding alarm on credit loan losses. This is essentially the losses that banks like them write off. And so basically what this is leading to is people thinking that either smaller businesses or people are struggling on home loans or whatever other types of loans that they have. Again, this goes back to consumers, right? And a lot of consumers use regional banks, particularly smaller businesses. Smaller businesses are starting to have a problem. Well, this adds on to the situation of this almost adds, this is like a double-edged sword along with the jobs market starting to have issues. And that's one of the reasons why you're seeing the 2-year yield start to crater today, because it seems like we might still have rates too high and they might need more cuts. So that's what you're kind of seeing there overall. It's been 2 days of selling here from KRE, but we might try to pick up some long deltas in there when we get to the platform. Leftovers, these are the world's busiest airports. Let's move to the next slide. CoreWeave put is closable from a scratch now. I should close it, but I'm not. I feel you, Rancher. I feel you. So, airports with the highest total passenger traffic in 2024. You also can see the change in that traffic since 2019 on the right. So, Hartsfield-Jackson Airport, ATL, if you've never been, it's definitely a huge airport if you've never been there. You can get a little lost in there if you don't know what you're doing, especially once you get on the tram. It was the first airport I remember ever getting on a tram, and I was going there as a kid. My mom lived there as a kid, and so we used to travel back and forth. Eventually, I went to school there, so I got a lot of ties to Atlanta. A lot of you know that, seeing you at Atlanta shows, etc. 108 million passengers in 2024. That's actually down 2.2% from 2019. And 2019 is a good reference, of course, because why? Because it goes back to pandemic times when we really had major traffic. One of the things that we were identifying during the pandemic, as we were coming out and as things were opening up, was how was airline travel? You remember that? We were looking at airline travel. That was the first time I realized there was this website that kept track of TSA numbers, people going through the airport checkpoints. I remember that was something that I was like some metadata that I was looking at for a while there. And you could almost see that as traffic was happening more through the airports, other things, consumers, products were starting to get sold more, things like that happened. It was a measure of productivity for sure. Dubai International Airport, DXB, 92.3 million people, 6% higher than 2019, 6.9%. My kid just went to Dubai this past summer. You probably heard me talk about it. He went there to hang out with a friend. Great job. I mean, I wasn't doing that at 21. I should have done that at 21. But you try to impress that on your kids, right? Do more things. Travel more at your age. I didn't travel enough. I went to grad school and was trying to get smart. How dumb is that? Dallas-Fort Worth, DFW, 87.8 million travelers, 17% more than last year. Interesting. People are going to Dallas-Fort Worth. So that more than just Mike, Nick, and Katie when they went for the show. A lot of people are. Haneda Airport, 85.9 million people. Yeah, and that is, what is that? About the same as the year before. Again, that's in Japan. London Heathrow Airport, 83.9 million, about 3.7% higher than 2019. Denver Airport, 82.4 million. 1, 2, 3, 4, 5, 6 on the list, if you will. So yeah, I mean, essentially the top 5 in the world, 2 of the top 5 are U.S. airports. The other 3 are international, compared to the U.S., that is. Denver Airport, like I said, 82.4 million, 19% higher than the year before. Istanbul, who's going to Istanbul? I don't know, but it's 53% higher than 2019, 80.1 million people. And then Chicago O'Hare on the list, 80 million people. It's actually down 5.4% from the year 2019. Let's move to the next slide. Yeah, this is a predicament we find ourselves in. You knew it was coming, potentially coming, but now it's happened. We're in backwardation, folks. We're in backwardation. There is the front month trading above the next month, which is trading above the month after. December is still fairly low. Just always remember, when you're looking at these forward curves for VIX, it's telling you that over the next 30 days, this is what the expected move is supposed to be. And how do you get that expected move? Well, again, divide the VIX number that you see currently by 16. That's the rule of 16. To make it easy, if you divide, say VIX is trading 24, which is it trading 24? Let's call it 24, the actual VIX. That is basically implying 1.5% moves, right? If you divide 24 by 16, that's implying 1.5% moves in the S&P 500 in either direction for the next 30 days. That's what it's supposed to mean. I will excuse me, I will often interpret it as it's pricing in 1.5% moves essentially right now, and you're seeing it move that way. But it's technically, it's telling you that it's pricing in it's pricing in whatever that percentage is. In this case, 1.5% for the next 30 days is what essentially it's saying. But yeah, we have October VIX trading above November and December. Remember, October VIX expires next week. So, yeah. Would you ask me how many airports of those airports have I been in? Ooh, I gotta think. Let's see. Hartfield, Jackson for sure. Dallas Fort Worth, London Heathrow, Denver, and O'Hare. So 5 of the 8 I've been in. Never been to Istanbul, never been to Japan, never been to Dubai. There it is. But yeah, we're in backwardation, folks. So this is the time where, it's interesting. I haven't decided. I got ideas. I got lists. I haven't decided how much to sort of lay into selling right now. I've luckily taken off some capital over the last couple of days, and I'm trying to decide what to do going forward here. It depends on how much lower we go. Depends on how skittish this market is. Let's move to the next slide. Just thought it'd be fascinating to look at all the different things that you can do with money, right? You can either buy silver, you can buy gold, you can buy Bitcoin, you can buy none of it and keep your money in cash, UUP, or you can put your money in a bank and invest it at a 10-year yield rate. So this tells you what the public thinks about all of those options. They just want to buy gold and silver. That's it. That is it. And they've changed their mind on Bitcoin right now. Nobody wants dollars, and people feel as though rates are going to go lower anyway. So why in the hell should I put my money in 10-year yield? That's kind of how it feels right now. That's what this chart says to me when I look at it. It's kind of fascinating, right? It's kind of funny. But yeah, I mean, gold and silver just continue to rise higher. It is crazy. And I just saw something today that said, gold is up 9 weeks in a row. It's never been up 10 weeks in a row. I got a great chart for you guys. Watch This Week in Stocks tomorrow morning at around 8 a.m. Central, 9 a.m. Eastern. I got a great chart for you guys about the bull markets in gold. You're going to like that one. Let's move to the next slide. So this is the chart I was talking about when we at the top of the show, talking about all the different money that's been pushed around. A lot of people have talked about this recently. I mean, large tech basically is kind of tying their fortunes to open AI. When you look at, Microsoft is an investor. The SoftBank has given money to them. You see that they have a project with Oracle, and Oracle is a strategic computing partner of NVIDIA. And then, NVIDIA, of course, is deep in this thing because they got connections to CoreWeave, which also has connections to Microsoft and all of that, right? Like, it's just, they are really deep in it. Amazon, really has not moved as much on this AI situation. OpenAI is supposed to be a cloud integration partner of theirs. But then you see Google in there. You see, Broadcom. They've done a custom chip for Broadcom. That deal just came out the other day. They're going to do a custom chip with OpenAI, and multiple governments have connections with OpenAI, particularly our government. Remember, they just gave it out for free to the governments more recently. So this is a fascinating chart, I thought, just showing sort of the interweavings of OpenAI and how it's controlling the fortunes of a lot of different companies. This is what I've been saying. Now you see it in a visual. Yeah, I know, a lot to take in. Let's move to the next slide. So for earnings today, we got Interactive Brokers, more of the financial stuff, right? AXP, Ally, Fifth Third is one of those regional banks, and of course they just did a deal more recently. State Street is not a regional bank; it's a fiduciary bank, but still another really interesting earnings sort of just to learn some information from about the economy. HBAN, TFC, Regions Financial, of course, Comerica was involved in that merger with Fifth Third, so Comerica's earnings shouldn't matter much. And then, of course, we have CSX earnings as well. Number of S&P 500 stocks above the 50-day moving average is 225. Lost 15 soldiers from the day before. Let's move to the platform. this is the current state of things for me. Where I'm confused at a little bit, what I want to do, I've talked about this before, the ability to have something green on days where most of your stuff is red, because again, a lot of the stuff that you see is red, probably long deltas, except for my gold play. Yep, I still have it on. I'm still short the MGC contract. I'm just waiting, man. I'm just waiting. I mean, look, this chart is incredible to me, and I feel at the very least it should just be pulling back to this 1 week moving average. It is so far extended right now, so I'm just gonna hold. I mean, I probably should just get out so that it'll finally drop. It'll drop for everybody else if I get out, I'm sure, but yeah, I mean, it's fascinating to see here that gold and silver continue to reach new highs, but I'm not changing it. So I have these diagonals that I'm waiting to see if market gets lower in the day to eventually maybe put those on. I almost feel like it's a potentially good time to put on these strangles that I've been complaining about in some of these tech names, whether it's MU, whether it's CSM. You know, I'm still eyeing them up. I just find them, I found you don't have many situations often where you have the ability to sell some vol with no earnings, and vol is fairly high. So I know I complained about an Oracle strangle in recent days that I finally took off. I took off AMD just today, but I think it's time to maybe redeploy potentially, just because I just feel like they're good opportunities. So that, I don't know, I might do that. But in the meantime, the only reason why I'm waiting is because I just feel like there's going to be a bigger flush towards the end of the day, and vol is going to get a little bit higher, and then I'll be able to do it. That's the idea. I want to be able to. So again, I have this. Before we get to KRE, I have this SPY diagonal, the 670 put in December and the 650 put I'm short in November. That is a short delta play. I'm waiting to see if we kind of have a flush towards the end of the day in the market to be able to take that off. KRE, like I said, it's been a couple of days of selling here as they start to get worried about loan losses. Seems like a decent area to pick up some long deltas, right? Let's try it. And let's go out to December here. I'm going to go with the 55, 57. I'm going to go with the zebra here. As you would imagine, you know, some of these, I mean, the regional banks in general, they're kind of wide deltas here. Is there any volume in these? Very little volume. I don't know. We'll see if it makes any sense. I'm going to try it, though. Hi, Jamal. Where can we find the real-time source for the HVIB chart you often show? You know, I'm not sure if you can. So the chart that I often show, most of the charts, if not all that you see that I get, are from our Tasty Research Hub. It's just internal. And so, excuse me, it's just internal. So I'm not sure where you can find that. Maybe you could. Maybe you could try. There's so many different places these days. I feel like that might have things like that. Look up there's some charts that if you just look up historical vol versus implied volatility, maybe you could be able to find it. And then I feel like I found one recently and then try to do a plug and play. Hey Jamal, what do you think about doing with the Netflix call? So yeah, I have a Netflix calendar call spread. I'm long the 1300. It's a good question. Do I let it ride? Yeah, you know, this one, it might be better served. Let's see if we can. What does this look like for actual earnings now? Because we've had this on for a while. I might just do that. Actually, it's a good question. Thanks for asking, Smack11. I think it's probably a good idea to go ahead and get ahead and roll this one out, and then that way it's not as big. So let's see. Let's close this. 1268. Let's go to 1265. That's pretty big. Oh my God. It's like nothing wants to get filled right now because of the way the market is. It's crazy. That is such crap. Trying to make me go to 1240. Thank you. Sold for $12.45. And then what we're gonna do is just because we still want I still wouldn't mind having the earnings played, and the 1300 seems fine to me. At $2 and change is totally fine. So we're gonna go with that. Seriously, didn't I just look at this thing? It was $3 and change. A little wide, it seems. We put that on for 305. So yeah, we're gonna roll with that. And what does a 1250 look like? 1250. What does the 1250 look like? 402, huh? It's not that far away. Can I get it for 4? I mean, why does it have to be 402? Yeah, these prices are weird right now. Things are getting a little wide in the market. I'm getting filled better prices than it's even telling me. So yeah, we closed that out, and we just decided to do some new ones, but using the OC 31 expiration, and then we're short the OC 42 expiration. I'm sorry. We're long the OC 31 expiration. We're short the OC 24 expiration. GVZ. Yeah. So that's your ticker. You have to use :CGI when you're pulling up GVZ on our platform. It's something that changed with SIBO, and so they usually end up doing it like that. So I don't know if that's the CGI. I mean SIBO Global something data maybe. But yeah, there you go. There's GVZ. So yeah, do GVZ :CGI. You'll be able to do that right now. Yeah. Let's see, what else? Yeah, I know Netflix chart is smoked. That's one of the reasons why we're just trying to play it to the long side and trying to find cheap ways to do it. But that's a good call. Thanks for that. I still have KRE. I still haven't gotten filled on that, have I? I don't know what the deal is there. We're gonna have to pay up a little bit. 730. How about that? Oh my God, that is ridiculous. You can't give me a fill on that? Are these more liquid? Doesn't seem like they are actually. 56, 54. Is the 56, 54 in here better for this time period? I don't know. This thing might take longer than 30 days. And we also have let's see. What happens when's the Fed meeting is in less than 15 days. That would be 21 days at this point. Yeah, we want December. I don't know why it's acting so weird. It's ridiculous, but we're going to leave that out there. We're going to expect that. Do you expect the major indices to fall some more tomorrow? I mean, I've kind of been thinking that. I thought that at the beginning of this week, though. So, what do I know? I mean, I thought at the beginning of this week, the market would have fallen more after what happened, and it would have been a little bit more scared, but did not happen. Didn't seem to happen. So, yeah, this TSM just had earnings. I had a couple of calendar calls in here, and let's see. I'm long the 320 and 325 calls. You know what? The way these names have been moving, and the fact that it's straight up 310, I'm going to hold on to this because who knows if TSM doesn't say next week, oh, we have a deal with OpenAI, and then they come out and the stock runs on that. But in the meantime, devoid of that, I'm going to sell this strangle. Yeah, I'm probably going to complain about it later too, but I'm going to sell it. So, selling the TSM strangle. Let's see. I said Micron was one that I had been looking at before too. This is another. Selling, let's see, 175. That's somewhere around here, right? That's the low. I'm going to stick with the 170 strike and sell the 240. So basically right at expected move. Sell this one too. And you know what? I am just going to go ahead and I probably should have closed these late last week, but well, I'm going to wait till the end of the day to close SPY and my SPY and this SMH diagonals here. I'm going to wait a little bit, but I do probably I'm going to look to sell those to close and just keep the cash for now. I mean, again, this is just a small little short delta. If we flush towards the end of the day, I certainly will close them. But if we don't, then I'll just hold them for the other day and just see what happens tomorrow. Because again, it's very possible we could have a little continuation here tomorrow. I'm still waiting for the point where not only the market sell off, but gold sells off. That's just what I believe is going to happen at some point. You know, I don't know exactly when gold is going to decide to sell off, but it feels like something that eventually should happen, don't you think? You know, Accenture is, this is a small stringer that I've had on for a while. It's actually been working well. There's probably no real reason to close it, but I just feel like there's better ideas right now. If I can sell these names that are in the 50s, why am I trying to sell vol for something that's in the 30s? It's been a very small winner. I've had it on for, let's see, how many days have I had this on? Days open. I mean, I've had this on for 20 days, and it just hasn't come in that much, which gets frustrating sometimes. So, I don't know. Why should gold sell off? Well, one of the reasons it should sell off is when the dollar rises. That's one reason. The other reason it should sell off is because, I mean, you know, at some point or another, there's exhaustion in buying, right? And one of the things that we've seen a lot throughout gold throughout this year is that it has not typically been, I mean, right now, gold is about 200. It's about, is it close to 5% above this, let's see, 10, it's close to 5% above this 1 week moving average, which I don't think that's happened too many times. So that does seem somewhat of an anomaly here. And again, it's been up for 9 straight weeks. I mean, do you think gold should be up 20 straight weeks? If you do, you're a nut job. Jesus. How much more do you think this thing needs to go? UAL, this was an earnings play. This is one that didn't necessarily work out. I got it decent. It's a while. I mean, I don't know what the airline story is, but maybe I hold on to this for a little bit, just as some long delta. I don't know. Typically, I take earnings trades off right away, but truth be told, it's not really an earnings play. It's actually further out than earnings. So we're going to see if there's some bounce back in this at some point. One of the reasons I was interested in the trade is because oil was low, and I thought it would be a positive thing for them, but just not happening. So, but yeah, right now that's pretty much what I got going on. You see, I added a couple of trades, but I really am starting to try and risk manage, and I just want a couple of things to work. For those who didn't see it earlier today on the trade page, I did sell a put in IonQ. It was day 2 of the sell-off in a lot of the quantum computing names. Also sold a put in RGTI for the exact same reason. So we'll see if those can get a bounce in the next couple of trading sessions. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, trade them often. See you.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Hello, everybody. Tim Knight here. Well, the bullish, precious, bearish equities today, at least, is looking good. We've got red across the board on equities, which is a nice shift from where it was earlier today. And the precious metals do what they do every day: lifetime highs. Palladium, our old favorite, has outshone them all in percentage terms, and it's a good day. So I've got some symbols gathered together, and we can thumb through them and catch up on these wigglings. We begin with a spider. Our old friend the wedge is still there. So the two principal patterns here are the bullish formation beneath this horizontal, which is a long way from being invalidated, and this wedge, which was broken weeks ago. And we had our big tumble on Friday. And since then, as I had said, that kind of established a new range for us, and we've been prancing all through that range. Green, green, red, red, just wild movements. Today, for a change, instead of just good or bad Chinese things being said, it has to do with regional banks across the US, because gold doesn't go up hundreds of % in a couple of years just because. I mean, there are reasons that silver is at lifetime highs, gold is at lifetime highs, gold miners are at lifetime highs. Something's rotten underneath the surface there, because it's, the reason these debasement trades are being so celebrated is because, well, fiat's getting really debased. And that's, as the reserve currency, that's kind of a big deal. The cubes have hung out below their own broken trend line, like so. Today, across the board, everything opened strong and is currently trading weak. I like on the small caps, which is one of my shorts right now, near the lows of the day. As I glance over at my 24 short positions, every single one has moved profitable today, so that's pretty cool. And it's like I say, it's a nice shift. We've got a bearish engulfing pattern for the day, pretty much across the board. Semiconductors started the day strong and are a little weaker now, although the past couple of weeks we've just been banging around this range here. Just want to reemphasize that we have not crossed below. This trend line is unbroken, and we're near lifetime highs right now, even though we've got some red going on. It's an odd thing, because here, and here, we seem to be there seems to be like a ceiling up there. Very strong ceiling holding prices back on the SMH. But as I mentioned earlier, one of my short positions, I've got a number of short ETFs. One of them is IWM, which I got into yesterday and added more this morning. And it's a little bit murky, because on the one hand, we've got a huge bearish engulfing pattern. We pretty much opened at the highs and are presently trading near the lows for the day. So that's good. We're also just barely crossed back below that trend line. So that's also good. What's not so splendid is we're finding support at the moment at this line right here. And what this line represents is that high way back in November 2021. And so it was the high here, and we matched it here, plus a few pennies, and we've beat it here. We've gotten above it. And so as much as I appreciate today's tumble, I'm toying with the idea of maybe covering on this particular position, just because it's finding support at that very important multi-year line for like 4 years. So we'll see. Emerging markets, this had a lift today. We've basically gone up 3 days in a row, and it is also near its own, I think, lifetime highs. It's back all the way up. No, not lifetime highs, but at least multi-year highs, going back for quite some time. It's odd, because the levels we're at now are the same as we were back in 2007. So, 18 years have passed, and basically EEM has made no progress. But in the shortest term, just going back the past year, this trend line got busted on Friday, but we're above it again. It's just kind of a murky mess at this point. Okay, well, a couple of years back, I don't think I would have ever mentioned gold or silver at any time. And now it's like, we could do every single day show only on precious metals because they are a sensation right now. The front month of gold, triple digit gain. So not long ago, 4,000 seemed preposterously high, but then it's like 4,100, 4,200, 4,300. Every day sets another high. And you can see here that even short term, ever since August 20, there's been hardly a downtick in sight. I mean, the only bar that was even kind of down was back here on October 9 for whatever reason. It shook it right off. I mean, 2 days later, it was blasting above to another high. So we've gone up about $1,000 in 2 months, something like that. Pretty eye-popping stuff. And if we go back to the entire history here, you can see that it has been a really amazing move. And as I've mentioned, it seems incredible, but gold was like borderline free back in the year 2000, $230 an ounce, something like that. So it's what, 20 times that, something along those lines. And this is a logarithmic chart, so this is a very honest representation of the movement. So gold, I was thinking maybe 5,000 this year might happen. We can have it this month at this rate. I mean, this is just going just bonanza. And so naturally GLD, the ETF for gold, is also at a lifetime high. You can see here, even at this 18, 20-year chart, that the most recent couple of bars stick out like a sore thumb. Just a huge move. Going back down to the yearly level, this is why I don't try to get cute and try to dare short anything to do with precious metals, because this thing just keeps blasting higher. And people I respect talk about silver at $500 an ounce. It's like those kooky Bitcoin predictions about $1 million a coin. Well, you're getting some equally loony ideas about precious metals, but they at least I think are a little more plausible. Silver, as you know, is up to a lifetime high, almost 3% gain. If you look at the lifetime history of this, you can see we have beaten the high from back in 1979, Hunt Brothers cornering in the market. We've beaten the 2011 peak. So those are basically a match, and then we are above that now. So in nominal terms, prices never seen before, and a massive, we're talking decades and decades and decades of time here, massive cup with handle, bullish pattern. So ultimately, in nominal terms, how high is this going to go? 100, 200, 500? Remains to be seen. It looks, if you have a bunch of silver, you wouldn't be crazy to just forget you have it and just like ignore it for a while, because I think it's got a great history, great future coming. SLV, also lifetime high, not surprisingly. That is bested the level set back in 2011. This chart doesn't go back as far because SLV as a financial instrument didn't exist as long as the silver futures contracts have. And so with all this happening, the miners are also having another good day and are also at another lifetime high. You can see that by and large, for almost a year going back, every month is just a big blast higher. And there is the daily chart, and there seems to be no stopping it. And of course, we can't talk about precious metals without at least a glance at our old pal palladium, which in percentage terms tends to be beating gold and silver day to day. It's dialed back some. It was up like 5-6% earlier today. It's up 3.43% right now in PALL. The futures themselves are up 4.13%. And unlike gold and silver, it's not at a lifetime high, but you can see with this very long-term chart, what a monster of a green bar. This is bigger than any other bar, except, maybe this one. But this is one of the biggest moves that we've seen in the history, in all the history of PALL. So, jaw-dropping. As far as individual shorts, like I said, I'm kind of loaded to the teeth right now in individual positions. I do have some ETFs. I'm short XLB, XLE, IWM, like I said. But as far as some individual equities that I'm short, here's a few, just in no particular order. Here's Carvana, which is down almost 3% today. A lot of these in fundamental terms are very richly valued. DHI, a home builder, turning away nicely from that consolidation zone. I made mention of home builders yesterday, XLB broadly, and then DHI in particular, as being interesting plays. And that's so far so good. Today's a good day for the shorts on those. Global Payments, GPN, down about 2.5%. Hilton, HLT, also down nearly 3%. Nice turning away from this small distribution top on Hilton. IBM, which was at a lifetime high with this beautiful shooting star not too many days ago, that was for now the end for the rally, and it's been falling nicely since then. So we're down a little over 1.5% on IBM. Here's a more thinly traded one, Lumen. And if you go back to the entire history, it had collapsed and had this explosive move higher. And since then has done kind of this V bottom that we've seen. Probably one of my smallest positions, but entered this today with a tight stop at 7.50. I mentioned XHB. This is the home builders ETF, and I shorted this one yesterday. And I mentioned this one specifically yesterday, I believe, because I think that gap that we see right there is a conservative stop loss. I've set my stop tighter just to yesterday's high, but this is a nice little topping pattern. We had our dip, our pushback, which in my estimation topped yesterday, and we're starting to retreat away from that. So that's XHB. A couple more of these individual shorts. Hang on, baby. There's United Healthcare, UNH. This is a very pretty gap play. And so we back this up, not that far back. Let's go to a 1 year on this one. There's our gap. So there's the big plunge right there. We sealed that beautifully a few days ago. Hello, Mr. Duke. I'm almost done. So it flying higher, closed the gap, and now we're starting to slip a little bit lower. And one last one, Delta, DAL. We've got 2.67% drop on that one, even with oil getting cheaper. So that's surprisingly weak. So just to wrap things up, let's just hit three big equity futures. Here's the ES, down 64.5 right now. Our old wedge there is the key, big plunge, and then kind of peaking yesterday and then slipping away today. Tomorrow being Friday, that may have some psychological impact because people are so on edge these days about geopolitics. That may play into it. The NQ has gone from a triple-digit gain to a triple-digit loss. As you can see here, 1, 2, 3, 4 days in a row, we have, on the whole, been either opening or closing at very similar levels. So it's a pretty tight range following this plunge. And finally, the RTY, which until just yesterday, which was at lifetime highs, was being exceptionally strong. And at present, it's a bit of a murky mess. As I said, we are below the trend line again, but we're above this very long-term peak, which was anchored back to the November 2021 peak in the COVID mania. So this is the kind of fuzziest of all because it's been jumping on either side of that trend line. Bottom of the hour, I will say adios, and we'll wrap up the week tomorrow. Thanks. Bye-bye.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Mikey, we are back, my friend, and we have a little bit of a sell-off here today. E-mini S&P 500 futures down 67.5, I should say, about 1%. NASDAQ down 196. You got the Dow down 440 and the Russell, the weakest of the group, down 63. A huge move in the Russell. Oil giving me fits here, /CL down 87 cents, 56.97. That is a low we haven't seen in quite some time. Volatility futures have remained steady in bid throughout the session, 22.45 here. You have bonds up almost a full point, just under 119. You got gold just stratospheric, 4,300 and change. Silver as well, up $1.30, a little over 2.5%. And then Bitcoin falling out of bed. Futures down 3,500, spot down 2,500. ETH as well at 38 and change. It has been a wild ride today. We've had about a 120 point intraday range here. Got as high as 67.50 on the E-minis, 66.32 the low. So it's definitely been a trader's market here. We talked about it this morning. You know, this whole week has just been a wild ride. It's good to see volatility back.
all I can say is anyone out there listening, watching, if you've been sitting on some gold jewelry for the last couple of years, bring that straight to the pawn shop. I mean, this is the most insane rally I've seen, and I was talking about this yesterday on Overtime, which is coming up shortly here. But this move in gold, I think this is the biggest mispricing in terms of implied volatility relative to realized. Like even with IV rank at 120, it's still not even representing what we're seeing in real time. Like it's crazy.
Yeah,
like the implied volatility can't keep up with the realized move. Even when they try to infuse implied volatility into here, like we've had a 100-point move in the last couple of weeks, months, 100-point move.
1,000 points.
Well, in GLD I'm looking at, sorry.
Oh, yeah.
In GLD, 100-point move in a month or two, and the next 100-point move isn't priced in for 2 years out.
Yeah.
More than 2 years. So it's just like, this move is so stratospheric.
Yes.
As you said.
Yes.
That implied volatility can't even represent what we're seeing here.
It's been well outside
the
expected move based on implied volatility. Yes, totally. A little bit of a catch-up I would add to it, just the fact that you've had equity markets just marching higher pretty much all year since April. You had things like Bitcoin having its day in the limelight here, and then gold has been kind of choppy, if not, basically going nowhere for the better part of that entire time frame. It feels like it's been a very quick catch up, and just like everything else in markets, it has happened in the span of a month or a couple days. Like you blink and you miss the move. That's kind of what it's been like to me.
Yeah, it has been
crazy.
Absolutely nuts. You've had some products release earnings. United actually opened like flat, basically.
Yes.
And then the market started selling off, and United started selling off as well. That's down 7 points.
TSM as well.
Points.
That was the other one.
Yeah, TSM was another one that had a little sell-off from highs, but still sitting pretty at 300, I would say. But yeah, I think we're seeing two-sided action. We've had much wider ranges than we've seen for many months.
Yeah.
And we are actually in backwardation now.
There you go.
Look at the vol futures. 2390 in the V contract, 2245 in the X contract, and 2210 in the Z contract. That is interesting.
And you can, if you build your own watch list here, you can input each of the symbols here for each of the volatilities. I put them in at the beginning of the year and just let them sit there, and you can kind of see where the curve is. So what Mikey's talking about here is that our implied volatility is now higher in the front than it is in the back months, indicating that there is some added volatility here. I like to add in the VIX, VVIX. I put some of the ETNs in there. I've got VXN in there and stuff like that. So you could set that up as you see fit, but you could definitely see there is some volatility getting priced into this market. Speaking of volatility, I wanted to touch on not only that I have a position on an ACLO that has been giving me fits, but a lot of these stocks, your quantum stocks, your nuclear energy stocks, the rare earth stocks.
Which this is probably the first time you've ever mentioned rare earth stocks. Outside of maybe yesterday.
Yes.
Or the day before.
Or the last couple weeks, ever since Trump said he's putting the TMQ in the government portfolio, I started looking into these stocks. But a lot of these, we've been talking about the upside volatility here, and we talked about it earlier in the session today of how much volatility came out just in the early part of the morning. And when you look at these stocks, you can pull up the change column here. But I'm looking at like ACLO here. You could look at basically all of them. They all look the same. But this morning, we were looking at the calls, and the stock was basically unchanged. It was down like $3 or $4, which seems like a lot, but it's not when the stock is moving, $20 higher on a day-to-day basis. And these calls that were, out of the money were down $3 or $4 or $5. You can now see the options are down $7, $8. If we go to what the at the money position was yesterday, which was around the 170 strike, that straddle has come in about $5, and that's all come from the short call or the calls losing so much value. You can even see on the put side here, the puts have basically gained no value. I mean, very little given the move in the stock. It's 10-point down move, and the puts have moved $1. The calls have moved $10. You know, like that's the volatility skew that you have in some of these stocks, and it goes to the point, and we've talked about this and done segments on it. It's very hard to get short these sort of stocks with long puts. And that's because of just how much volatility is pumped into these stocks. You barely get paid on this move. You really got to get paid on either intrinsic value, buying in the money puts, you know, significantly deep in the money puts, or from selling upside volatility, which is scary to do into these sort of stocks.
Yeah. And to your point, like in ACLO, if you just look at the November cycle, the calls, like you said, down $7-8, but the puts, out of the money puts are relatively flat. Like the 120, 130, 140, like those have basically not moved into this 6% sell-off. So, and we've shown this before too. If you look at buying puts, when market's at a high and you buy a put on the way down, you should expect maybe like best case scenario, like a 2 or 3x. Yeah. Where the opposite is true on the call side. And we showed this in Tesla, I think, where like we picked when Tesla went from 300 to 200, how much did you make if you bought the put where it went? Mm-hmm. And then the upside reversal from 200 to 300, if you bought the call at 300, how much did you make? And the difference on the call side is multiples of the put side. Like it was like a 7 or 8x on the call side and only a 2 or 3x on the put side. And that's because you have, in this case, you have collapsing implied volatility in some of these near-term cycles, but you also have a lower stock price. I think that's something that isn't thought about a lot, is like when the stock price is collapsing, so is all the extrinsic value around it.
Yes. Yes. Another one just to mention, INQ, which is another one where you're seeing, you know, a $6-7 down move today, and these calls are losing $3-4, whereas the puts are basically flat. Mm-hmm. Crazy.
Yep.
I think you got another day of this left with these stocks. Hence why I'm holding a very short-term ACLO position that was part of a butterfly, closed out of the long spread, and then I've got the short spread, which will benefit from another $10 down move if we can get it.
I'm actually shocked that we're in backwardation. I wasn't expecting to see that.
Vol's been bid all week. I mean, if you look at the VIX, it's been pretty steady throughout the bounce back that we had. I mean, we got below 20 for a small period of time, maybe couple hours here, but it's been mostly bid even into the rally, because when you look at the E-minis, Friday was a big move, obviously, but we got back 75% of that move within 2 or 3 sessions. Now we're kind of giving that back up a little bit.
Yep. Yeah, craziness.
Yeah.
It's a very tradable market. I'm trying to get into an SPX 1-day to 0-day iron condor. I just posted it. I've been in meetings like all day, but I put in a GTC order this morning to close it for $100, and it hit into the slide down. So that was a $100 winner from yesterday to today. Same exact setup I've been doing all of these 1-day to 0 days is I want to do a chicken iron condor setup where I'm collecting $200 on a 5-point wide so that my risk is close to my max profit potential, so that in a big blowout move, I'm losing less rather than like collecting $100 and risking $4. I'm losing a lot less if there is a blowout. Fortunately, there hasn't been one over the last couple of days. We've had a nice movement through the channel, but I'm trying to get into a 1-day. It's teetering on a fill, but I'm looking at the 1-day 65.50 short put and the 66.85 short call, and then defining risk 5 points wide. Looking to get $2 out of that thing, or getting filled at $2. I'll let you know if that happens.
Nice. Yeah, the SPX trades, we've been doing them in the morning session as well, like selling around the 20 delta for the short, going 10, 15, 20 points wide, depending on how much risk we're willing to take. And then we've been managing them really quickly. So trying to take like 10, 20, maybe 30% of the max profit. So when you're selling, we did one this morning where we did it at $4.10 or 15 cents and then closed it out at like a 70, 80, 90 cent profit here. So we did it at 901, we did it at 410, and then at 952, we got filled on the close at 330. So took 80 cents out of it. I think that's kind of especially when you have some whippiness in the market that we've been seeing here, that's kind of the key of just taking the money and run. It takes a lot of risk off the table. And a lot of the studies that we've done kind of highlight faster management as a way to really, really tighten up your P&L distribution, especially over a long period of time. The one today, showed that there are periods where you can have some big drawdowns, especially when you are doing this daily.
Yeah, for sure. And that's another reason why I want to collect more. I want to get closer to that chicken iron condor feel to reduce that drawdown if it does happen.
Yeah.
Fast market tomorrow.
Yes.
It's Thursday. This week's flown by.
Yes.
tastylive.com/fastmarket. Submit your trade ideas, and we'll get to them. They're always good.
Yeah.
Love to see them.
Yeah, they're some of my best performing trades so far.
Isn't it funny when you think that you've got this you're a genius thing, you're doing your own trades, but then some of the best ones are from Fast Market from other people. It's great.
I think a lot of it is just that they put you in stuff that you don't normally trade.
Yeah.
So you remember, those winning trades in some random stock that isn't in your wheelhouse normally. So
fair enough.
They have been good, but put your trades in, try to make them as liquid as possible. We are willing to do pretty much anything in any stock, so long as, we can get in and out pretty easily.
Yeah. I was just filled on SPX.
There you go.
So I moved the put side up. So I went to 65.55 for the short put spread, 5 points wide. And then 66.85, 66.90 for the short call spread. Got filled at $2 exactly. So tomorrow morning, I'll put in another GTC order, just buy it back for $1, and then go to meetings and forget about it.
That's a great thing about it's the same thing with my SPX trades. I just wait, and then if they get hit, and I'm like, oh, that's cool. Mm-hmm. Got my ding.
Love the ding.
Yes.
Speaking of dings, we have tastetrade.com/money match promo going on. This is a great time. Better time than the last couple of weeks for sure.
Yeah.
A lot of volatility, a lot of opportunities. If you shoot that QR code with your phone, you'll get to the landing page. But ultimately, 30-day commission-free trading, 1% cash match on any and all deposits within that 30-day period. So come test out the platform, check it out, and join the Tasty Nation.
Support your boys.
Yeah.
E-mini's rallying a little bit, about 10 points in the last.
Naturally.
About 15 points.
Yeah.
In the last, 10, 15 minutes here.
Feels about right.
Little short covering, as the peeps would say.
Feels about right.
Yeah. Gold going even higher.
Berserk.
43.11. It's crazy. What a move. Just unbelievable.
I'm gonna see if I've got any gold. Let's bring it to the local pawn shop.
Oh, I got 2 chains, baby. Look at that.
That is fresh. I can tell that that's real. I wonder how much that's worth now.
I don't wear fake.
I mean, obviously, yeah.
Come on.
Yeah. I didn't think that you would. It's shimmering at me.
Yeah.
How much do you think that chain's worth?
Into
this move,
a lot more than it was a couple months ago.
That's true.
Yeah. But this
never leaves.
The dollars are not what this worth holds. The worth, this is family. This is Batista legacy here. It's worth more than the dollars.
I love it.
Never take that from me. Never.
No.
I don't think I've ever taken it off. I've been wearing it my entire life.
I don't think I've ever seen you with it off.
Yeah.
No earnings really for tomorrow morning. There's some after the close today. Yeah.
You got we in honor of Mr. Sosnoff, we can actually trade this one if you have a directional bet here.
I mean, I hate the 3% earnings move projections.
Yeah. Yeah.
It's just so low.
Yeah.
I mean, it's good for directional trades for sure.
Yeah.
Because you can make money on a smaller move, but short premium, it's not for me. So I haven't really traded it. But yeah, next week you got a handful of earnings. That's kind of what kicks off the Mag 7 earnings reports. Tesla on the 22nd after the close. And then you've got, what's after that? Tesla, Netflix, there you go. Netflix on the 21st after the close. And then I believe the following week you'll have Amazon, Apple, Google, Microsoft.
They're usually all
yards.
together. You got like
Yeah.
GE next week, LMT, Texas Instruments.
Yeah.
IBM is in there. FCX, AAL, Love, Intel, NEM. NEM's got to have good earnings. Gold's the NEM at 98. My God, what a move! Been trading that in the 60 handle. It feels like for my entire career. E-mini's only down 45 here. Cancel crash. Nasdaq only down 100. Vol stay in bid though. It's coming in a little bit. Up $1.50-ish, 22.17.
Yeah. And I mean, we talk about this all the time, but it's like when you have the VIX futures and the VIX in the teens, like I don't really care what the move is. But now this is when your eyes should open and be like, okay, the market is telling us that volatility has picked up substantially today and over the last 2 days. The VIX is at 25. VIX futures are in backwardation. And historically, if we stay in backwardation, you should expect to see 150, 200 point ranges now, like going forward until something changes. So stay small, pick your spots, and strap in.
Yes, for sure. Been a wild one here. Any other stocks kind of catching your eye? Took off a position in CRM today. That was nice. Vol came in on this up move. It's kind of pumped. It's been a little bit pumped back in. I took off some calls that I had, covered calls in IBIT and ETH-A as well. I've been playing around in some of these like Micron and AMD. Anything else that you knew that you've put on that has that could spark my interest?
In terms of new stuff this week,
have you gotten long oil yet?
No.
You could do that. You could join me. I might have to use the offices as my storage facility for the amount of oil that I have coming my way.
Yeah. I can get long here into this kind of move.
I mean, when was the last time you were able to do this?
That's a good question. Well,
I know there's all sorts of Russia stuff, OPEC stuff.
I can
Might
get
be
long
a contrarian lean here.
Get long a little contract here. But yeah, we were talking with Thomas on Tuesday about oil, and he was saying like this might be the new range between 50 and 60.
Ooh, okay.
Because of
all the geopolitical stuff that's going on.
Yeah, supply, oversupply, break even around 60. We're under 60, so it disincentivizes new oil builds. So yeah. But I can bite down here. We're at multi-month lows. Haven't seen this since April, really.
Yeah, I mean 57. We haven't had much time spent below that. Gold just ripped another 10 points higher. Look at this, 43.25. It got up to. That's on the dot. That's incredible.
It's crazy how we were
3%.
We were questioning whether it would get to 4,000, and now it's 10% higher.
It's 5,000 by the end of the next week. Are you kidding me?
It's actually nuts.
Yeah. Silver up almost $2 here, 53.30. What a just unbelievable move.
Crazy.
Unbelievable. And you've had no chance to step in front of it.
No.
We had that one day on Friday, really, was really the only time where you had a little bit of a pullback for a quick moment, and then it was off to the races.
Yeah.
I mean, that was it. Friday was at 4,000. It's now up 10% for Friday.
Yeah. I mean, that's why with these low IV products, we like to do debit spread trades, like diagonal spreads. Like I've had on a put diagonal spread in gold, trying to do just that, like trying to hit the top and catch a little movement down.
At least you don't
24 days ago, I put this on. Yeah. 24 days ago, I put this on. It was a December, November, 345, 335. Significantly out of the money. But it's down $400.
Yeah.
So that's the difference between shorting it outright and having a smaller defined risk trade in a low IV product. Even now, gold is still categorically a low IV product. It's for gold itself at an IV rank of 120, it's high for gold. But if you look at a $400 product and you look at a 30% IV, that's still low implied volatility.
I'm gonna top ticket here.
Perfect.
I just did a micro gold short contract. This could be the stupidest thing I've ever done, but we're gonna play the game here. E-mini's now down 50. They just sold off a little bit.
Yeah, gold is tricky.
Yeah.
You could do
MGC is the what?
Just a straight up calendar, like a 380 calendar, is only $2 in GLD.
You could do whatever you want on the put side. They are pricing that there is no chance that it ever goes down.
Yeah.
All of the volatility is on the upside. MGC, it's 100 ounce notional. So this move today obviously would be a big problem. About a $1,200 move today just in MGC. So while it's smaller than the gold contract, it is still big. So I would like to not have that issue tomorrow.
Yeah, I'm gonna do the 370 put calendar. Just get in with you in sympathy.
There you go. Thank you.
But,
appreciate that.
Yeah, I'm gonna do this for $2 flat. So it's the 370 long December, short November. You're paying $660 for the long option, and you're collecting $425 for the short option. So you're collecting like 80% of the value of the long in December with the sale of the short. Instantly filled. I don't like that.
Oh God, you don't like that.
You hate to see it.
That's never fun.
But I got filled at 2 flat, which is actually pleases me.
Pleases me.
Yeah. So yeah, GLD 370 calendar, long December, short November, reducing like 80% of the cost basis on the long option with the sale of the short, just getting a little short delta here. We'll see if it explodes, but it's not going to matter if it keeps going up because a $200 debit is...
That's your little shot.
It honestly probably won't even move if it keeps going up because the short option will lose all of its value and the long will just retain $200.
Yes.
All right, posting that to the follow page.
As we go into the close here, NASDAQ's only down 90. They bought the dip there. You got the E-minis down 45, the Dow down 330. You got the Russell down 57. The Russell being the weakest of the group today. Oil has been awful as well. You got gold mooning, bonds going higher. Vol is high, up $1.70-ish, 22.34 on the vol futures. The VIX itself at 24 and change. Bitcoin has just looked like a dog. 108 has kind of been the lower end of where it's been trading. We'll see if we bounce from there. What do you think for tomorrow? Going into the weekend, been a whippy market. Are you giving it you think up?
Yeah.
So this isn't a day one.
No.
I
think this is day one of 100-point ranges minimum.
For how long?
Until we go back to Contango.
Okay, that's fair. Yeah. I think tomorrow you get more in the Oclos, Zion Qs. I think that's where some of the juice comes out. I think maybe you get a little bit more weakness, but I don't know. I'd like to see 6,600. That would be nice. You'd buy the dip there, I think.
Yeah, why not? It's a nice round number.
70 points to the downside.
Yeah.
Be beautiful.
Sure.
Good stuff. Mikey, thank you for joining me. We're going to take a quick little 90-second break, come back with the overtime, boys. You're listening to Tasty Live.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
When you've got a futures contract that's in Contango, what does that mean?
Futures, unlike stocks, have multiple prices appropriated to them. That's known as the forward curve. So when a futures forward curve is in Contango, that means that the front month is trading cheaper than the corresponding futures back month. So you'd see that forward curve most likely looking like this in terms of prices.
And backwardation, what does that mean for futures contracts?
Backwardation is the opposite of Contango. So where Contango front month futures contracts are trading cheaper than the back months, backwardation is the opposite. So those front month futures contracts are trading richer than the corresponding back month contracts.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Ratigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
What a day, what a day. This is Overtime. I'm Ilya Spivak here in San Francisco. That's Dylan Ratigan in Milan, Thomas Westwater in Chicago, and whoa, we got a conversation for you today. I don't even know what we're going to say, but looking at this price action, we're going to say something fiery, no doubt. Cuckoo birding and all. Gentlemen, how goes it?
It's going. Yeah. It's quite a day. I mean, across a few things, not only the equities, but the metals, you know, all of it.
It's a spicy kind of day. And it's a spicy kind of day for all kinds of reasons. It isn't just that we have a down day in stocks, and we can go right to the charts here. I just wanted to point out for you gentlemen the framework that we've been talking about here all week. This idea that, okay, so we had this massive sell-off ostensibly on trade war Michigas on Friday. And since then, the order of the day has been, give me a rally and I'll sell it. Because all of these attempts to try to recover, to try to buy this dip, they've all failed, one after the other. We get another big one today. So the most interesting thing about this price action seems to be that the trade war story hasn't gotten any worse, hasn't gotten any better necessarily, but all of the conversation out of Besant and Jameson Greer, the USTR, and all these other administration people has been an effort to calm things down and say, listen, it's not that serious. Nobody's going to go there and torch these talks between the U.S. and China. And the president himself even came out and tried to smooth things over. But we can't seem to get any momentum on a rebound, and the NASDAQ, of all things, is underperforming. Do you guys think that this is a trade war story at all?
I mean, I tend to think, I think today was the most interesting day yet. I think for obvious reasons. And I, you know, I think that what happened today very much validates what you have been asserting from the get-go, going back to last Friday, which is that the market is behaving this way because the levels are on a price extreme. It's overextended. There's lots of air pockets underneath this thing, and provoking it with anything is capable of incredible velocity to the downside.
Yeah.
And I agree with basically with everything that you just said, which is that one, it feels like that the ethos or the hypothesis of the market has flipped from, you know, buy the dip, at least for the moment, to absent a real reason to go higher, I'm going to sell it.
It seems like that's becoming a thing.
I need a big AI headline. I need a big Fed headline. I need it. Like now it feels like it's the other way around, where it's like, listen, all else equal, sell it. As opposed to before last Friday, it really felt like, certainly for the last few months, all else equal, buy it.
Yeah.
And the only reason I can even begin to offer an explanation for that or to that or about that is it's a referendum on the price levels, which are on extremes. It may, you know, if Vecchio was here, I bet you he'd say it's a referendum on seasonality.
Maybe.
And, you know, our friend Andrew Ross Sorkin has got the crash book hot on the front page of everybody's iPhone these days. So 'tis the season.
Indeed.
I mean, it's an interesting moment. It's an interesting moment to take a mad dog put position, or at least sells maybe some call spreads on the NASDAQ and take advantage of the expanded volatility. So the more conservative maneuver, I would say, that I'm personally entertaining is NASDAQ call spreads. And then, you know, the wild one.
Selling them, you mean?
Selling them, yeah. And then the wild one would be just to straight up buy puts, or at least put spreads, to try to mitigate the vol expansion well out of the money. You know, I mean, I think that there's a higher chance than there has been that in the next 3 weeks, let's say, the next 3 to 4 weeks, even the next 2 weeks, that there's a barn burner of a sell-off that makes Friday look like a warm-up act, which is not a prediction. I'm just saying that the pot odds of, you know, of something wild happening seem to have gone up. And I actually look at today's market action as much more concerning than what happened on last Friday.
I would agree. There's an interesting caveat here, but before I go there, Thomas.
Or for that matter, Tuesday. Sorry.
I agree. And there's a caveat here today that I'll delve into, but Thomas, share your thoughts here first. What is this telling you both about today and about kind of the landscape?
Well, today there's something that not too many people are talking about yet. It's on some headlines, but go to KRE.
Yeah. Yeah, there was a kerfuffle today.
Yeah, there's a couple regional banks that made a bad
Zions,
loan.
I think, and one other one.
Yeah, two that made the same loan to a smaller bank that it went bad. I think it's something to do with fraud, something like that. But it's a pretty large loan. I think 150 million. But this is one of a few other bad loans or loans that have went bad over the past few months for regional banks. And it's starting to paint a story of, I don't know if it's subprime lending, but lending that slightly riskier lending that sometimes regional banks do. And this also dragged XLF down a lot. I think XLF was one of the worst sector performers in the S&P 500 today. So it seems like the story now is just to sell these banks, get them off your books, and reassess the situation. Does that speak to something like more trouble in the economy amid these banks that are doing a bigger portion of their lending to consumers or to small businesses? So this is kind of adding to the fear narrative of an economic decline or some kind of prelude to it. So that I think hurt a lot more than just it being sector rotation or selling the RIP. But it's interesting because it was a risk-off atmosphere today. I mean, gold and silver told that equities down. So there's we're swinging back between buying and selling. It's FOMO buyers trying to come in just to buy the dip because buying the dip has been something that has worked in the past recently. But you never know if this time there has to be a time where you're going to get an extension to the downside. So what I've done is I've lined up my portfolio a lot, even though I wasn't exposed to too many equities before. But I've really taken down my amount of capital that's allocated to trades. And I think we might need to, tomorrow's Friday, it's before the weekend. I'm not too optimistic that, maybe we get a small bounce again tomorrow and then it sells off in the afternoon session going into the weekend just because people want to de-risk. What is Trump going to tweet over the weekend that you're not going to be able to get in and out of your trade? So I'm going to wait till Monday until I put some risk back on. I took one shot just to get some exposure in AMD. I sold a put spread. That's pretty much all I did today. I tried to get that iron condor back in oil, wouldn't fill again. So that's the second day it hasn't filled. I don't know why, but yeah.
It's an interesting setup. I'm glad you pointed this out. In fact, this is a chart from Zero Hedge. Every now and again, we do look at Zero Hedge. Every now and again, they do have that right story that no one's talking about. And this is Zions Bank Corp and Western Alliance. To your point, Zions Bank Corp fell after a $50 million charge-off for a loan to a wholly owned subsidiary, California Bank and Trust in San Diego. And Western Alliance Bank Corp took a dirt nap also. They apparently are saying that some borrower of theirs, quote, failed to provide collateral loans in first position, which is basically a fraud allegation. So not great. And very much a part of this story. The other part of this story that's very interesting was the Fed speak part, because that too has a role to play here, and you can see it when you look at these Fed rate cut odds and the way that they've developed. So first, let's take a look at October. And obviously, we're still very much in the high 90s here for a 25 basis point rate cut. But look at this little guy right here. This is now the probability of a 50 basis point cut later this month, which is now up to 5.3%. So you take that that 5.3, together with the 94.7 here, and uncertainty about this rate cut is off the table. It's 100% likelihood that we're going to get a cut this month. It's a given now. And what's interesting is that we got out to maybe a 50 basis point cut. But hang on, there's more. Here's December. So for December, we're still looking 81% chance that we'll get another cut. So the third of the year, the second after September's. But look at this. We're looking at an 18% probability now that either October or December give us a 50 basis point cut, and a minor, less than 1% chance that we're going to get 50 basis point cuts at each one of these meetings. And that's obviously unlikely. But nevertheless, the market went into a really dovish kind of space today. And when you look at sort of where all of this comes from, what all of this does to Fed policy expectations, not just for this year, obviously, but also for especially next year, because that we're going to have three cuts this year has been a given for a while, where there's 25 basis point one at each meeting after September. So September, October, December. That was in the Fed's summary of economic projections. The market's already had it mostly benchmarked. That's not controversial. What's controversial is what we now see as meaningful possibility that it's not going to be 75 basis points in total. It's going to be 100. That is to say, one of these next ones is going to be a 50 basis point move. But also, next year is going to be more dovish than we previously thought. Here's the SR3Z6 contract. So this is the price on interest rate futures for December of next year. And you can see here, massive move higher in the price, which is the same thing as a move lower in the yield. And so this is more rate cuts. Now, how fascinating is this after months and months and months of listening to anything dovish being a risk-on, buy them if you can do it kind of a situation. The market has loved anything that smells like rate cuts basically since the middle of the year. Once the kind of nonsense after April's Liberation Day and the foam board kind of settled, market took a few weeks to kind of digest all of that. They bottomed, they figured things out. And since then, anything dovish, buy the stocks, baby. Risk on. This is the polar opposite.
Is there a certain time that this spiked higher, or was this just gradual throughout the day?
As a matter of fact, and I am very, very happy to point out that where this happened, here's a 15-minute chart right here. You can see it right there. And what's interesting about this is about 9:15 in the morning here Pacific time. Let's take a look at when the S&P 500 took its nosedive. Oh, it's right there. This is where we actually cleared the range, right? So up to here, you can say, we're range bound, we're coming into the bottom of the range. Boom. 9:15. We break right here. It's the same thing if you look at NASDAQ, of course. No big shock. Right there. There's the breakdown. This is essentially the dividing line between pullback and a breakdown, and that's a breakdown. What's even more interesting about this is that if you look at what the dollar was doing, here is that same time frame right here. And again, here's the low. So the dollar comes back to the low, it's testing the low, it breaks right there. So all of this starts getting really, really interesting. Here's the euro, just to make it official here. Oh, and by the way, before we do the euro, here's the Aussie. Aussie right here. So that's your risk-off response. Again, that's the move that ultimately takes these ranges out. And here's the euro. Boom. Right there. So what's interesting about all of this is after months and months and months of saying la-di-da rate cuts, what we get here is a weaker dollar, weaker stocks, stronger bonds kind of a response. Now, obviously, one would go and say, well, what happened there? And there, as it happens, there's an answer. What happened there was maybe next Fed Governor Chris Waller came out and said a bunch of dovish things. And although Kevin Hassett looks like he's favored by the betting markets here to be Trump's nominee for Fed chair, it seems like that's the path of least resistance for now. Both Kalshi and Polymarket have him ahead. Waller obviously is somebody who is a top 3 contender here. And so since he is, the markets were paying attention, and he said a bunch of dovish things. So here we have an interesting situation. The markets are taking a catalyst that before was a risk-on catalyst and making it into a risk-off catalyst. If ever there was evidence of regime change, this is it.
Regime change where?
If the previous regime was dips are bought, buy the dip,
and rally, and now you're saying that
the current regime is sell the rip.
Sell the rally.
Yeah.
I don't disagree with your overall assessment. I am a little skeptical of any. I mean, this euro chart is not exactly a compelling.
I'm very skeptical of any lasting dollar weakness. I don't think that holds.
I mean, how much is this dollar weakness? I mean, it looks to me like an unchanged chart over the last week.
I would agree.
I mean, come on.
I would agree. The part of this story, and obviously, as ever, I'm talking my book, but why wouldn't I? That's why I have it on. If you look at sort of what has happened with the dollar here today, what there is seemingly is a correction. But we're still in the same range that we've been in. We haven't gone anywhere. And if anything, this is still a dollar that refuses to fall.
What did gold do today?
Looking at, gold did what gold does, which is that. And when you consider that apparently the catalyst was something dovish from an important Fed speaker, this makes sense. And you get sort of this all-weather thing from gold, as we've been talking about. Here's the daily chart on gold. So this is what it did just today. And it's this thing that we were talking about, Dylan, with Mike Butler yesterday. This idea that gold has become this kind of all-weather thing where it's like, well, I don't like the risk environment, and this is one thing I can own where, were I to be worried about the risk environment and the dollar and this and that, this sort of answers all of my concerns.
I mean, whatever it is, though, I mean, I don't disagree with any of that stuff. What I find alarming / impressive / perplexing / concerning is that you're looking at what amounts to a 25% change in valuation in the last 6 weeks.
Yeah. Yeah.
In a massive asset class.
Yeah.
And it basically straight up, with the exception, I guess, of that one meaningful down day.
Yeah. There's a little wiggle here.
There's
on
one
October 9th.
moment.
Yeah.
I mean, the crazy thing is, because again, it's antithetical to my don't think and buy the Mag 7 routine. Like, I'm so tempted to short this, and at the same time, I'm so glad I haven't.
Yeah. I mean, it sort of goes back to what we said yesterday. And Thomas, I'd love your thoughts on this gold chart and what there is to do with it. I mean, obviously, the don't think argument is the thing's going up, buy it. Don't worry about that it's expensive. Just buy it.
Up goes up.
I'm still of the mind that I don't want to re-enter it. I mean, obviously, I've been long most of this year, but I don't want to re-enter it here. It feels crazy and frothy, and I would short it, but I need a downtick. I need something that looks like a price action signal of a top. I'm happy I didn't jump in short yesterday, because I would be annoyed by what's going on today. So what do you do here? Anything?
I mean, this is one that's it is tempting to short, but you could also said that a few days ago, and
exactly.
You'd
say that any time in the last month and a half, and you would have been
right
unpleasantly treated.
I got out of my long gold last Friday because I thought, all right, it's made its move. I have a good profit on the trade. I was thinking about rolling, but my thought is like, it's run pretty far. It's due for a correction, but that kind of thinking is really, this example is how that kind of thinking is. You're fighting what the market is giving you, and
you're trying to be smarter than the market, which is typically a doomed proposition.
Right.
Yeah.
Right. And on the other hand, it's also tempting to get long it now, because you look at, like you said, the past month and a half, but it's also scary to get long at this point, because at some point it's going to come due that, you do have a correction, and it's going to be driven by profit taking. It's probably not going to be driven by a change in whatever's been driving the price higher for the past 2 months, because that's been, a lot of this buying is done on a longer term thesis of people that buy and hold gold, and it's done on these fiscal deficits are rising, not only in the United States, but in Europe, because
everywhere.
they have to bolster defense spending because of this whole Ukraine, Russia thing. It's been driven by central banks buying, because while the official data shows that central banks aren't buying that much, it's hard to track all of that, because the World Gold Council is pretty much the only one that gives out that information, because it's very hard to track all of these physical flows and everything, because there's not centralized exchanges and marketplaces that track all of this and publish the data. So they outsource, the World Gold Council outsources to a firm, I forgot what it's called, Metals Focus or something. And they put out data that is based on unofficial data pretty much. So what they are doing is putting out a number that is essentially an estimate. It's not official data like, a central bank reports their balance sheets or anything. Some of it is based on that, but it's really, you have to take them at their word for it. And what it shows is central banks, this is the unofficial data, is that they're buying aggressively this year. I mean, we've seen that in the first half of the year with the PBOC. They were buying. They're still buying, but it's a slower pace now. But it makes sense, right? All these, after this trade war, after Trump got in, all of these countries want to diversify their balance sheets away from the US dollar. There's only so many assets that you can do that with, given the amount of capital that, you have to allocate out. So, gold is one of the natural places. It also appears that silver is another. And I mean, that's what we're seeing in both. So shorts are getting squeezed. The cost to hold shorts is going even higher. So you're less incentivized. Even at these high levels, you have to pay more to get into that short position. So, it's really, you have to take a really big risk position to get short these metals right now. And we've seen that in silver. For instance, the London. London already had a reduced supply because for some reason the past couple months, India has been buying a lot from London instead of Shanghai and other places. And that has driven up the cost to borrow in London. It's opened up, a wider spread where London prices are up here and, the US price is lower. So what people are doing is buying silver in the US, physical, and moving it to London. And that's creating, this arbitrage window. Those always close because the arbitrageurs do what they do, and that eventually closes to where it's not profitable anymore once you factor in the cost of transport. So, I mean, silver is something I got out of earlier this week. I held it a bit longer than gold, profited pretty well on both trades. But now I'm also at the point on gold where I'm like, do I short this or do I get long? Because the IV is very high in both products to where you can set up a trade that looks really nice, risk to reward, POP, everything like that. But it's kind of just putting me in this state of paralyzation where I'm a little, it's going to keep moving one way or the other. I don't see it consolidating right here and building out a range. This is a really extended run. It either has to keep going or it has to hit a point where it really pulls back. So if you're going to short one, gold or silver, you have to consider there's less liquidity in silver. So if the rug gets pulled out here, which one is more likely to drop faster? I think that's probably silver because it's a less liquid market. Liquid enough for a retail trader. Liquid enough for a retail trader. I'm talking about big traders, so if anyone wants to get short and they're convicted in their views, I mean, silver might be the better option.
Yeah, I mean, you sort of have to look at the risk sentiment component. Also, silver tends to be a little bit more sensitive to risk. So if we think that stock markets are finally rolling over, this is going to be a more painful unwinding. And there's going to be additional downside pressure here where it wouldn't exist in gold. I want to highlight the point that you just made. Something that I've been reading very avidly here. There's a great book on U.S. economic warfare called Choke Points by Edward Fishman, who's a former administration official in the economic warfare realm. And so he had a front row seat to a lot of this stuff. And it's a very, very interesting book. And what's interesting in particular is this idea that it's not necessary, like that what this trade war does is not so much negative for the US dollar as such and for US markets and the use of the dollar in financing commerce and all of this. It's that if the US and China don't get along and you're a third country, you have to be able to do business with both. So if ultimately the US and China diverge and have to operate on different systems and different rails for payments, for transaction clearing, all of that, then if you're Brazil, South Africa, any European country, then you need to be able to operate in two different economic spheres at the same time. And the way to do that would be to start to move capital into a third asset until that kind of a system is born and you sort of know where you're going. So it's not so much that people are jettisoning the dollar. We can very clearly see that they're not, as a matter of fact. Because since July, the dollar hasn't made a new low. So, and the trend is higher. So you see this rip in gold, and basically everything you've seen of this rip since about here, all of this run up in silver from July and onward, which is obviously a massive move, similar to what we see in gold. Here's gold, here's July. So all of this rip from late August onward has happened at the same time that the dollar has not weakened. And so the idea that this is some sort of a debasement thing about the dollar is just wrong. It's just wrong. Because that's not what's going on.
You're suggesting the metal thing is a neutral position in the unresolved trade war between China and the U.S.
Yes. It is capital saying
that it's a reflection of sentiment on the intensity of the trade war.
Yes. And the idea that what may happen at the end of this thing is the U.S. and China just put up barriers and tell each other that they've divorced. And if you're a third country, you've got to be able to work in two spheres of influence separately. And to do that, you need a third asset that can move between those systems. And
you're
that
saying
asset is gold.
Metal for that. What about crypto? Wouldn't that be a crypto argument as well?
Doesn't seem like it, because it doesn't seem like there is any appetite to say that crypto and gold play the same role here. I would argue the reason for that is because China seems to be, in its kind of very aggressive buying of gold, seems to be, and silver, but mostly gold, seems to be attempting to say, look, we can't back the yuan with the kind of financial depth that the U.S. can back the dollar with. We can't back the yuan with the kind of liquid markets, sophisticated assets, deep, endless liquidity. We just don't have it like that. But what we can do is we can say, listen, all of the transactional flows that pass through our clearing, as opposed to, let's say, SWIFT or CHIPS, the US dollar rails. All of the stuff that's done on our rails will be backed by gold. The currency won't be as such. But the transactional volume, yes, it's a smaller number. And in doing that, you sort of entice people onto the system by saying, look, we know the yuan is not internationally convertible, and so people don't want to use our rails because they don't want to end up sitting there with a big bag of yuan that they can't do anything with. But here, we will commit to you that if you have a big bag of yuan as a consequence of transacting on our systems, like, for example, Russia does now, right? Russia perpetually sits with a big bag of yuan now. We will commit to give you gold for your bag of yuan, which if you really wanted, you could then go back into the dollar sphere and use. So, and Bitcoin is obviously not a thing that they've done that with. Bitcoin is not something that China is accumulating in size to say, we're going to backstop our system with this.
So then would you go so far as to say, let's assume your assertion that the precious metals rally is an indication of a measure of the heat of the sentiment on the China-US trade war?
Yeah.
Let's also then assume that this is an indictment of crypto's assertion that it is a third rail in the global currency markets.
Oh, yeah.
Because look at the chart.
Yeah, I mean, this gold, this is not.
Bitcoin is behaving straight risk on, risk off, old school, just straight speculative risk off.
Obviously, yes. You can see it with the naked eye. This is not gold.
Nothing to do with currency, third rail, none of that jazz.
No. This is essentially, and by the way, it's worse than risk. Because if you look at this and you go, okay, what's happened here, let's say since the last time this had a meaningful rally, right? This had a meaningful rally into a peak in basically, let's call it mid-July.
No, but I mean, I would say that April to July correlates to the dollar's crash.
Well, sort of. It more so correlates, I would say, to what stocks were doing, right? Because stocks had this same up and down. They started
but the dollar went down catastrophically. The year.
Catastrophically.
At the same time,
but the dollar was already going down here.
Yeah.
And this was going down with it.
Yeah.
Because this was just risk off. This was going down with stocks. This was going up with stocks. Until we get to July, by the way, where the dollar stops falling.
Is this just a NASDAQ derivative now?
It starts to look like it, only worse, because the NASDAQ has performed better.
And the NASDAQ has enterprises that have discounted cash flow they have real value. You may be overvalued, but there's a real underlying business inside the NASDAQ index.
Yeah, I mean, let's consider, right? This is July 14th. Since then, this has gone sideways or down. There was a little bit of an overshoot here, but it lasted, all of 48 hours? So we have from July 14th, hold that date in your mind, sideways or down. Now, NASDAQ, obviously, we don't need to get too cute. Here is July 14th right there. So NASDAQ over the same period of time has gone up and up and up, clearly. It's struggling the past couple days, but risk has outperformed Bitcoin. Full stop. Let's take another step here. Here's the dollar. Where's the bottom in the dollar? Oh, look. Here's July 14th right here. Coming off the bottom. The sort of dynamics we've seen in Bitcoin, sideways or down, have basically mirrored the dynamics in the dollar, sideways or up. And so it's not even risk at this point. It's just a straight up anti-dollar that isn't working because the dollar isn't falling.
Other than if you start to then that's why, listen, I think we kind of all know this. I don't know if we all know this. The thing with Bitcoin is it's always looking for the next story to rationalize its existence.
Yes.
So it's a fiat currency alternative. It's the blockchain store, vault of all data and all title transfer and all commercial transactions. It's currency bypass, whatever. The most recent version of the sort of attempt to justify its existence seems to be this Musk rhetoric in the past few days that Bitcoin is collateralized by electricity.
Hilarious.
Which just strikes me as evidence of the fact that that Bitcoin is a worthless pile of dog do.
Yeah. You
have to constantly come up with a new explanation for what its value is.
As the great Ace Ventura said, fiction can be fun, but I find the reference section much more enlightening.
If we're no longer a currency alternative and we're not a commercial transaction, interface, the digital commercial transaction interface of the future.
Mm-hmm.
And now suddenly the Bitcoin bulls are like, no, it's just a normal currency collateralized by energy.
I guess what
sounds. Is there a reason? Do you have are you willing to short it? Just to go.
I would say yes, because now what there is a wonderful way to do it through the ETFs. I still need a price signal. So for me,
that sell-off doesn't get you interested. What do you need?
This is it right here. So I'm looking at this here, and I go, okay, here's the range bottom. Close under it. Close under it, and it's good night. And the vehicle for me would be IBIT, which you can see is sitting on this same bottom here. Boom. And if you were to try to trade this, let's say, I don't know, let's say all the way down back to like 42, 43, right? 43, let's say, is your rough bottom on this thing, most recently. That's a long ways down. So let's say we go typical Tasty methodology, in this case a little bit less than 45, let's go 43 days out, and let's keep this very, very simple here. We're going to go long a put spread from here, let's say to the next big pocket of liquidity looks to be at 54. You can see that here. I like to look at this volume column to make sure I get filled on things. And that also kind of tells me where the market is clustering its interest. So, I mean, max loss 175, max profit 425. That's incredible risk reward. I mean, that's excellent. And you lock that in with a probability of profit of 43%. So we were saying on the show yesterday, you need to have risk reward of 3 to 1 to be making money being right 30% of the time. Here you have 2.4 to 1 risk reward, and chances are 43% it works. If we extend out, can go out all the way out to 50, risk reward still amazing, better than 2 to 1. And if we wanted to go all the way to that bottom that we were just talking about, it's not that liquid, still solid. I mean, lose 300 to make 1,200. Excellent. Not as liquid, so I might restrict it to somewhere here. And obviously, these are indicative volume numbers. This is this close now. So if you take out this bottom here, down to 50 would be to about here, which is a nice level to be aiming for. So I am very into this idea. I just need a price signal.
And you
even
don't,
on the 4 hour, it can't clear.
And you don't believe Bitcoin is a store of value, right?
No.
Right.
Nope.
And I'm not sure how people are still hung up on that. I've not really seen a lot of evidence for that. You know, so if the market sells off even more, I think Bitcoin's going to go lower. I see it more as a speculative risk type asset.
Let's be clear too. What's a store of value, right? Like a leg of lamb is a store of value until it spoils, right? So anything can be a store of some value as long as somebody is willing to give you value for it. Is Bitcoin a good store of value? No.
I mean, Thomas, I just saw the Musk the Musk rhetoric this week that now it's that Bitcoin is a currency backed by energy is the newest spiel. And to me, that was the biggest red flag yet. That there's this sort of rotation of efforts to create a justifying narrative, and that it changes so dramatically and so quickly, sort of makes me think this is all a bunch of BS, you know?
Well, yeah, and you know, if you're buying Bitcoin or if you're buying gold, and some people do buy gold as a real store of value, as in an oh shit situation happens, whereas there's a world war or economic collapse or something like that. If that happens, you're getting energy disruptions, you're getting internet outages. If you need food and you have Bitcoin, you're not going to find many neighbors or even be able to maybe use your phone to trade your Bitcoin for food. If you have gold, you can melt that down, divvy it out, and now you can pay your neighbors, pay whoever to get food, and here's my gold. You know, you can't do that in Bitcoin. And that's an extreme example. But I think that speaks to, and this is thousands and thousands of years that gold has proven that it holds its value through wars, through peacetime, through all of that.
Well, because it's a very natural kind of, to your point, like you can melt it down, you can divide it, it doesn't tarnish, it doesn't go bad at the bottom of the ocean. It's the kind of thing that's, if you needed a sort of avatar for value, it's a really durable avatar just in terms of what it is.
I tell my wife, you need the 3 G's if the world is going to collapse. You need gold, guns, and a garden.
Yes. Ladies and gentlemen, patent pending Thomas Westwater. That's fantastic.
Yeah.
Yes. Yes. I would think that, and sort of knowing what I know about my immediate ancestors coming and going amid the Russian Revolution, World War II, and sort of various calamities in the Tsarist and then Soviet sphere, of which I come, it's not even just gold, it's jewelry.
Which is
because if something is already subdivided and in kind of consumable chunks, that's the barter mechanism that works really, really well, because a gold bar, of course, is difficult to shave down.
And
so
the bulk of gold held by regular people is via jewelry. Most people don't have gold bars stored away. A lot of people do, but most people have jewelry. That's what the big portion of weight in gold held by people is via jewelry.
Yeah. Yeah. And I mean, these are firsthand accounts. I mean, grandparents and great grandparents telling stories of how they survived World War II amid a collapse in any kind of currency, and it's barter for jewelry. And then, of course, if you really are betting on the end of the world, then betting on the continuity of markets to be liquid and to fill you on things is probably not the bet to make. You have to sort of believe in if you're going to be betting on the end of the world, you probably don't want to be betting on electronic filling of orders. And so you're looking at physical things and canned food, a garden, and ammo as kind of assets of note.
I mean, I would just like to point out the market is just off of all-time highs.
Yes.
Technology is the most profoundly compelling and creative it has ever been in the history.
No question.
And I think we're much more likely to be in an era of extreme abundance.
I completely agree.
And in one where we need a gold, guns, and a garden.
I completely agree.
I'm perfectly happy to have some gold, a gun, and a garden. Nothing against it. I particularly like the garden. But the garden for me is more of a source of pleasure than it is a security infrastructure for the apocalypse.
I absolutely agree with the idea that investing with a mind on the apocalypse is probably not the way to go. It's just not a good investment thesis.
And for me, my worldview is one that is fundamentally optimistic and, abundant. I just think we're in an era of abundance, and I think that abundance is what is around us, regardless of these price levels from one day to the next. I agree that the market's a little squirrely, whatever. But I don't think that, I think that maybe not from a trading standpoint, but from an investing standpoint, this thing keeps getting kicked around a little bit. I think it's a great time to get into the AI, buy Amazon, get some of these stocks and just tuck them away.
So looking at what the mags have been doing here, and I agree with that idea. I mean, as we know from our
trading, from a trading perspective,
right?
I like your Bitcoin trade. We kind of went over that, but from just in terms of asset accumulation, I mean, this is a sort of cliche, but it's this old Warren Buffett thing where, stocks
become nauseatingly
when they go
bullish
lower
on this idea.
Buy them when they go on sale. Like,
yeah,
what are you doing? Like, you want to buy them not when they're buy low, sell high. I mean, I can list all the cliches, but
sure.
I think that this is a kind of a moment to remind yourself of that. Now, I don't see that the decline in the Mag 7 is that great that I'm not excited about anything, relatively speaking.
NVIDIA was still up.
Yeah. I just think Amazon particularly is interesting here for all the reasons I've said.
Yeah. I mean, sort of philosophically, I completely agree with that thinking that what we're looking for here, I mean, what I'm looking for here being bearish is not the end of civilization. I'm looking for a frothy market to have a pullback. And a sizable one, something that's maybe reminiscent of the .com sell-off, something that's maybe reminiscent of previous kind of stage one technology revolution washouts. We've seen it in railroads, we've seen it in telecoms, we've seen it in all kinds of things. The history of these things is very clear-cut. So I'm looking for that. I am not looking for civilizational collapse. So when this thing is on meaningful discount, you will not hear the end of my endless bullishness. I will be buying everything. Speaking of Amazon, kind of leaking lower a little, but not
You're
really
getting a breakdown in the Mag 7, which is kind of what you'd like to see.
Yeah, not a meaningful one. No, I mean, it's certainly not lost on me that a lot of these things start to look like the Nasdaq, where you have a kind of range and then a big wash down on Friday and then stasis. So no recovery. I mean, Nasdaq looks like this. We can look at the ETF version just to keep things consistent, and I mean, you can see it here. Here's the washout. You try to rally, it doesn't work. Again, and you're holding at the underside of whatever this range was. And all of these names, to some extent, start to look similar. I mean, here's Tesla. One might argue it's holding up a little bit better. But a lot of these look the same. And the overall mags here, I mean, this is about as NASDAQ-ish as you might suspect. Range, washout, digestion.
Tesla reports Wednesday, Amazon Thursday.
I didn't really see any big surprises on the calendar today. I mean, everybody that reported, is CSX out yet?
You had TSM today. They had a really good report. CSX, yeah, today is CSX. I'm not sure. I think they're after the bell.
They were after the bell. Let's see if CSX has reported, because that's, I mean, obviously there's tech names and then there's CSX. CSX is a bit of a different animal. CSX has reported. It's reported in line with expectations. 44 cents a share on earnings. That's exactly in line with consensus. A little bit down from the prior of 46 cents a share on revenue of 3.59 billion. A little bit lighter versus consensus. That was 3.61. No big changes here, seemingly. And CSX looks like it was up on the day going into this. See if there's anything after hours here. Anything? Yeah, so looks like CSX broadly liked it.
Tomorrow ends with American Express for the week. They're interesting in, you look at if charge-offs are increasing. But consider American Express typically has higher credit rating portfolio of consumers versus other cards. So if you see an increase in charge-offs there, a little concerning for middle class and upper middle class, showing some cracks in there perhaps.
And with that, since we don't have any economic data to watch, overtime is out of time. We're going to be right back here with macro money, so don't go anywhere. We're going to talk more about what these Fed speakers said today and why it was so weird that the markets didn't like it and what that means. But we're here Monday through Thursday, so overtime will be back next week for this conversation to continue. Brace yourself for the weekend if that's the next time you see us, because who knows what might happen over these next 24 hours. In the meantime, that's Dylan Ratigan in Milan, Thomas Westwater in Chicago. I'm Ilias Spivak in San Francisco. Sit right there. I'll be right back.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like people would say like going to college these days, I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
When you define risk, you set a limit on how much you could lose if the trade goes bad. If you have a small account, you might not be so interested in selling naked options. You'd use up much more buying power, and the risk is undefined. Defining risk, though, controls how much you can lose if the trade goes sour, and it gives you back some of that sweet, sweet buying power. We can define risk by combining options into certain strategies. The short put vertical spread is the simplest one. Selling this put sets your max profit with the credit, and the long put at the lower strike blocks off the risk where you want it. And if you're more neutral than this, you can throw on a vertical call spread to make it an iron condor. The only downside to defining a risk is that it lowers both your max profit and your probability of profit. That little compromise might mean you rest easier though, and a good night's sleep is priceless. So see, we can define risk when we use more than one option at a time. Pretty simple.
What a day it was in these markets. A fascinating display from the price action across major assets here, and one that no doubt we are going to be talking about for quite some time to come. We're going to unpack it all here on Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive, and once we look at these numbers, it would seem that what happened today was certainly unpleasant, but not any kind of catastrophic. But the circumstances that led to where we ended up today seem to lend credence to this idea that we are once again in the midst of regime change for these financial markets. And that's what we've been talking about all week this week. We, of course, don't have economic data of substance that is coming out because there's still this U.S. government shutdown that has taken the key economic data off the board here. And instead, we're just watching the price action and what it seems to imply as we get a sense for what these markets are now thinking. And so it's very, very interesting indeed to have what happened today occur. So in that context, so let's start here first and foremost with a look at the way that these markets performed today, and from there we'll try and get a sense of what exactly all of it means. Here is sort of the only indicator that we really have, then the price action itself. And on its basis, we end up with a story today that's obviously a risk-off exercise. I mean, that much is clear. Gold with another massive rally, 3.07%. Note that the dollar here is a little bit weaker. Euro up almost 0.5%, yen up a little bit more than 0.5%. The risk aversion here, very clear cut, even to crude oil and Bitcoin. They're down with stocks today. S&P off 0.8, almost 0.9%. NASDAQ down a little bit over 0.5%. Bonds up as rates slide across the curve. So very kind of straightforward, very obvious risk-off day, but for the dollar, which has a little bit of a downward wiggle. And that's where things get the most interesting. So here's the S&P 500, and this is really where we get this idea of regime change. So on the way up from these Liberation Day lows back in early April, we were clearly in some kind of a buy the dip mode. And really any kind of a bullish market environment seems necessarily sort of driven by this level of thinking. So if it is in fact a bull market, well, then you would expect the markets to kind of search out ways to make the news either irrelevant or supportive. And that's what we've seen. Every meaningful dip on the way higher here has been bought. And in between these dips, there is a slow, steady, but concerted effort to get further to the top side. And what's happened here since Friday seems to be something else entirely. And really, the past several days speak to this idea with great effect, especially today. But let's take a look here at what this chart seems to be showing us here. And what we find, zooming in, is here was, of course, Friday's massive washout right there. And since then, where have we gone? Nowhere. Every rally has been sold. So we end up right here where we try to bounce again and again. And every time that we get anywhere within the bounds of this dividing line marked by this consolidation range at the top, we get rejected. Now, what makes this particularly interesting is that, first of all, this is the same story across indexes, but more importantly, this sell-off ostensibly was about U.S.-China trade war escalation. It was triggered by the president going on Truth Social and throwing some bombs at China saying, we're going to do a 100% tariff on you because of your export controls on rare earths. And that, of course, follows a move by the administration itself to essentially say, okay, we had tariffs on Chinese entities and we had restrictions on selling things to Chinese entities. We are going to now expand these and plug essentially a policy gap to say this extends to all enterprises that are at least 50% owned by China. And that obviously makes for a much larger amount of entities that are being hampered by U.S. barriers. And so China responded with, okay, everybody that wants to export rare earths out of China now needs a bespoke license. So we're going to take this on a case-by-case basis and issue these licenses, which essentially means there is a very easy non-tariff barrier here where if you don't want to ship certain things to certain places, you just don't grant a license. So the president went back and threatened a 100% tariff as of November 1st. Markets freaked out. Okay, sure. Has that story become worse since? No. In fact, it's become a little bit better. Secretary of the Treasury, Scott Bessent, has been out there saying, ho, 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 we're going to get a deal. Trump and Xi are going to meet still on the sidelines of the APEC conference later this month. I know Trump said that the meeting was off, but it's not off, it's on. We're going to walk this thing back. Even the president has come out and said, I think Xi just had a bad moment. I think we're going to get a deal here. Everything is going to be fine. The U.S. Trade Representative, Jamieson Greer, coming out saying, hey, we're going to get a deal here. The meeting is going to happen later this month. Nobody freak out. And yet, we can't come back off this freak out here. And every time we do, we get stuck. Moreover, it isn't the names you would expect to be most hampered by a trade war that are front and center for the weakness. We have here NASDAQ, the Russell, and the S&P. And of course, we can see the NASDAQ is underperforming since the open on Friday, so since before the sell-off starts. The opening on the day of. NASDAQ is down 2.12%. S&P is down a little bit less than 1.9. Russell is only down 0.5%. And that's something that happens today. Before today, Russell was actually up net of this sell-off. So this was Friday. We can see here, so going into Friday, this was the sell-off. Since then, Russell was actually up as of 2 days ago. But it's the NASDAQ on the losing end, which is an interesting sort of configuration for an environment where you'd think, oh, well, if there is a trade war, that's a risk to economic growth. That risk to economic growth should hurt the companies and the stocks of companies that are the most exposed to economic growth type of concerns. Companies that aren't cash rich, companies that are cyclically sensitive. That's the Russell. Whereas the NASDAQ is being powered by very cash rich, very large market cap, very deep pocketed tech names, which we saw in spades during COVID, don't particularly care even if the whole global economy stops. Because that's not how they make their money. So, and of course, to the extent that AI hopium is a huge sort of catalyst for the most recent run in NASDAQ and in tech names, it doesn't even depend on things happening now, so much as it is anticipating what will happen later. Once all of this building out of AI infrastructure actually turns into deployment and ROI. So it's very interesting that in the teeth of this sell-off, it's the NASDAQ that's getting squeezed the most. Almost as if the trade war isn't so much a catalyst for its own sake, it's a negative headline and an excuse for the markets to be selling in places where speculative exposure is most concentrated. Not so much where there's the greatest sensitivity to a trade war per se, but where the most speculative dollars sit. And that's, of course, in tech and the NASDAQ. So it would seem then from this level of thinking that what's going on here isn't really about a trade war. It's about de-risking portfolios. And that seems to be the regime change that's on display here. What makes this all the more fascinating is that the sell-off today, this rebound today in risk aversion that we see, this sell-off here, it starts not at the beginning of the day. Obviously, we were kind of drifting higher, but there is a specific catalyst here this time. And that catalyst, incredibly, comes from Fed speak and not of the hawkish variety. Fed Governor Christopher Waller was on the wires today. He's been one of the main policymakers calling for rate cuts. He was one of the two dissents in July. He was the first dissent in June, calling not for holding rates, but for cutting them. Not surprisingly, he was very dovish here. He is more incrementalist than Stephen Mirren. He's saying that we don't want to make a policy mistake, so we're moving in careful 25 basis point increments. But needless to say, the markets took these comments very seriously because he's one of the leading contenders to succeed Powell as Fed chair next year. Bowman is obviously also on that list. Kevin Hassett's on that list. Kevin Warsh is on that list. And for what it's worth, betting markets, Polymarket and Kalshi, they're saying that Hassett is the likelier candidate. Waller is somewhere third in the running, somewhere second, depending where you look. But clearly the markets think Waller is a stronger possibility than do the betting markets, because they responded very acutely to what he said. And what's amazing here is that they responded negatively because up until this point, again, regime change, we've been looking at dovish things being a risk-on catalyst, not a risk-off catalyst. So take a look at what Powell said, or what Waller said here. Fed interview process is going well. Had a great interview for chair. Cutting rates is the thing to do. Private sector data is consistently telling us a story of a weak labor market. Estimates for inflation are at about 2.5%, and nothing seems to jump. In other words, don't worry about inflation. The Beige Book is telling us the economy is not rosy and not booming. We may see weaker GDP at the end of this year. The neutral rate is about 100 to 125 basis points from here. In other words, we've got about 100 basis points just to get to neutral, let's say. And if you look at the Fed's most recent forecasting, here's the September SEP. There's 3 rate cuts here for 2025, so that's 75 basis points. A 4th one for next year, a 5th one for 2027. So in Waller's kind of frame of reference, this projection takes us to neutral over the course of next year and 2027 at this pace. But clearly the markets thought this was more dovish than that. Because if we look now, we see that for the first time in a while, in over a week, we have the probability on the board here, slight though it is, that later this month, we're not going to get just a 25 basis point cut. We're going to get a 50 basis point cut. And the likelihood there is about 5% But it gets spicier. Looking at December, the likelihood that it's a 25 basis point cut is actually down versus yesterday. And the reason it's down is because there is a probability increasingly, almost 20% in fact, that we're going to get a 50 basis point cut at either October's meeting, which would make this the 25 basis point move after a 50, or that December is the 50 basis point cut. And that's how we end up here. It is a big deal relative to recent expectations that we are now looking at about a 20% chance, almost. Let's call it about 18%, 17, give or take. That one of these meetings, either this month or next month, will be a 50 basis point cut. And of course, there's a slight less than 1% chance that both of them are going to be a 50 basis point cut, but that doesn't look like it's very serious here. But it is on the board now, which is an interesting development. So clearly whatever happened here was dovish. Clearly the markets responded, and clearly it was Waller they responded to because the timing seems to line up. What's interesting is that stocks sold off on this. Here's what happened with policy expectations. The markets are almost fully priced in for 3 rate cuts next year. We've got a net of 41 basis points on the board here, net of the 25 that we've already seen cut in September. So that means that we're basically a given. We're basically a shoo-in for 3 cuts, at least for this year. 41 basis points out of 50 more after September is an 82% chance that we're going to get both of these cuts. And of course, we can see from the specific sort of date-adjusted numbers that we just looked at, this and this, that it's even more than this would imply just looking at the contracts in their raw form. We have through the end of next year, in fact, priced in pretty much the midpoint for what Waller is talking about. If Waller says that we are 100 to 125 basis points away from the neutral level, then 114 basis points is right in the middle. And that's about what the markets are calling for. They're calling basically to get to neutral by the end of next year in Waller terms. What's more interesting yet is that the price action here seems to suggest that the markets now see rate cuts as evidence of bad things, not good things. Note here was the sell-off from the beginning of the year when the tariff scares begin. This is about the range top and bottom there at the beginning of the year. Right there. Here's the breakdown. That's the tariff scare. Notice that lines up with the beginning of a dovish shift in Fed policy expectations. Here's where that bottoms out with Liberation Day and the 90-day pause on tariffs. Notice that rebound runs out of steam here, just as you get back to where the sell-off started. That's right there. And everything since then, right up until these most recent peaks, has been, if it's more dovish, it is good for sentiment. But look at what's going on now. Once we get to this peak after September's rate cut, this is the cut and a little bit more dovish speculation, but not as much as the markets thought. And this is where the markets peak. So as we get more dovish now, markets actually go down, seemingly suggesting that we are in fact in some kind of a regime change, because what was good news from here to here now seems to be bad news. Now rate cuts are happening for the wrong reasons, one would surmise. Perhaps this is recession risk. Perhaps all this talk about a weakness in the labor market has people thinking, oh, well, there's an economic downturn that we need to be worried about. Looking at the dollar here, we can see, even though it's a little bit weaker today, as things were getting more dovish in this outlook, the thrust for the dollar has been up, suggesting that it's still something of a risk haven asset in this environment, today's price action notwithstanding. The economic calendar for the remainder of the week is quiet, to say the least. There's one more bit of Fed speak tomorrow. Otherwise, things are relatively quiet. The earnings front here today really telling us the risk-off story, not because we have a situation where things missed, and incidentally, we did have the results from CSX. They actually came out exactly in line with expectations. I just took the screenshot before they were out. It was exactly 0.44 for the outcome, so 44 cents a share. Right on the screws here, but nevertheless, everything down. Each one of these companies surprised to the top side, or in the case of CSX, met expectations, down across the board, because it's a risk-off day and these things don't matter. Earnings just don't matter when there is a sentiment extreme like this. And what we end up with, of course, is still this sense, earnings-wise, that what we're looking at is an environment where the markets are rewarding positive outcomes to a much less of an extent than they have historically. Meanwhile, they're punishing negative outcomes more so than they have historically. And so again, you get this clear sense that what you are looking at is a sentiment shift, a kind of regime shift in what is the market's default. So absent news from April until these most recent tops, the name of the game has been whatever else might be going on, buy. Buy the dip. And what seems to be going on now is the inverse of that. Wherever else is going on, the default, sell the rip. And so positioning-wise, I am still long the dollar, today's pullback notwithstanding. Still have this put vertical exposure in the NASDAQ and in the S&P. Obviously, You can see today that worked. They were down. Still have this exposure to the bonds. I'm glad I loaded up. It seems like we're going into a more dovish direction, so I'm still long the long end here. And still short crude oil, which seems to be now falling amidst these more growthy-looking concerns, and that continues to work. And that's Macro Money for today. As ever, we are here Monday through Thursday, so this is the last show of this week. We'll be back next Monday to do all of this again. I'm also writing for the News and Insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Happy trading.